Hello, lady apes and gentlemen apes. Welcome back. I've got a completely new setup, so I've been experiencing some technical difficulties. Can everybody hear me okay? I have borrowed Rocky's mic to improve the viewing and listening experience. I've also moved, so I'm not in the same apartment I was for all of the previous live streams. My lovely mum wasn't very well, so she was staying in Edinburgh for a while. She stayed in my place, and I moved into somewhere I formerly had on Airbnb. And as everyone knows, the arse fell out of that. So when she was back in Edinburgh getting treatment, I was up the road. But she's now completed her stuff in Edinburgh. Now she's way back up the road to the north of Scotland, and I'm back at my place. So I'm back in my house, and everything's a whole lot more comfortable. But there was some technical issues getting started. Sounds good. Excellent. Thanks very much, chat. I see how so many people in chat. Thanks very much. There was 121 of you at one point, and then I turned the camera on, and we dropped by 30%. What does that remind you of? Can't hear you, says Stephen. Well, I'll tell you what, I'll turn up my volume. Perhaps you turn up your volume a little bit too, and we might make it there together. So how do I get the volume up on this thing? I think I use this ridiculously awesome touch screen. So that should be louder. I could make it even louder still, look. And then, oh, does that loud enough? Am I really loud now? This is a different kind of mic, you know, it's like the Joe Rogan ones. I have to actually speak into the thing, and I'm not used to having something like that. Was it good, aye? Excellent, I've just got feedback that it's quite good, so louder please. Well, I'll try and make it even louder, sure, why not? That's this. Where is this? So I can hear Rocky's here with me in a different room, and I can hear his volume from his phone. So surely to goodness we're in the right sort of place now. Okay, right, so we've got close. If I'm too loud, feel free to turn your speakers down. Is it me or is GME recovering? I think it might just be it likes my dulcet tones. But we know that terming this as a recovery is just speaking dramatically, because we predicted all of this, and it's not a recovery. We're still in an uptrend. Whoa, Jamie, we're still in an uptrend, but everybody's and their mum's saying that we've broken some fucking wedge, right? Trust me, there was no valid wedge, okay? There was no valid wedge. Other technical analysts, some of whom are very good, and I respect a lot, have been talking about this wedge. Which they've managed to draw from this structure, and I understand, right? Pattern trading is not it's not an exact science. That's putting it lightly. But whoops, look at me dragging my charts all over the place. But pattern trading isn't an exact science, and we can all see patterns everywhere, you know. But some of them reflect the structural workings of the market. Some of them create and represent the structure of price action. And others, sure, they just look like that on the charts, but the psychology behind the moves that create that pattern, that shape on the charts, these particular patterns that people were talking about, to me didn't represent the psychology of what was happening in the market. What's much more representative is this quite obvious symmetrical triangle that we've got on the picture here, the charts here. Why do I keep dragging that? It's because I'm on the Streamlabs thing instead of this, so I'll go up and get that up. Here I am on the actual charts now, and I've still got the if I drag this to the side, sorry, bear with me, get the screen set up, I can then see the chat at the same time. So I wanted to keep that more interactive, get the episodes more interactive. And 15-minute chart. So anyway, yeah, I wanted to keep it on this sort of wider view, just so that people would kind of get on this, so to communicate how I look at things, which is technical analysis allows you to have some understanding of the range of price action, and so when you're within that range, there's really no need to panic. Hence the thumbnail today. nor is there any desperate need to get overly excited about AMC yet. So the main message of today, the main message that I'll always put out there is relax, okay? Relax. And you can trade in quite a relaxed fashion by entering at support as opposed to resistance, using a stop loss if that's how you like to trade. Normally trading, I would always recommend a stop loss. But with investing, that's not quite the same. There's not quite the same need for that sort of thing. So we're in a range, and it's nothing to panic about. And I'm sure, like, there's a couple of people, there's two particular people that I really respect who do TA on GME, including Rocky Outcrop. One of them is really popular on the main subreddits and is very, very good. But he too was calling this a wedge, which it just simply isn't. It's a symmetrical triangle. So anyway, this is why we've got this view. And we looked at it and we talked about it on Thursday. We were putting in a very positive structural framework for the price action with a series of higher lows, which is very, very positive. But we tempered our expectations with the knowledge that we're also putting in lower highs, as we can see here, all marked out with these lovely green circles. So lower lows, lower lows, lower highs. So a period of consolidation. And these periods of consolidation are either accumulation or distribution. We're able to determine which, in retrospect, when we look at the move out of that structural formation. And people would tell you at the minute that, hey, we've dropped out of this symmetrical triangle / wedge. It's not a wedge. And they'd say, that means that we's going down. Which is all perfectly fine and understandable and great. So we'll look at this pattern and we'll look at the measured move that would come from it based on Polkowski's pattern tradings. And he worked all these things out statistically. He even works out these things called measured moves, which is the expected move that you can get off this kind of 264 viewers. Holy shit. He works out the sort of expected move that we would see off the back of a structural break of a pattern such as this, or any of the ones that he's identified. And the ones that the one that we're working with, we're going to work with an ascending symmetrical triangle. We're not working with the wedge, right? So let's do that there. He predicts a move that would take you from the first low to the first high, or vice versa, same thing. Then you take this and you put it to the point where you broke down, and then you'd see, well, there's your measured move. That's the length of this triangle. You could expect to get 60% of this move, in which case you draw this on here. You'd measure out 100% of it is 101 bars, so super easy. We can get down to 60 of them, and that would take price action in around $100. So if this was a symmetrical triangle and we were broken out of it and we wanted to confirm that this was a breakout, then we'd look to horizontal levels of support and resistance. If we broke not only the pattern but also our previous support, then you might look to the next level of support, the next level of support, and ultimately you would be hoping to get a 60% move off this break. Now, do I think that's going to happen? No. And if you tuned in, well, I mean, if you've tuned in at any of my videos, but if you tuned in at the end of last week on Tuesday, or the start of last week, end of last week stream was Thursday, but if you tuned on Tuesday or Thursday, you'll have noticed that I didn't think that we were going to go for that full measured move. In fact, I didn't even really talk about the full measured move on the downside or the top side. I talked about reasonable steps that we'll take on the route to our next ultimate target, which I've identified with horizontal lines of support and resistance, these white horizontal lines you can see in the background. And I suggested that this was a long-term one here in around 120, and that here's another one at the top of this formation, our previous resistance at 200. Ultimately above there we're going up to 279. So these are the three numbers that people who've watched more than one stream, or the majority of one stream, will know that I've been mentioning. 120, 200, 279, right? And so if we're within those numbers, you don't need to panic. In fact, you might be excited, right? Because you're thinking, hey, I can get into GME at 120 if Jamie's right or thereabouts. And if you believe in the bullish thesis, then you're not worried because price action goes down. You're looking for a good entry, and you're not going to change your bullish thesis just because the price goes down, right? Prices go up and down all the time. So, before I get overly distracted talking shit, this is the measured move that we could expect if this pattern had actually broken down. Now, if this was a wedge, what would people have drawn? People would have drawn something like what, that? No. You see, I don't watch enough of other people's TA. Anyway, it's not a wedge, right? You can put it in different, we could definitely go at a different timeline. But I mean, it just confirms it as a symmetrical triangle. Anyway, not only is this a symmetrical triangle, this whole formation here, as you can see with this flagpole and this flag, is essentially a bull flag. And in a bull flag, you can expect, there's various types, 3 main types. You can expect either prices to fluctuate in a range, up and down, maintaining the same horizontal support and resistance. You could expect to see lower highs with lower lows, or higher lows with higher highs. But in a bull flag, the most powerful one, i.e. the one with the highest measured move to the upside, comes with lower highs and lower/higher lows. These are really important in this trend. This is the interesting line. And the accumulation line isn't strictly in a series of following the strict patterns of a symmetrical triangle. So while we were looking at this and hoping for some sort of short-term upside because we know the fundamentals, we were also aware of the fact that this could represent a sort of pattern where we could expect prices, if I just draw this line across, to come down, maybe to retest these levels. This level, as you can see, is on our horizontal support and resistance, which on a 4-hour timeline is our breakout zone, is where we've retested it. When we retested it, we put in what could be seen to be hidden bullish divergence. So we went up a little bit. But it's hidden bullish divergence, and then that's assuming this is a downtrend, so you're going to need to retest that. We put in this drop, price action on the RSI got lower, price didn't. So people might think, well, if this is a downtrend, that's bearish divergence. So the next upturn, we have to test it out. Oh, I got a donation. Thank you very much. Griffin! Legend. My alerts don't work, so I don't see if this comes up or not. So I have to keep an eye on the chat and then go to the thing, right? And I'm not sure why the alerts don't work. I've tried fixing that. It's a total head wreck. And I've got distracted. What was I talking about? Oh yeah, so there was potential bearish divergence, and so when the prices turn around at this point, which you would expect to do because there was a lot of bullish news at the same time, they didn't actually have the momentum to break our previous high, and here we go to come down and test it again. We discussed these things on Thursday, and we said that, well, we'll probably come down and test in and around this level, around 120, and I say probably, I meant hopefully, and hopefully because I believe it's going up, so the cheaper it gets, then the more I'm able to take orders. So if you were watching Rocky Outcrop stream yesterday, you'll see that I put all of the money I'd got from the channel. Now, it's not all that much. I was going to spend it on a microphone, but instead I got borrowed Rockies temporarily. So anyway, long story short, thanks Griffin. I'm going to forget about that. What was I talking about? I'm so distracted by the donation stuff. Yeah, so we were talking about the bearish divergence and how that would legally lead to a price coming down, how I believe the price is going up, and I wanted to get more GME. So I've put orders in. Yesterday I put orders in at around 140 to collect something there, because there's no guarantee I'm going to get what my entry price here, but I determined to add to my position regardless. So there was an order in here. There's an order in here around what I'm talking about. I'm way too zoomed out. I'll go into the 15 minutes so I can show you what I was saying. Yeah, so I put an order in around here at our previous support, which just because, my risk management allows for this. And then I put an order in at around, where was it? I'd have to get the portfolio, but I'm not going to do that on stream. And I put an order in around 133, right? I'll explain why in a second that I put the order at 133, and I put the majority of it at 120. I also put my own money there as well on top of what I got from YouTube so far, which isn't very much because I'd done particularly well in my other trading account over the last few days, trading Matic, which I can talk about if you'd like. Anyway, so I'm a professional trader and I live off my profits. I have to take profit in order to eat, but I'm not going to do that with GME. So when I trade other things and I've been incentivized to try harder recently, and it's worked out well. So I put more money on GME stuff. So these are the orders I put in. Why did I put in an order at 130 when I said that if we break 140, we're likely to go to, like I said, if we break 150, we're likely to go to 120. So why would I put in an order at 130? Well, my friends, you'll have also noticed that I was talking about the chance of potential hidden bullish divergence throughout this period of accumulation/distribution. And we all know that there's severe amounts of fuckabootery going on in the market. And people might say, Jimmy, I can see why you thought that maybe, but does the TA not suggest something else? Whoa, my God! $50 donation. Thank you, Luke. So just a little bit, right? Many people don't know who I am. I'm Jamie Curran. I work for State Street. They're a large investment bank. They've got in the top 5 of our assets under management, and they're the top for assets under custody. And part of the experience at working at State Street, I learned how to do TA. Then I learned how to use TA against the retail crowd. What to paint on the chart, what sort of emotions that we could put people through, which will shake them out of their position, cause the price to drop, allow us to get in at great entries, and then flip as soon as we get back to previous support or enter the previous pattern we're in. And that's why I'm good at this shit. And so when other people might be looking at this and they might call it a wedge, and it's debatable, right? I mean, it is debatable. Obviously, I've got my opinion. And then it breaks down. Often they'll think, oh shit, now we're in for maybe, negative implications. But what a lot of people don't know is that people like myself and Rocky and people that dress much smarter than us usually do in order to screw you, right? This was a huge chunk of our job. And don't assume that people that work at investment banks are somehow able to see things on the charts that normal human beings aren't. Oh my God, I got another donation. Amazing. This is crazy. I'm not used to this stuff yet. But what I am used to is the fuckabootery on the charts, painting things on there to make people scared and causing the psychology in retail to be affected by my behaviors, which allows us to profit. So, what do people like me do in order to get people like you to lose your money? Well, we find ourselves, let's say I'm on the wrong side of this trade. We find ourselves here and we think, shit, we're going to have to push this down a little bit. Hopefully, momentum will carry it on. We've got something on our side here with the chance of potential bearish divergence. So let's put the brakes on this shit here. And let's try and push it below here. But we're not going to spend our money doing it here, right? We're going to hope the retail crowd crap their pants here and give us the follow through. We're going to do it here where we know we can push the price down this much. We know we can at least do this at cost price or make a profit on that trade. And we want to scare people. So what we'll do, we'll push it down. We'll hope retail take it further. If they don't, we'll take the brakes off. We'll take their foot off the accelerator here and we'll let it go back up a bit. Slowly but surely hitting the price when we see the RSI in the overbought zone. We don't go on the RSI, but there's a reflection of the strength of trend, which which we'd be creating ourselves. And then we get up to here and we're like, well, there's no fucking danger we're letting this get to our previous resistance. And if we keep it at least at least in a neutral pattern, then people will be unable to make their minds up, right? They'll be scared. And as we all know, the retail crowd suffer from 3 big problems. Fear, that's fear of losing money, and fear of missing out, also called envy. And we suffer from a terrible lack of patience. That lack of patience is because, like myself, we want to make this. I got another fucking donation. We got to make this money to live our lives, right? I mean, we'll all have bills. You heard me talk about how I was staying in an Airbnb recently, right? Well, that hasn't had any income able to pay its bills for close to 18 months because of the pandemic. And there's multiple of those which I have to pay for. They've got council they've got loads of bills, right? And I'm not going to talk about this at the same time as I'm getting donations, because then I find that's kind of perverted. What I want to say is, we've all got bills, and even if we're not going out to the pub and getting smashed or buying Molly off the foreign intern, good chat earlier in the box, we still have things to pay for, right? And we can't eat thin air. So us as the retail crowd, we have to make decisions and reclaim bits of our capital. So, we know this at the bank. And we think, well, great. And when I say the investment bank, a lot of us aren't doing, a lot of us wouldn't be selling here. We'd be loaning our shares to brokers knowing that they were going to sell them. Or we were loaning them to brokers knowing that they were going to sell them to their clients who were going to go long, and that the brokers themselves were going to go on the other side of that trade and actually push it down. And how would we know this? Well, because that's what we tell them to do, okay? Explicitly. Investment banks use brokers to steal, quotation marks, money from retail. And it works out for approximately, 10 to 15% of the turnover of that particular department. So is that significant? Fuck yes. So here we are, right? And we get to this part of the pattern. And then you're like, if we push this out of that pattern, they're going to crap their pants. They're going to think, hey, I can't afford to exit at 120. Jamie said it might go 100. I can't get out there. I have to get out now at 147, 148. Which is fine if you entered way down there and you're using risk management and you've not lost money on that trade. Congratulations. Right, 399 viewers. Holy bugger-a-rooney. Right, so anyway, so we push it past there. We take it to the previous area of support. We try and push it past there. This is after it breaks out of the pattern, we're like, happy days, right? Let's be the change you want to see in the world. When it breaks from here, let's push it to here. Let's hope when it gets to here that there's enough, there's low liquidity and people are scared. And the volatility, you'd be keeping an eye on this at the time, will also match so that we can put a little bit of extra effort in there without causing bullish divergence and push the price down further. Right, so that's what you do. And ultimately, your goal is to get the price to here, right? If you've got the price to here, doing the jobs that I would have been 1 or 2 people away from, then you've done your job, right? Congratulations, you look great, right? You won't be buying pints at the office at the bar on Friday. You might if everybody else made more money than you, but you'll have been. Everyone will think congratulations, right? You won't get fired if it goes wrong, but this is your objective. And if you can, you'll get it to here at a point where everybody else craps their pants and it drops down. You get this measured move or 60% of it. And there's plenty of other things you can look at on the TA to confirm that if you can be bothered. But we've got lots to do, and I've already spent ages looking at this. So we're talking briefly about patterns. We're talking about the agenda and the counterintuitive psychology of large accounts. We're talking about how you can make bank swimming as a little fish alongside the whales. And we conclude everybody in the whales, all the institutional investors are whales. So here we are at a potential disaster zone. Everybody's crapping their pants. It's exactly what us at whichever investment bank you want to mention decided they were going to do. And we're delighted, right? We're kind of excited. We think we've got them. But what constantly seems to be ignored is this, um, the fortitude and the determination of apes. You know, for a start, many of us bought it down here. Now, I say many of us, I mean people who were watching me from early January would have thought this is the entry to get into after here. Well, in fact, after here, we were saying the place to get in is here, which we did, right? Many of us, certainly from the messages I've got, people who had positions that he'd entered up and around here were able to improve their entry point at this price point, and now a lot of them are in profit, and some of them needed to take some risk off the table because they'd added to it here in order to live their lives when they saw and were worried here. That's perfectly understandable, right? To a certain extent, my heart goes out to you because we've all been there before. Some of us have been there when we were working on with other people's money. Some of it were even worse when we're working with our own. So I completely understand, I empathize, I sympathize. But you don't need to worry, in Jamie's opinion, because we're going to get to it when, if we go down to 120, which we might not. I'll still explain why I put in the order at 130 in a second. Take it easy, you might turn into a diva. I'm not sure what that refers to, but I'll get back to chat in a second. Anyway, yes, so happy days. Look at that, 423 concurrent viewers, which is insane, right? For me. Then, and I keep getting distracted from what I'm saying. Wow, I suppose this would be embarrassing. See, if I was talking like this at that job, I'd be laughed out of the room for the incoherent nature of these thoughts. So, yes, basically, essentially, sorry, didn't mean to patronize you with the word basically there. Essentially, we would like to get in at 120. Why is that? Because this is our previous support. This is where our structural support actually comes in, at this point. Why? Because we had this huge change. This is a huge departure from previous price action. Not only that, we tested our long-term support and got this move. Subsequently, it retraced. We've done this before, but we'll do it again. The retracement on this move, left to right, following the trend. Let's make it non-invisible, huh? Background. No, not background, Jamie. Where is this? Use one color. Here we go. So we came back. We came all the way back. Whoa, look at that. Went through the 618. People would have got scared there. I'm sure I've talked about all this. Anyway, so we dropped down. This became a level. As you can see, it's a level we broke down from. Anyway, we tested in around here. We created what is now support. This isn't really support. This is a diagonal line, right? It's not reliable. If you know, this is the thing with these other YouTube technical analysis. They put lots of faith in what they want to happen, which is totally understandable. And an easy way of like tricking yourself into there being a chance of what you want to happening is by drawing a diagonal line. And you'll have seen this many times, and you'll also you'll from having heard this and being identified to you, you'll see other technical analysis on YouTube in future, and you'll see some people will use only exclusively horizontal support and resistance. Some people will use diagonal lines and put faith in them. And the people that are doing that are treading a very dangerous path because they are not reliable. They are very often painted on by people like myself, and furthermore, it's very easy to conflate what you want to happen with what the charts are telling you. So don't trick yourself with too much with diagonal lines of supply and demand. It's bottom demand, top supply. Yes, so we would trick people. We cause people to think like, oh, I'm going, and then, you know, normally it's so that we can enter at a better price. But we know that the people that are performing these actions now aren't going to enter down here. So the idea of it being what one might describe as a fake out, which is what I would have been detailing earlier, you know, we're pushing the price down in order to buy it cheaper. That narrative might seem redundant, right? Because these people that we're talking about aren't interested in acquiring shares and going long and getting a better entry position. Another donation, £50. Holy crap. These people aren't interested in going long. That doesn't mean they're not going to buy shares. Their whole point of their existence is at the minute is to acquire these fucking shares. And they want to get them as cheap as possible. 120 is a whole lot cheaper than 150. Not that they're going to buy it there necessarily, but some will. Ben Rogers, I got that donation as well. I really need to... my whole office is watching this. Whoa, cheers, Ben. Hi Ben's office. Right, so what was I talking about? I'm so fucking distracted, honestly. This is what happens when you get past the age of... right, so... Buy the dip, exactly. So the question was, why are they pushing it down if they don't want to go long? Well, they still want to close out their shorts, right? That's the whole objective they've got, is to close their positions, right? Not only is it their objective because they might get a bonus at the end of the year, it's an existential threat to their entire company. They need to close out these positions. They've paid a shitload of money to borrow these shares, regardless if they've been printing synthetic shares. There are still loads short that have been short for ages and have been incurring costs that whole time. On top of that, most of the people that entered GME to go short on it entered at less than $5, okay? We traded GME in a range, $20, oh my god. This is amazing, thanks guys. All this money is going to buy more GME. So it's exciting, isn't it? So, yeah, I'm distracted again. I'm going to get off this topic because it's not able to maintain my own interest long enough. Yeah, so the people are going to be buying these things. They're not going to get it back down to $4. They might have averaged their position better, but that's not going to do much. And you can imagine from $4 up to $120, right? You can imagine how much money you'll have lost, even if you are averaging down. And a lot of these large firms, for example, let's say Melvin, they don't have the assets to handle that kind of price action. They're not big enough, right? I know they seem like incredibly huge when you talk about the size of their positions and so on, but they simply aren't big enough, and they themselves are swimming with some very big sharks. And so they don't have the capability to improve their entry position to better than $120 on their short. They won't have. It doesn't matter if the price went up to 400 and they added to their short. They won't have been adding to it to the point where they've more than doubled. Well, you'd have to do a shitload more than double, right? Because that's only going to take your price half the distance. Say that for some irrational reason they added more at this exact peak, right? Let's imagine they somehow caught this exact peak to add to their position, and they doubled it from $4, right? That's 400, 350 up around there. That'll have taken their entry price. Let's say they doubled it, which means they'd have had to invested as much again as they've invested in their entire strategy so far shorting this thing, which was exclusively between the range of $3 to $5. So we'll call it 4. Even if they doubled their position at that price, they still only have an entry of around 120. Boom, boom, boom. Does that my camera gone? Quite possibly. Let me see. There's a stream. There's me. My camera must have gone for ages. Shit. Serves me right, doesn't it? Try plugging it in again, but is it in? Is it not in? I'm getting lots of bling blongs. Right, so thank you so much for all those donations. Thanks, Dead Money. Dead Money's here too, great. Right, so I'll get to the chat in a second. Anyway, so that was like an introduction to today's technical analysis. I've not done any technical analysis, just this is the reason why the thumbnail says relax. And the backstory to it is because it's people like me causing what we're seeing right now. We've got an agenda, and that agenda is unlikely to take us below 120. Stop beeping at me. The USB driver, yes, this chap knows what's happened. He's psychic. Right, I'm going to give it one last go. Just to leave the camera, yeah, Rocky's giving me good advice. Just leave the camera. Right, so you all know what I look like. Anyway, you lost your cam. I certainly did. $30, another donation. Rocky, Andy, new friends. Kmart. Hey, it's Kmart. You've left so many nice comments recently. Thank you so much. You're a massively valued part of the community, as is everybody here, and I'm really excited to get to know you all more. Oh, there's Rocky helping me out here with something. Oh, he's deleting the cat. Yes, thank you very much, Rocky. Thank you, Rocky. Right, this is going to get better now. I can't remember which one of you did fib circles. That was very pretty to you. That was myself, yes. Until such times as GME became on my radar and started making videos on YouTube about it. My most popular video was how to Fibonacci. We call them fibs, but they do not lie. It was a great video. Still is a great video. And if you can bear the capture quality of the audio, then you'll be enjoying that. And one of the things that I liked about that video was it really introduced people to fib time zones, which are a much maligned but very useful strategy, which perhaps I'll stick some on later and we can all enjoy them. Right, so Ben and his colleagues and everybody else will be a little bit bored waiting for me to get onto some actual information. So I finished talking about the backstory. I keep looking to where the camera used to be, but it's not there anymore. So yeah, so the backstory, people want the price to go here. There's people with very large accounts and they can push the price there. They can do it, and then they can get out of that position that they've created in order to push the price there and make bank. And us as the little fishes, we want to swim alongside these big sharks and not fight against the tide because we've not got enough money to do that. We just want to spot the inflection points in the market, see when that shark is angling to the left and move with it. So in order to do that, we don't want to fight them. Not only do we not want to fight them, but we don't want to give them loads and loads of ammo here to use against us here. We'll just let them do it, right? We'll just kind of let them do it. And if we are just letting them do it, then perhaps we'll see some reflection of that on an indicator, right, that measures the momentum, an oscillator, which determines how strong is the trend that we're seeing in price action. What are the reasons behind it? And one of the very popular ways of doing that is using the RSI. Here's the RSI. What jumps out at you from looking at this here? Well, what jumps out at me is there's all sorts of different things going on, but the main things I see are this, and this. They're very similar to each other, right? They're at this part of this oversold zone. They come at regular intervals, and in between these things, we've also got this, right? A rise up to our overbought zone. So that's our RSI. And what's happened in the price action in those times? Well, boom, our low, our high didn't take us to the high of this formation. Our prices never recovered to their previous highs over here. Yet our RSI did. Now, if this was an uptrend, which it may or may not be, I'll make a judgment on that in a second. You already know what I think. Now, if this was an uptrend and our RSI made a new high, but our price didn't make a new high, which we can see here, then we'd say that's bullish divergence. We could also say if it's a downtrend and our RSI made a new low, this we can see is equally low with this. It's not a new low. If the RSI made a new low but the price didn't, that would be bearish divergence, right? Because our oscillator had gone to a new extreme, but our price had not yet, and we would expect it to follow suit. So, yes, here we are. We're looking at this and we're saying, is it divergence? Well, you can only judge that when the low is being put in. And the way you judge whether a low is being put in is because we'll have made a retracement from that extreme. And what sort of level of retracement would be needed to determine this as an inflection point? Well, you'd take it from your previous high, which we will, on this tiny, tiny time frame, on this tiny, tiny move, we'll judge to be from here. And we'll say this is where we're ultimately going to get to. I don't actually believe it is, but it is possible because I put in an order around this price. And then you'd say, well, after the price turns around from this point, it has to make it beyond the 236 to be considered a valid retracement, at which point you might start looking to the next levels. Or if it comes back from that point, you'd say there's continuation on the go. So let's zoom in and see, well, the price did make it back to the 236. If we draw this even more accurately, We see the price certainly went through the 236, didn't manage to close there. In fact, was easily, you could call it that, a rejection, and say, right, well, we've retraced to the 236 and the trend may continue. You could then draw, if you wanted, right, this is one of the things you might learn from my fib video if you were to go and watch it. You could then draw a trend-based fib extension and mark in the high, the low, the next high. Whoops, I've done that wrong. How embarrassing. You could now make in the trend extension, or one of the things that people do, which is actually much easier on charts, to just go like this and add in these extension points on your normal fib, right? So the ones that are most commonly targeted by algorithms are the 1.414, the 2.616, the 1.618. Where is that? There it is, 1.618. If you were looking for a retracement on this that was bullish, you'd be looking up at these targets, which we'll keep an eye on if this is real. And if you were looking at a retracement from the other side of things, so that would be normal fib, and then we draw it from here to the high, and we can see that this move here has retraced so far past the previous low. Like, this is a proper full-on retracement. You would use the extension, and you'd say where all the targets might come in and around the 127, right? That's very uncommon. Much more common is the 1414, which is in and around the 125 levels, or the 168, which is in and around, you know, just beyond 120. And then you would also look to the golden pocket, which is like another tiny touch more. So you could be looking at this sort of a range, and so there would be a lot of algo trading in around this level based on this price action here, and we might expect this fib to actually make it down to around these sort of levels, right, in and around here, which is why I picked 120 as the entry price when we were wherever we were, somewhere around here. I don't know what's this. I could check it exactly, but who can be bothered, right? And it's not about kudos, is it? It's just about being calm. So we thought, you know, be calm if the price comes down to around here, when we were somewhere around here, which it's doing. And we didn't worry too much about the breakdown of this particular pattern because it's not all that reliable, right? It's a neutral pattern. It doesn't suggest up or down. The moves off the back of it are rarely reach the full measuring stick. And we've got plenty of other things to say that this is potentially an uptrend, right? But like, these things aren't as easy to define as like, you know, whoop-de-doop-de, there's an uptrend, there's a downtrend, we're definitely going up in the next 15 minutes. They just show that the relative nature of price action. Anyway, so as we can see, it's a period of accumulation or distribution. It may or may not have broken down. I don't think it has broken down yet. I think that a break is below previous support. I think that horizontal support means something, diagonal lines of accumulation or distribution are fantasy, and that this is the important area to look to. Now, do I think it'll be a good buy? I anticipate ahead of time, yes, it will be, but many traders, with sensible ones, will want to wait until we reach this point, and they'll make other decisions when we get there. But why ahead of time was I so determined to put orders in at this place? Why, when we were up and around here, did I think we might come here and that'd be a good thing? Like, why? Why would I think that's a good thing? You know, would it not be better to just go on up? Well, part of the reason for this is because although lots of people trade patterns, and many people trade support and resistance, far, far, far more people with far, far, far bigger balances trade the trend. And how do we identify the trend? Well, partly higher lows and lower highs would suggest that our trend. Partly higher highs, higher lows, lower highs. All these sort of things are used to identify trend. They mark what a trend is. But when you look at different time frames, the question becomes like, well, where is the higher lows, the lower highs, and so on? You know, here we are on the 4 hour. Make it better? No, never does. You might think, well, right, so we're on a 4 hour trend. Is this a lower low? No, because we can see that our previous low was 132. Hence why I put an order in at 132, as you'll have remembered me talking about yesterday or earlier in this video, and I've got a message there that seems to be asking details. So I'll get to the chat and look at these messages in a minute, especially anything that anyone's put in any donations. I mean, I want to be obviously answering people's questions and providing value, so help me do that by telling me what you want to know, and I'll try and give you the answer, rather than just, you know, talking from experience and stuff. I'll direct it my chat what people are actually looking for. So I put in order 130, and then I put an order in at around 120. It was 120.22. So why did I put those in? And why am I talking about trend if that's also this horizontal support and resistance? Well, the reason, my friends, is blowing in the wind. Right. Thank you very much, Eric Crown. And I'm using his moving averages. Shout out to him. He's a legend. And so there you are. You can see these moving averages. I've got the simple moving average 200 and the simple moving average 100 periods, right? I'm a big fan of these, as you might have noticed. I've also got exponential moving averages on 200, 100, 55, 21. Now, I'm going to turn off the 21 because I don't want it on at the minute and it gets in my way. I'm going to turn off the 100 and the 200 exponential moving averages. And you'll still, and I'm literally going to turn off the 100 as well. And now you'll see all I've got on is this 55 and this 200. The 55 is an exponential. The 200 is a simple. Boom. Here's the 200. Here it comes in at 120. This is our biggest demarcation of trend. This, my friends, is the entry that smart money likes. It loves it. In fact, it might even push the price there to get this entry. And boy, oh boy, does it give a good bounce. It's like that song, Beach Ball. Boing, boing. It's just lovely when you see a bounce off the 200. It's also a complete nightmare when prices go through it. But do I anticipate that happening? Clearly not, if I've put in my own money on the line. So, 120. It looks like a good entry. We've covered now the backstory of what it's like to be the person who pushes the price here. We've covered the reasons why that person might do it, the various actions they'll take along the way, and their motivations for doing it. We've also covered the various places where their strategy might fail, or even if it works out to its most expected, its most likely, most beneficial result for them. The period of inflection that we'll be focusing on is here. We're not going to fight it, right? We didn't start the fire. None of this was our fault, right? People have done this to themselves. We're just buying when it's sensible to buy. And we're holding because it's ours and we can do whatever the fuck we want. So here we are, all poised for an excellent entry at 120. And wow, that's so exciting. And I'm excited for it. I like this idea of getting this. And at the same time, we can anticipate that there might be a very good reason for entering here. You know, if you were trading this yourself and you were thinking, hey, I can see that there's actually degrees of bullishness within this formation. I know we've broken out of it, but I can imagine there's a reason for that. And the breakout has not been definitive. And when I say definitive, what I mean is that we've had a 4-hour close here that isn't even below our previous resistance. The next one was only at the wick low. And this one, which we're still in at the minute, still isn't that dramatic. Where, it's common to see this when it breaks here. It's very common to see it go immediately here, which it did. For it to break that, then to go immediately to the next level of support, which it hasn't yet done. And I'm reasonably surprised about that. This is unusual. And then when you've got the 200 so close, then you just go and touch it anyway. This thing's like a freaking huge magnet, and it gets electrolyzed by all of this, right? Electrolyzed? Oh my god, stop it, Jimmy. Right, so here's your magnet. It's also like a very bouncy magnet, and it's why I put that order in, and that's why the prices might get there. I explained with a little bit of the momentum oscillators and with, the psychology of large accounts. Bump, put this on. And another question that I thought that it was worth addressing is this MACD cross, which a lot of us were putting faith on working out on the. I mean, I'm now not doing the standard TA. Not going down the timelines. I will get round to that. I promise. I'll promise I'll get straight to it. But at the minute, I'm just covering the things that I thought I should cover for people who've been watching along so far. So like, a lot of people think like, Jimmy, you said there was a MACD cross here, and you said not only was there a MACD cross, it was one of the best ones you can hope to get, with this decrease in momentum, with the cross on the histogram, with this cross with the MACD line over the signal line. It's on the daily chart. We've had 2 instances of it before, and they've led to huge price increases. Why did we not see the same here? Well, there are. Oops, a daisy. There are different ways of looking at that. And what I would say is, this hasn't finished yet. This indicator is not like a light switch where you're like, what buy, what sell, what buy, what sell. Like, it is more than a lot of other indicators, but it isn't quite. You know, there has to be some definitive change in the histogram along with the cross on the signal and MACD line to confirm that the move is truly on. And that doesn't mean that when the thing crossed back over it isn't, right? There'll be periods of flux within this. And one of the things we can use to determine whether or not there's been a change in behavior is to look at trend, which is simple enough, right? This isn't price action, so drawing a diagonal line on it is very relevant. And we can see that here's our histogram, it's saying this. We can also say that on the top side, there's potentially that, but you know, there's only 2 touches there, that's not real. The third touch didn't get anywhere near it. This is not valid. This, 1, 2, 3 touches. Fantastic. If it gets down here and touches again, I can imagine that'll be in at around 120. So there's a MACD. I don't think that the MACD daily cross has been invalidated to a significant degree yet, and I imagine that once it gets down here we'll see some more positive moves. And this cross on the daily time frame can take up to a week easily to manifest in price action, at which point you'll have missed your entry, because hey, this isn't saying enter now, it's saying there's a good entry coming up, it'll be at horizontal support and resistance, which one do you like, right? And we like this with, you know, I like this one, say we, but I imagine we're all very similar. We like this one, thanks very much. So this crosses here, and we still want to enter here. You know, just because this crosses here doesn't mean, right, shit, it's too late, guys. I mean, fuck it, you did well getting into Gme, but, you know, I was too busy, you know, eating my fingernails and whatever, picking my nose, and now it's too late for me. No, the MACD crosses, then you're like, it's a buy, right? Great, it's a buy, and we're going to look for a horizontal support that we want to get in at, and that's likely to be below where the price is at the minute, because we don't want to sit or live our lives underwater. Alternatively, if we'd been at the top of this formation as the cross happened, which we hadn't, you can see that was previous to the cross, we were up here, you would say, oh, well, if we break through this level, break through our horizontal resistance and come back for a retest of it, that would make for a good entry if we're above the 200 and if our indicators are still positive. See my video on how to trade a breakout if you want to know how to do this. So at that point we would have entered there, but it would much rather enter here, right? Why? Because it's cheaper. So also, there's nothing's broken until we break this level, right? This is our structural support, and this is the ultimate low that we're going to compare our divergences with. Here, prices here, right? This stuff is just flux in between. Here, important. Now, important. Here, not important, right? Not important. So, we've cut through a whole load of the mustard, and we're down to looking at what is it that makes Jamie so confident? Over and above all of the little narratives that he's strung together to give us a bigger picture of things, what is it that makes Jamie so very confident about this area? Well, look, that's it very clear in and of itself. We'll hide this, and we'll hide all of this, and we'll remove this, and we'll make this bigger. Now, this is why I'm so confident on GME, even when the prices are going against me, and why I can determine that an entry around 120 is a good thing, even though we were around 150 at the time, 160. Why is that, right? Well, this is an uptrend. It's an uptrend, okay? This, from here onwards, higher low. Shit, drawings have come back. Higher high, higher low. We have still not put in a lower low than this one. So you can't define this as anything other than an uptrend. We haven't put in a higher high than here, but this was higher than here. So it's an uptrend, guys. So here we are in an uptrend. In an uptrend. So when we're looking for divergences in an uptrend, those divergences which are valid are bullish divergence and hidden bearish divergence. If we're in a downtrend, we look for bearish divergence and hidden bullish divergence. And what we'd be looking for are bullish divergence and hidden bullish divergence. So here is a lower low on the oscillator, but not a lower low on the price. In an uptrend, that's hidden bullish divergence. So that's positive. It's already lower. Look how low it is. We're on the daily time frame here. Where's my paintbrush again? Yeah, I'm still on it. Right. So as you can see, this is lower. I don't know what these things are. They're from a different time frame. This is lower than back here. Lower. Price higher. Ah, but Jimmy, you said when the oscillator went to a new extreme, but the price didn't, and we expect the price to follow through. And when that is when the trend is matching the divergences you're looking for. In this instance, it isn't. So it's hidden bullish divergence. So it's positive, right? This, which looks bad because it's lower than over here, is in fact a positive indication. Right, so that might seem counterintuitive. It certainly is to people who first start learning how to use indicators, but that's the fact, right? So I'm thinking, wow, fantastic. And we've got horizontal support and resistance. We've got the 200, which is the longest running identifier trend that I've ever seen anyone with experience use in any arena, YouTube, that working at the bank or speaking to other people like myself. And we can see that all of our previous TA still stands, right? We use this to inform our decisions. So that's everything, right? That is like what is that? Probably about an hour's worth of nonsense talk that didn't benefit anybody, but I've got a ridiculously high number of viewers, so there we go. I hope if I haven't necessarily added 24 karat diamond TA pieces of sound bites for you to take away. I have painted a little bit of a picture for you about how and why people at the banks and at large brokerages cause these sorts of patterns on charts. So now what I'm going to go and do is look at the TA the way I normally do. I'll go through it reasonably quickly from the 2-day down to the daily, the 4-hour, and then we'll look at the 15 minutes or the 30 minutes depending on which what time we get there. And I'll look at the indicators along the way. The ones that I'm planning on looking at today are the RSI, the DMI, and then I'll touch on the parabolic SAR so that we can also measure this idea of has the trend changed and give you some experience of that indicator for when the MOAS does happen, how you'll be able to put it to good use. So that's what we're going to cover. I've also got, as you've noticed from my cutaways, Rocky helping me with the technical things I've got on the go, the equipment and so on, that he's here and he's going to take 15 minutes or 20 minutes to sit down on my stream and do the TA for AMC, which people here, brother Gme apes of our brother apes all love to see. Now I've got had 3, I've now got 5 shares in AMC, so that's not, setting the heather alight, to quote Rocky. It's just a small position that I have in sympathy in a positive sense with those people who are trading AMC. I'm actually all about GME personally, so Rocky's a much better place to give the TA on AMC. And I also feel like there's a legitimacy that comes with somebody who's invested in this thing giving TA on it if that person has professional experience, because they're doing it for reasons other than just because of what they want to happen. And Rocky's got a lot more hands-on experience with AMC and looking at it than I do. Not that doesn't mean I'm not good at it, it just means he's very good at it. So, and you probably noticed that based on what happened to it over the last 24 hours and what he had said on his video about it yesterday. So if you're excited about if you're looking forward to that, I'm sure I am too, so that'll be good. Right, so let's do that. In the meantime, I'm going to quickly look at these comments in chat. He's a shill. That's probably not talking about me, but if you won't want to talk about it, let's chat about it if you'd like to. I think that you're talking about somebody else there. That's Bo Knight saying that. Anyway, I'm going to quickly go back up to the chat here and go and see what I've missed out on briefly. I owe you, Jamie. Mike, you don't owe me anything. Good to see you guys. Sexy. Right, Fruity, hi, how's it going? I want to go on Jeff Bezos' new yacht with you, Lou, Jamie, Andy, and Renzo. Nice one. I think you've just listed some of the greatest people that contribute to this community there. Partly on personality, partly on the information they provide and their own personal experiences, and certainly in the way that they communicate and deliver their information with the audience. Thank you so much, you guys. Thank you so much, all those names mentioned there. All of them real heroes. Bum, bum, bum. I'll pay Jamie after the squeeze. Haha! Money tomorrow. That's the you don't have to pay me anything, Mike. You don't have to pay me anything. Before, during, after, you don't have to. There's no obligation. That goes for everybody. But as you've probably noticed, it's appreciated, and I find it surprising. Yes, I like Ape Andy just to watch him and feel relaxed. Yeah, not apart from anything else, right? So I'm going to scroll through these things. I don't want to take everybody's time up, and 567 people don't want to see me read out messages they read 20 minutes ago. Your much older brother, Hugh Grant, told me to give this to you. Haha. I am old. I don't know if everybody quite understands how old I am because of the way I behave. Ray Summer, £10. Thank you $10. Thank you so much, Ray. I see Rocky keeping people chat. Oculus Ash. If you guys appreciate this, jump in Jamie's Patreon. Oh my god, this is this. I noticed Oculus. I've been set up a Patreon thinking, like people might want to support the channel and don't quite know how to do it in the right way. Don't like taking stuff off people for free, but I've got a tier on there which is just to support the channel, and then I've got other tiers which are like for more hands-on. I don't like the word coaching either, but I'll give you the benefit of my experience on demand at the higher tiers. So those sort of things. And I've got a Patreon. Never actually expected anyone to join it. And then I went to check it last night and Oculus joined it. It's amazing. So thanks so much. The first one I've ever got. Things like that. Really, really nice. Thank you so much for that, Oculus. And if you want to jump in there, yeah, sure. I'll definitely try and make sure I provide value there. And when I checked that, I also noticed that somebody else had joined and then left and thought that I hadn't provided them with enough content. And I realized, well, I've done literally nothing, because Patreon for some reason didn't message me to tell me I'd got somebody there. Didn't expect it to happen in the first place, and I totally felt terrible that I hadn't provided them with some value. But so whoever that is, I owe you one. Yeah, so that's that. Thanks very much, Oculus. Yes, and other people have said things, and I'll scroll down past them because I can't read everything. I'm so sorry. I really feel quite bad. Oh, amazing. A cup of tea just been delivered. Tea time with Rocky. No tea, that's fine. I have coffee. What is the best trading platform to use within the UK? I'm currently using Revolut, but I'll need more trustworthy one after the squeeze. Yeah, you could do with a new more trustworthy one from 2 weeks ago, to be honest, mate. Revolut's a complete faff, and whatever. Anyway, I'm not going to say anything bad about them in particular. But yes, Interactive Brokers is pretty good. I like the functionality they provide. I find them very trustworthy, and I'm a big fan. If you're in the UK, you can also use Hargreaves Lansdowne. They're quite good. H&L, their app's good, but they don't allow you to do certain things, such as vote. So that's not fantastic. If you're so inclined, Interactive Brokers are fantastic, right? Because they allow you to do things that other platforms don't, especially in the UK. Whereas you can, shorting. You can short shares using Interactive Brokers, which is maybe a good idea, something to do during the squeeze with certain other assets. And if you see the, probably have noticed the inflation news coming around the corner, then you'll probably be interested in that too. Anyway, Interactive Brokers, they allow you to do margin accounts and provide your own collateral in order to go short. So that's something that you don't get on every platform. You might want to look into that. I'm not suggesting you do that for GME, unless you want to lose all your money. So that's that question. I think a reasonably good answer. We crazy. Much love. Ha! How you doing, Sam? Take it easy. You might turn into a diva. That's me. I might turn into a diva. Boom, boom, boom. Ray saying nice things about Rocky. That's good. Sorry for clicking my tongue there. I do that every so often. So I'll skip down. Ben chucked in $50. That's really generous of you, Ben. Thanks very much. And hello, everybody at your office. if you no, I'll not say that because we're on the internet. Thanks, Adeline. What did she do? That was very good. Thanks for that. And then I scroll on down. Thanks very much, Ben. Thanks very much, Daniel. $20, $20 as well. Amazing. This is amazing. You've nearly given me enough to get that whole order in at 120. Should we get there? Scroll down again. Is anything jumping at me? I got in GME at $22. Nice one, home user. Good work. My first entry was just around close to the $5 mark. And then again at $40, I then committed significantly more. Marius G, infinite money loop. This is as close as you'll get to that sort of thing. Jamie finally getting the recognition he deserves. Woo! Thanks very much, MC. I don't know how much. Well, there's Ruby in the chat. Long story there. Yeah. Right, Samuel Oduro, AMC. Dad puns are bad puns. Morning, really appreciate the psychology of the trade from the institutional perspective. Dad puns are bad puns. Bad puns are dad puns. Great to see you again. Thanks very much for your invite. I haven't really been involved in the Discord as much as I'd like to have been so far, but that shall change shortly. Juan, camera's dead. It is Juan, but I'm still alive, and that's what's important. Florian, which floor for GME Moas? Well, it's the floor. Well, this is the thing, right? At the minute, we're conceptualizing all these sorts of ideas, and so if it's hypothetical, we might as well pick high numbers, right? Because it's what we determine it to be collectively is where it'll end up. And so that's why one of my focuses is on not affecting other people's targets, right? If you've got a target, that's great. Tell me what it is. If it's lower than mine, that's fine. If it's higher, that's great. You know, probably isn't, but that's great. And what do we say the floor is? Well, it's a matter of opinion at the minute. And while there are lots of different things we could say that would maybe, especially as a YouTuber, you know, there's this sort of culture of not wanting to be proved wrong among technical analysts, which I find kind of distasteful. Right? It's okay to be wrong if you've got good reasons for the conclusions you came to and are able to evaluate it in retrospect and understand why you got it wrong even better, right? Because then you'll be able to be more helpful. And the truth is, it's not helpful at all to just tell people the price can go either way, because everybody knew that already. So when you get a lot of technical analysts that just won't determine what way the price is going, you get others that will be reticent to give you a floor because they don't want to seem silly and because it might make them look absurd. But I trust all you guys. I'm not patronizing you. Like, you can make your own judgments. You will have your own judgments, attitudes, and actions towards me and my channel, regardless of that my own ego. So I'll tell you what I think, and then and if I'm wrong, I'm wrong. I'm not all that often wrong, but it's not an ego question. It's more just a question of competency and not patronizing the audience. And I think that it's not unreasonable. Like months ago, I thought it wasn't unreasonable to aim for 69,420 months ago. Now I think it's not unreasonable to look up like easily past the hundreds of thousands per share. And if the dynamics are as we anticipate, then much higher again, right? So when people say 10 million's a floor per share, if we collectively decide that that is the floor and we stick together, then it will be. So, you know, and theoretically that's true with or without the squeeze. I'm so happy I found you, Rocky Outcrop and Appandy and new friends. That's K-Mark. Thanks very much again. Griffin, CIA trying to kill his camera. Haha. The FBI live inside my phone, so they better not be hurting each other. This interagency nonsense, eh? You'll stream during the Moas. Yes, I will, KC. Scroll through. Afternoon channel got busy, dude. Damn right, Alana 420. It did. Thank you so much. And then catch up to some more. I'm sorry I'm missing all these chats. William Wallace. Shout out to William Wallace there. Vic. Hey, Vic. How's it going? Thank God Rocky's here keeping people company and chatting to people. Hi, Jamie. What's your take on the minus volume in its last week? Yeah, I've read various things about it. People saying it was a misprint. I tend to agree with a lot of what they're saying, because the point at which you recalculate these things is at the end of the day. Oh, pardon me, where I burn myself with some tea. So I'm not 100% sure about the volume report in there. I'm also noticed various other things that I would, which give me reason to think that this isn't necessarily another version of manipulation we're seeing, such as TradingView has been having, I don't know if you've noticed, it's had a number of bad prints over the past couple of weeks. It's had also had information about the pre-market and after market trading that it's been completely wrong, and you'd have had to go on and check on the Nasdaq yourself and that. So there is things that come in. This is calculated by the CBOE, not the NYSE. I don't think. Yeah, see, this is the so like with this amount of information passing through different systems, it is and the timeliness of things, it is common that there can be misprints on various. It's like, but I agree with like what people are saying about what they saw on the books with regards to volume and why did that happen as it did. Well, see, this is like a 45-minute answer. The volumes that you see are often from like part of the way that people can manipulate order books. And some of the trades that seem to go through but don't actually go through is somebody screwing with people, making it seem like certain transactions were taken that weren't, cancelling trades out, and so on. But then there's legitimate ways of doing it, and so it's very difficult. Intraday signs of that sort of thing aren't reliable enough because so many different reasons scam. Anyway, I'm not answering that question properly, so I'm not even going to bother. Hi, Jamie, what's your take on that? So that's what I've just read. Why does it keep jumping out at me? Hedge are liquidating right now. That would be interesting to see. That was good. That's PH3D that asked me that question. Right. Well, I'll give you a proper answer to that question, maybe in a static video, if not on then later on. Home user Morris. Hi Morris. Controversial, but I reckon green crayons are the most scrumdiddlycious. I think green are nice. There are various shades of green crayons. It's the most popular shade of crayon. That prick I used to respect. I've no idea who you're talking about, but I completely sympathise with that expression. This looks like a hedgy targeting system. Missiles away, the 120 fire. JCC CPD can't start a fire without a spark. There's a very good person to trust there in chat. Home user, correct. I'm not reading this live, so why am I reading each message? I'm scrolling down at the bottom and I'm going to go through. Have I missed any donations? I have. J-Town. Hey, it's J-Town again. You're only fans for smart people. Haha, thanks very much. Only I've not got a camera. Isn't that embarrassing? I'm the only OnlyFans person without a camera. What else am I missing out on here? Have I missed any other donations? Not that I see there, but I'll scroll to this other thing. £5, you're like an OnlyFans smart people. £30, I'm so happy I found Rockin' and Brandy. £20, thanks so much for these donations, guys. I think I've got through them right, and I've read most of the chat. Right, great, excellent. Everybody's happy. I'm going to go on and do some actual... Darren Thompson, shots fired. God damn, work interrupting quality TA. No, my goodness, work. Hi, Jamie, messaging from Glasgow. Yo, Jules. Hope you're well. Can we really aim for hundreds of thousands per share? Yeah, we can. What if BlackRock or another institute decides to sell 20 million shares at $1,000 per share? Okay, well, I mean, if BlackRock decide to sell 20 million shares, that would be 4 or 5 times the size of any of a pot. If it were up at $1,000 per share, the trading volume on those days, well, 20 million would only be maybe 2 days worth of trading? Probably at this stage of $1,000 per share, the reasons it would be taking us there, it would be less than that. So just going on your particular figures, it would have a dent, but it wouldn't change the picture. Whereas but the question then is, you want to look at BlackRock's agenda, and that's a whole new video again, and a very long story, and something that I talk about with Ape Andy on WhatsApp, and try to come up with narratives to test that this idea that you've expressed there doesn't quite fit into what I see might happen. But BlackRock may well buy another 20 million shares now, or around 120, as might others names I've mentioned during this stream already. and they might buy that, and then would they then sell them at 1,000? See, this is different, right? BlackRock aren't traders the same way you and I would be looking to enter and exit positions. Most of their shares are held for reasons that will make them money other than simply capital gains. And if they are buying in shares in a company, they tend to hold them for longer than we would. So it's unlikely they'd just be taking a scalpy trade. Someone like BlackRock, they get involved for various other reasons. And when you're thinking about BlackRock, right, and what I would urge people to think about when they hear BlackRock, or people put the idea of what do you think BlackRock's agenda is, like, what I want you to think about is who funds Ryan Cohen, who backs Ryan Cohen, who believes in Ryan Cohen, and who has a history of supporting him in all of his goals. With famous CEOs, they're often backed by huge banks who have their own agenda, who craft a narrative for this personality and create a narrative on the charts. And I'd ask you, when you hear people ask you questions about BlackRock, when you see DD about BlackRock, and you read about how fantastic Ryan Cohen is, and when you put those together and then ask, well, what are the implications of that? What might it be that what might BlackRock be doing? Okay, and if so, what is the most advantageous result for BlackRock, right? And then when you get there, you can ask yourself that question: what are BlackRock going to do at $1,000 per share? Now, $1,000 per share sounds like a lot for something that was trading at $4 not all that long ago. It doesn't seem all that unreasonable for something that was trading at $400 plus much more recently. And when you string those things together, well, 1,000 is a whole lot smaller increase than the increase from 4 to 400. So do I think that they're going to sell it? Do I think BlackRock specifically will sell their shares at $1,000? No, I don't. And I think that 20 million is a lot of shares. No, you'd probably be looking at doing more. If someone was looking to cash in at $1,000, they would probably be in BlackRock. Anyway, long story. That's a long answer to a tiny question. But I hope it was of some way helpful. Right, so I'm going to skip through. I'm probably missing loads of things. What do you think about the low borrow fees for GME, Jamie? Why do I think there's low borrow fees? So you understand this concept of borrowing fees, right? It's also attached to that question somebody just asked about BlackRock. BlackRock buy shares. They put them in a fund that their clients invest in. As new clients invest in that fund, the capital stock of it increases. Those people already in there get richer, and they derive an income from it. That another one of the income sources, tributary income streams with regards to funds, is they loan their shares out for people to borrow in order to go short. And BlackRock are very good at doing that. And so if there's lots of shares available for people to borrow to use to go short, what does that tell you, right? That means that somebody's bought these shares and owns them, and they're putting them to good use so that they can derive an income. They're hardly going to have done all that if they think the price is going down, are they? So there is counterintuitive aspects to the fact that the funding rate went down. You have to operate inside a continuum. This is something that is relevant to AMC, which Rocky will probably touch on later, with their extremely high borrowing costs. It's a continuum, right? Because those costs are so high to borrow those shares, people buy it so that they can lend it out, so that they can make money, and then that increased supply of shares reduces the rates. So when you see extreme drops down and extreme pushes up, you have to wonder, like, what's going to be the consequential implications of these facts? And usually you should measure these things over a period of a number of days. To look at it in any one snapshot and say, wow, it's so much different than it was yesterday, is not really relevant. It's more like, what's it been like over the last 3 or 4 days? What are the trends in this telling us about supply and demand? So what do I think about the low rate on GME to borrow shares? I think if people like Melvin don't seem to be doing much operations, from what I can tell, they're not doing anything. But if Citadel are still absolutely intent on this policy of self-harm, then They're probably now quite welcome to borrow even more shares to go short on. But why would you do that? Why would you do that if you're a serious company, which these people are? Why would you spend your whole existence focusing on one asset? Right now, there are reasons why that might happen, and I'd love to talk about them. I can't yet talk about some of them for specific reasons, but over the next few weeks and months, I hope to be able to. Anyway, I'm spending ages on that. Jamie, you said in a previous video that the government would bail out hedge funds because they provide liquidity to the markets, but did you really mean hedge funds or those firms market maker arms? Thank you. Well, this is a good question, right? Their market maker arms are there to provide the utility of that liquidity. That's the facility via which that liquidity makes it to the market in a way that's profitable for the liquidity provider. Those market makers work for them. There's lots of different types of market makers, right? There's not just one guy with one type of agenda who's working exclusively neutral, and that. There's lots of different types of market makers. The guy who does these indicators, where are they here? These moving averages here, which I get up all the time. See, he's put them all together in a little group, right? Which is handy if you're using TradingView, especially if you're not on like one of these paid things, because then you can add only a limited number of indicators. And when he puts them all into one thing for you, Eric Crown, then you can access them all at the same time without taking up indicator slots. And the truth is, they all do the same job on the charts. They're all the same sort of visual thing. So why not have them all there? Eric Crown, he was, I think, a market maker, working in the Chicago Board Exchange, who reticulate the splines, as it were, for these charts. And he did a very different type of market maker role from the type of people working at Citadel, right? And like, they're not comparable at all, but they're both would be called the same job. And so it's not strictly necessary to rescue the market makers, but they do perform an important function. When I said that it's likely that come to the end game, the government would have to bail out, which is like, I'm not sure if I used that exact phrase or not, but it's more or less accurate enough to use, that we would bail out these banks is because they need these, like the liquid, like, so for example, if you look at all of the things traded on NASDAQ, and you add up all of that volume, and then you look at the dark pools, which is hedge funds and liquidity providers trading between each other, as much as more so than investment banks nowadays. If you look at that, you'll see that the vast majority of action happens off exchange, right? And that's terrible, but it's also incredibly important because it means that's where all the money is. And the frameworks for the systems we have at the minute rely upon these huge dark pools and all the money flowing around there in order to facilitate many other aspects of the financial system and the frameworks that we all use and operate with. So liquidity is one of the most important things that the market has, and the government will do anything they can to maintain that. It's one of the most competitive aspects of, when people say like, what are the biggest exchanges in the world? Where are the financial centers of the world? That's determined not by the number of people that work on the floor of that exchange. It's by the amount of money there, the amount of liquidity, right? Not just the assets held under management So anyway, liquidity is very important. Liquidity providers are perhaps the most important market participant. So, and many of them are going to be affected by Citadel's behavior, assuming that everything we know so far is true. A lot of them are going to be affected by it negatively, and they're going to have to do things in order to take mitigating action. And I don't mean because they'll also maintain a short position on GME. I mean because of the potential danger should Citadel get liquidated. If there's a margin call, they liquidate Citadel's assets. That's a highly automated process. Then everybody else is going to be crapping their pants because their assets will be the ones that are getting liquidated, right? They'll be uncontrollably selling into the market orders executed on exchange in order to clear their debt. And so that'll be affecting the other liquidity providers who haven't done anything wrong and who provide the fundamental tenets of the financial system, and the government will want to support them, as they rightly should. Take it easy, Darren. Good on you. Don't know what you did, Darren, but pace yourself. Apple Blossom, Rocky, OC, so be prepared to talk about Zill in your next live stream. Zill, not bad, but still hit the like button. Thanks, MC. iPhone can just need to learn how. This is probably about me. Yeah, I need to learn how. Lots of things. Yes. Ape Andy sent me here. Thanks, Alec. Thanks, Ape Andy. I managed to touch on that too. When we started this channel, we started, it always felt like a group thing, even when it was just me. Started this channel not that long ago, well, a year maybe, did really sort of infrequent low uploads about how to measure open interest and essentially the sort of things that are determining this squeeze, which is why I felt like I was appropriate to talk about these things, right? I wouldn't if I didn't think I was. And then Rocky Outcrop really helped my channel by introducing me to his community and talking about the things that I was good at and the strengths that I had, and I really owe him for that, because there's no way, even when I have like millions of subscribers and say I was able to direct them to Rocky and show the value he offered, that still wouldn't be the equivalent of breaking the initial inertia on YouTube. So I owe him everything. And then a couple of weeks ago, me and Ape Andy had been talking to each other in each other's videos without realizing who each other were. We'd been writing each other's videos saying, wow, this is great, wow, that's great, not realizing the same person would be commenting on our videos. And then we got speaking to her, realized, and he's been sending people over and put his trust and faith in me, and we went from 1,400 to over 5,000, which is crazy, because at 1,000 we sponsored Adopted a Monkey, and I said at 5,000 we were going to do something, but we just blasted right through 5,000. So I'm still going to do something, but I don't know what it'll be exactly yet. And I want to thank Andy and Rocky from the very bottom of my heart. Deeply appreciate. Go Automation, damn right. Burger, go DTC machine. I think it'll go down like Lehman Brothers did. Yeah, the way Lehman Brothers did was everybody shifted their toxic assets onto them. Part of the people behind that were AIG. And long story short, we want to punish people for what they've done to us before, not in a punitive way because we're angry, but because we don't want it to happen again. And we know that there's only one way these people learn their lessons, and it won't be because we're being nice to them or letting them take profits. Anyway, yeah, so I am like genuinely incredibly annoyed about 2008. I graduated from university and started working at the investment bank, got my dream job, as it were, at the time. And the world was destroyed at that my dreams and goals, they didn't exist anymore after 2008. It was not possible to achieve them because of, what the hedge funds had done. My entire life was changed because of nothing to do with me. And at the time I had a mortgage. I started my first job. I was in debt from university, because I had to go to a different jurisdiction from where I'd studied, so I was paying through the nose for university. And they absolutely fucked me in the ass. And that's just like the little things. I don't even want to talk about what they did to my parents' lives. My dad ran a property development firm at the time. Absolutely. Anyway, I'm very angry. Can hedges make financial system implode if they keep artificially lowering the price via dark pools, etc., to infinity? They won't be able to keep doing it, certainly not to infinity, and certainly not across multiple assets. They can do it one at a time, and it usually works. That's the problem, that they pick on companies that have got value so that they can destroy them with their financial clout, and then acquire those shares at zero or close to it, incur zero capital gains, and own a company that is valuable so that their shareholders, i.e. the very rich people that own that hedge fund, usually a very limited number of people, get even richer. They do this at the expense of the people who work for those companies, all those jobs, all those mums and dads, all those kids, all those mortgages, all those educations, all those communities. And you add it up, it's apocalyptic, extinction level evil. Hey, Doublegammer. Hey. Oliver, do you think that if the price spikes to 500 to 1,000, they'll be able to push it down again? Yeah, I do. I think that the price will get around those areas and then it'll come back to around, much less than $1,000, probably down to Still in triple digits, but 100, 160, 170. I expect us to see one peak that looks like the big one go up to 1,000 people to sell their shares, price to come back down again, not maybe back down to that level of, but down into the triple digits, and then to really take off properly. It all depends, right? If apes buy on the way up, no, they'll have absolutely no chance. Not only that, they won't want to, right? It's far too fucking risky. Civsic, yo, oh, hey. Another donation, $2, still an hour. iPandy sent me 2 great TA, thank you so much. Akira, I posted the war as a college student, protested the war. Oh, good on you. Well, yeah, I mean, like, we could tie all the wars into that particular period of time too, and then add in the death that was caused by greed. AMC 10k is well within reason. Yeah, that's Rocky answering. Yeah, could. I am guessing GME will go further up, but there are too many people with too high expectations and no patience. Squeezes on, I think, but over time. Yeah, it's definitely over time. Might be a lot longer than people anticipate. I've been saying days to weeks so that people will stretch out their expectations from a number of hours. But it might be demoralizing to tell people it could take a month. So I haven't been saying it all that often. But it is true that it could. And it could also happen in hours. Would it be likely to be started and finished in hours? Not really, right? The size of the... If we're liquidating Citadel, right? If we are liquidating Citadel, how fantastic does that sound? Anyway, if we are... as a consequence of our own actions, we're not doing it to annoy them. It just so happens to be a bonus. Then the DTC DTCC, Deposit Trust and Clearing Corporation's computer, and we call it that, quote unquote, it's a terminal that has access to the markets and determines what's happening with their positions based on the programming that's been put into the software. It'll execute. It'll do it at market as much as it can. And if we try to clear all their assets, it can do, if theoretically it could do all of them at once on the market sell. But it's not a stupid computer, right? It's not stupid. It'll do it in tranches. It'll do it based on where there's liquidity on the books. And should that push prices beyond of certain other assets other than GME might go down a little bit. They could go down, easily go down the 7, the 15, the 25% and start causing circuit breakers. These sort of things can pause the whole market, trading on the whole market for days. And then as soon as the price opens up again, break again, pause again. So it's possible. That leads into another question now. Somebody asked me about how long the squeeze will take if there's market breakers on the way up. And that's not what circuit breakers are for, right? Circuit breakers aren't necessarily to stop prices go on the way up. Well, theoretically, there's been drawn a picture of like, well, if this is a pump scam, then, it would be helpful if we had circuit breakers for the way up too. But they don't function in the same way as they do on the way down, right? The whole psychology is inverted. If you put a market breaker on something as the price is going up, the next day people aren't going to want to sell their price at the same level. They say this is on such a tear, it's going to crazy go up, and they raise their orders, right? And then it tends to be that a circuit breaker on the way up causes the price to just jump up massively the next day, right? It's counterproductive. So, and there wasn't one in January for that exact reason. There won't be one again. So, but there might be circuit breakers across the market. Nice price to enter GME is 120. How about AMC? Yeah, that is a nice price. Tune in for Rocky. He's got 9. Yeah, exactly. There you go. No fucking about. There's your answer. Anyway, you'll be talking about that later. The greed must stop. Yeah, it will. It will. It will, but then it'll come back as it always does. Tradespotting. It's like Wada Houston says. Wade Houston, yeah, I've seen his stuff. He's a really smart guy. I really like the way he delivers his message. Somebody said to me, oh, you and Wade should do a video together. And we should, right? But no, everybody's kind of settled into their groove, right? I don't know if these people want to make friends with me. But yeah, I'd definitely love to do stuff with these people. They're really good, the ones that I've seen of them. Some of them are, not him, some people are a fucking joke, right? And they've getting way more views than people like Wade Houston, which is an absurd state of affairs. But hey, it's up to everybody. We share the stuff, share his stuff, certainly, and my stuff and Rocky's stuff. Share stuff, the credible information with people. I kind of difficult to do, right? Can't post on Superstonk because I don't have the karma. Still, after all this time, I still don't have it, right? And they've raised their thresholds once during my chase to get there, so I sort of put a kibosh on that. But I would love to have more KD again. Thanks, Jamie. The Vid Rocky answering questions in the chat too. Very cool. Awesome. Yeah, and he'll be on live to do it shortly. I've still not done the TA that I normally do. So when I do it, I'm going to fly through it as quick as possible. So yeah, Wade Houston. Yeah, he's really good. I don't know what the message is now. Scrolled past it off the screen. But yeah, he's really good. I'm sure somebody said something else about something he had said. I didn't read what it was, but I can vouch for his credibility. The guy knows what he's talking about. Whereas many people don't. Jamie, you're super nice. Thank you very much. That's a nice comment. Thank you. I share your stuff on Supersong. Thank you, Worth His Life. I know you do. Thank you so much. Thank you. And anyone who wants to share this stream, which is probably what's happened, which is probably why it's got so many viewers. Thanks, everybody, for tuning in. I'm not complaining or being a twat about things. I respect what Superstonk have done, and all the people over there really do. I mean, obvious, isn't it? And that's certainly not saying there's no entitlement here. I would like to be involved with the people that I respect, as everyone would, right? So if you ever see any of those guys and you're over there, you're watching those videos, tell them I think they're fantastic. Hey, and maybe we can. Houston Wade can explain everything well. He's Harvard educated. Oh, excellent. Yes. Well, there you go then. He's also a nice guy, which is what struck me. He articulates things well. He's a fairly good understanding of things from what I've been able to gather. I haven't watched all those videos, that's for sure. And I see he's been interviewed on something by a Scottish guy who's like, yes, amazing. Love to see Scottish people doing well. So whoever that chap that's interviewing, I'm sorry I don't know people's names. He's a nice guy too. So yeah, I mean, there's plenty of people I could throw credit out towards, and I really should. But anyway, that's the long story short. I think that those people are good. Well, scrolling through, I've seen a donation there. What was Jacob's KD? Thank you so much, KD. Rocky will be on in a minute. For whom? Arkura of USA. I'm not reading this probably. Kmart. I'm sick of the karma crap. Lol. Yeah, same here. It's a fucking joke. It is such a joke, and it's such a drag. Anyway. And like I reached out, I saw on Twitter there was a mod from Superstonk called, I think it was Red Queen something, and for some reason it finally made it onto my Twitter feed. No idea what's wrong with these algorithms. Like they should be shoving this stuff in my face, but for some reason I have to go looking for it. Anyway, I sent her a quick message saying, I do TA videos and I'd love to do something that maybe the Superstonk community would appreciate and or contribute in a way that maybe takes some direction from you guys, thinking that might lead to some positive stuff for the community or whatever, but nobody gets back to me, and they've all got people doing they've got people I think that satisfy the same corner I'm coming from, and it's up to you to judge who's better at it, the TA, or who provides value, or if they're complementary to each other, and watch along or not, right? You vote with your feet, etc. If it's good enough, it'll stand up on its own 2 feet. I shared the stream with Superstonk today. Thank you so much. That's really appreciated. That's probably where so many of these nice people have come from. What is your Reddit so we can give you some sweet, sweet karma? I have a subreddit where I try to post things in the hope that they'll make it out there eventually. It's reddit.r/Tradespotting. And you can find me on there. I'm frigorifico, which is my favorite word in Spanish. Frigorifico. It means refrigerator. What are the possibilities of the US government stepping in to call a failure to deliver manipulation on both sides due to the social media and then pushing a single sale price for stock and causing a reset? This is El Diablo Barudo. How you doing, man? What are the possibilities? Well, I suppose that means, is it possible? Yes, it is. It's possible. I suppose they would term it as a compromise. Of course, the idea that there'd be a failure to deliver on the long side isn't completely the most accurate way of describing it, but I know what you're trying to get at. Failure to deliver, of course, are determined by the people who do not meet their obligations to deliver those shares to people on the other side of the trade. Those failure to deliver is a fundamental break in the way the system should work, whereas going long doesn't have the same implications. There is no possibility of that happening. But they could do it because they think there's been too much manipulation, that these people are acting in an organized fashion and that they're being directed by people such as myself. So when I was watching the hearing, Game Stopped, the most recent hearing, and Gensler and his friends were talking about how they see and perceive there to be this negative implication from people such as myself talking about GameStop. I thought, well, wow, I already knew the guy was a complete fandan, but I didn't realise that he thought I was fucking stupid. Nobody's going to believe your pish, mate. Don't even fucking start. That's what I thought. That's not going to get me very good advertising revenue. But that's the crack, right? That's what you see when you see somebody say stuff like that. Are they going to target people like Roaring Kitty? And I mean, I include myself in it, but that's just because I'm weary of the potential for bad things happening. I don't assume to be any sort of leader of the gang or anything like that. And I'm certainly not telling people like financial advice, right? It just so happens that I give really good entries. But whatever, guys. Like, you can't come after me anyway. My jurisdiction, I'm allowed to give financial advice on the internet. That's the fact. It would have to be YouTube that come after me, mate, so you can fucking shut your mouth. And on the other side of things, I don't actually give financial advice. And if you think I do, you've made a mistake. It isn't financial advice. My financial advice is work hard, get good a credit rating, invest in things that'll make money while you sleep, don't go short, be nice to the people around you, but save enough so that you can eventually make it to a fuck you position where you don't have to work, all your bills are covered by a passive income, and you've got enough money to live the lifestyle that you require, and be nice to the people that have loved you your whole life. That's it. That's my financial advice. I'm so fucking angry. I get back to you. You have plenty of fans on the GME Discord server. Thanks very much, man. That's really nice. Yeah, I appreciate it. And that's what I said when I first tuned in there. I looked at it for a while, and there was a chat going on in the general. And Dad's Puns Are Bad Puns has got a GME Discord, which is full of really nice people, right? And if you're on Discord, you're looking for one to join, check out his. I'll put a link in the comments of this video to that Discord after I've published it. And check out that. Also check out Rocky Outcrop's Discord, where you'll find me all the time in there. And one of the things I do in there is give free trade signals all the time with what I'm doing, which I think if you charge for that shit, it might as well be coming from somebody who does it properly, right? So I do. Anyway, I got another donation. Holy shit, amazing. Hey, Jimmy, I think your analysis is way better than any of the other super stunk DDers. Well, let's not compare myself to them badly, but I say they've done badly. Some of them do fantastic, but thank God mine stacks up against people in your mind. Thank you very much. But personally, of course, I would expect it to. I mean, I come from this industry and was trained to do it. Hey, Jamie, I think you're Alice. Thank you very much. Yeah. And there are a couple of people on Super Stunk that do really good DA. Somebody who's very complimentary to myself, but has a different style. And I don't know if he's I know from this little I've seen of him, he's at least credible and is definitely in it for the right reasons and gives good technical analysis. Which is different from my own, right? It's fundamentally different, but it's very complimentary. Is this guy Warden Elite, who's made a couple of good posts on there as well. Really respect that guy, and I've absolutely no idea about his background or who he is, but from maybe the half an hour of stuff that I've seen over the last few months of his stuff, I'd really recommend that guy. I think he's not knowing anything and not being arrogant, I'd say he's in and around my level. I hope that doesn't come across as arrogant. I don't mean it to. How are they able to continue engaging in illegal activity? Because nobody can tell exactly what they're doing, and they're the controllers of... I mean, the reason they're able to do it is because they control the settlement process, right? So ownership of control in a capitalist society means that they have the power, and we don't. My bank has a 15-minute delay to the NLSY. Is that a problem when it comes to selling? 15 minutes. 15 minutes from you clicking the button till the order going through. Is that what you're saying? Sorry. Alba Gubra. I pronounced that terribly, which should actually deserve me getting shot in the head because of where I'm from and what it means. Alba Gubra. Is that right? Correct me if I'm wrong. It's more important that I get that right than it is that I answer your question to me personally. And I'm sure you too. Is that a problem though? 15 minutes. Yeah, that'll make a huge fucking difference. From your bank. Do you mean from your broker? Is that a problem when it comes to selling? I'm not sure exactly how where this button is it'll be pushing, but I assume that would be a problem. Yeah, I wouldn't be happy with a 15-minute execution time. Not in no way. if you can improve that, I'd suggest you definitely try. But on the other hand, if you're selling when the price is going up, right, probably it's not a huge problem. If you're selling when the prices are going down, yeah, that's not what you want to see. What is it to sell when the prices are going down? Well, I can answer that question very well in a minute. Hey, Jamie, what happens if people treat AMC Gme as a bank card and don't pull out and only pull out 1 to 10 shares whenever possible, need money, but majority keep their shares in the stock market as a bank? What happens? What happens is GME it's easily achieve its business objectives to be a fulfillment company. Its target market will increase. Its share price will continue to rise. The dividends will start increasing. The company will dwarf other competitors. They'll expand. They'll get bigger. Everybody who's holding it will increase their wealth. If we're talking 10, 20, 30, 40 years, then you'll be looking at, along with inflation, you'll be looking at the general trend in the stock markets over 40 years. Look at that multiplier yourself. Even without a squeeze, you'd be looking at, in 40 years' time, shares, if GME doesn't die and still perform and is targeting its business objectives at the minute, which it won't, it'll have bigger ones, and you'll be looking at thousands and thousands and thousands of dollars per share for it. Of course you will be. But long before then, lots of other things could happen, which would also be in our favour, which would, you don't need to hold forever. GME will be a perfectly successful company if the squeeze happens, even if we take all of our money out at various levels. Haha, numerology, fair enough. The meaning of numbers. There only are how many numbers? How many real numbers are there? Can't remember. 4 or something. Because of those that enforce them benefit as well. Enforce the rules, but I missed that. Maybe I've read out the rest of it. Because I shouldn't be reading every message anyway, because I don't think people want me to do that. Hey Jamie, I'll read the ones that say hey Jamie, or that. Obviously I'll try. What happens if people treat AIMS? I've read that already. Jesus Christ, Jamie. Pardon my blasphemous language. Accredited investment is so garbage, it blocks lower income from support startups. Yeah, it does. This idea of high net worth individuals getting tax breaks for investing in startups, but that's not available to the rest of us because we don't have the money to qualify. Are you fucking joking me? Same situation here in Scottyland. Do you have a position in GME? Yeah, I do, Tycoon. I have a position in GME. I've had it since November last year. I entered around $4. I significantly added at around $40, and I'm not taking profits until much higher up. And subsequent to having started this stream and got a popular channel, I'm now obligated to the audience and the stock to hold beyond when you guys will be holding. So I'll be streaming the MOAS. I won't be selling my position at the peak. I'll be selling on the way down, and I'll likely hold on longer than most people, not to maximize profits, but so that the things I say and do don't harm the squeeze and the other people who are invested. And I don't need to make the maximum off the squeeze. I don't need to. If it goes up, my life will change, and yeah, it's fine. I'll have enough money to do what I want to do in life, which is mostly just to help people. So I don't need to make the absolute maximum money on it. And I'm going to be around doing this YouTube channel for years, right? It's going to happen. I'm going to do it. And I've got lots of other things on the go in the same time in my life, and I'll still keep committing to this. So yeah, I've got a position. Yeah, I'll hold on to it to benefit of everybody. And now I don't show it on stream all the time because I believe it's antithetical. I think it encourages the wrong type of reaction from people, and you'll see, people would look at my position and think, "Holy shit, I better get in. Look at this and that sort of things." And it's not. You'll listen to me when I say the price to get in at is around 120. If we don't get there and you've got a small amount of your offer in around 130, then congratulations. In fact, let's look at that right now. That's not the right. This is the right, Jamie. And then we'll go take all this nonsense off. Whoops, I just locked it. Don't want that. Off. Drop down 15 minutes. 137, 36. Right. Get this up. 142, 11. Oh, come on. Okay. What do I think of this? I think it's temporary respite. Right. Right. This isn't particularly positive. Yeah, sure. Bunk. That's fine. We anticipated that. This rise, this is a downtrend. This oscillator higher than here. Price not higher in a downtrend. That's bearish. This recovery weak. This double bottom not relevant. Yeah, so I expect continuation of this move. And like I say, 120 still a good entry. If it doesn't happen, I'm perfectly happy with that. And I'm not sure how to deliver this information that properly respects your position, which I want to do. And I'm aware of the fact that I'm totally not bothered if the prices don't go down 120 because I'm already in, and I've just said from below there. So it would be nice, certainly would be. I'm not going to say I wouldn't like it, but it might not happen. But I do at the minute anticipate that still. So anyway, I think I've done way too much of these things without actually doing the TA, so people maybe not understand. Anyway, I'm going to go through this. I think I've got the bottom of that. I don't see my name written anywhere without respect, bro. You too, Robert. Thanks. Robbie's taking care of chat. Right, I'm going to do the TA, and I'm going to do it reasonably quickly. Short version. Buy and hold. Slightly longer story. Right. How do I remove that? Undo that. Go away. Have I got all the drawings removed? Yeah, I have. All removed. Remove all drawings. Yes, so start again. This is the way we traditionally do it on the channel. At least that's the way it's been starting to evolve. We've got our ultimate retest of the nightmare scenario on the daily time frame. I say nightmare ultimate, like this is as worst as it could possibly ever get. And based on what I'm seeing in front of me, there's a horizontal resistance there, $85. Next one, anticipate being around 120. That's because of this. You're not just drawing it in because that's what I'd like. It's like a thing. You can expect now a degree of resistance between, like that's not real, but people would draw it there. It's actually closer to here, and then there's where the traders brought it to a close on that day, here and here. Right, now you'll have seen me draw these same lines, maybe not that one. You'll see me draw these same lines every time I start this TA, because the most important thing to do when you start looking at charts is to draw in the horizontal support and resistance, because then when price reaches there and turns around, you'll have the biggest reason for it already done. Also, it's great about constructing a picture and analysing things. And this isn't how you would approach it all the time, right? You'd do this once and then you'd keep your shit on the charts, but it gets confusing because I draw lots of different things and go for different timelines, so it's handy for people to start off again, especially if they haven't seen my stuff before, which a lot of people, oh shit, wait a minute. Still working, cheapers, creepers. Anyway, I swear I will improve my language. I'm sorry about that. And you'll admit, if you have seen my other videos like the Eli 5 MOS guide, you'll have seen that somehow there was a strange cut in there, and it showed up on some people's streams and not others. It's really weird. It was around the 245 mark, and I've seen screenshots of it on Twitter and so on, but I didn't ever see that on my stream, and neither did lots of other people. So maybe it's just something to do with the way, something to do with where you are, that these things are showing up on your screen. Anyway, long story short, if you don't know what I'm talking about, that's funny. I'm those who do, congratulations. My favourite time of the week, lunch on Tradespotting Tuesday. Well, hey, Thursday's also good. David B. Tradespotting, lower the opacity for GME symbol name would help reduce clutter. The opacity for the symbol name. Where have I got the symbol name on here? Then symbol name, reduce the opacity for the single name, reduce clutter. That seems like a perfectly articulate sentence. What's wrong with me that I don't understand it? Opacity of the symbol name. Oh, you mean here at the back? This stupid thing. Aye. No bother. There you go. Opacity 0. It's gone. And we've got black and we've got red and we've got green. There's other things you can do. You can make these like different reds and greens. Whatever. I mean, jeez. Yeah, thanks very much for that. Yeah, I've got rid of the GMA, slightly clearer now. If I could get rid of these things, I would. But as it happens, something's coming up there on 26th of May. We'd be happy for that earnings report. It may also, like, this is a good date. but that's not what I'm talking about right now. Well, I know what the cut was. I don't know. I didn't see it myself. Stefan. Hey, Stefan. How you doing? Vibarados. Alba Gubra. Yeah, check if you can. Buy, sell, share on different exchanges within your broker. I'm loving downward wedge lines from the peaks. As days go by, I can clearly see that shorters need to keep the price lower and lower and lower to prevent breakout. Yeah, that's another aspect of it, right? See when they push the prices lower and lower and lower and lower and lower. All you need to do is to break past one of these. Not only have you broken a horizontal, you'll have broken this supposed diagonal, and then the next level to go to is like a huge jump, which is why my targets on the upside are 200 then 279, you know, rather than 217 or 231, you know, like. Anyway, well, when the price gets here and goes there, you can judge the value of my TA. No point in me bigging it up now before it's happened. Just wait and see, folks. So that was that. I got distracted by chat again. Tradespotting doesn't need to go away. Good to see what chart you are on. Maybe just reduce availability. Oh right, okay, yeah. Well, if you see, can you see this here? This symbol up here will tell you what I'm on. If you can see it, can you see that? What Streamlabs? EMA? No, you can't. I'll tell you what. Tiny wee bit smaller. Oh, is that the old chat? Oh, that's the chat box. Oh my god, I've got the chat box here. Do you want the chat box on screen? You can see the chat box yourselves. Like, it's better when I'm streaming something that. I'll just move this off. Sorry, pardon me, people. Just move this off just now. You can see the chat box yourselves because YouTube are quite good at showing it to us. Thank you very much, YouTube. Make this bigger. Sorry for this, folks. Right, so you see in the top left there, you can see the symbol. It's tiny, GME. The next one you'll see, it'll be AMC. I'm not sure if we'll cover anything else. People don't generally people don't tend to suggest tickers for me to look at, which is fine because I'm not doing all that intense TA so far enough. Anyway, I've only got run down the horizontal support and resistance. I need to dive into this some more. And I would have started on the 2-day if I knew what I was at. Sorry. Anyway, it's all the same. So this is the level I'm looking for an entry at. This is the level I'm looking to test next on the top side. And if we break it, I think we'll go here. Why do I think that? Well, let's look at the strength of trend. We can see that. Some people would tell you this is rolling over. When you look at something quote unquote rolling over, you're actually looking at the tops, and at the minute that doesn't look like a roll to me. It looks much more violent and less reliable. This rolling is actually a steady increase with higher lows. So not yet could you say this looks like it's rolling over. You'd have to see this below here, and then a bounce, and then another lower low, and then you'd say that's rolling over. But it's not yet doing that. So there we are. This is the 55 EMA. I'd expect a bounce on that if we reach it. As you can see on the daily time frame, it's at 120. So what have we learned from looking at the 2-day time frame? From looking at the 2-day time frame, I could draw up here, but we can all remember, okay, there is a reason for the prices to bounce at 120 on the 2-day time frame, and that reason is that there is the 55 exponential moving average, which on many people's edge that they use to trade is an important factor to determine if you're going to enter a trade. If the prices reach this, you can expect a bounce. If we have confluence on other indicators, which we're about to check in a minute, then the reliability of that scenario increases. So we're going to look down at this RSI. This is a rocky outcrop RSI with the EMA on top of it, and the colours change as and when it goes over and above it, so it makes it easier for us to follow. We can see that this is the centre line on the 2-day. We touched it once, we touched it twice, now we're below it. That's accumulating around support of this area, but it's broken down below the center line but not below here from before, which is an important area because you can see that we also tested it here on this breakup. So having noticed that, you could expect a retest of this on this indicator. The time that happened first was here. There you can see it got slightly lower, but the price didn't. So it could be considered bearish, and yet we haven't got lower than it yet still over here. Okay, so RSI, that bounce, this is negative. That's negative, right? This is consider this a retest of this. It didn't work. It broke then below the center line. That's negative. We could perhaps anticipate that this might drop down to its next support level in and around here, but if it gets here, why would it not just go down and test this zone here? So on 2-day, we could say that RSI has put on a higher high, a lower high, debatable what that is, potentially a lower low, but not lower than here, which is matched with the price. So period of flux, maybe the things will accumulate around here, could expect a little bit more to go, but we're not getting a lot of information off this other than the fact that it could still have a bit to go because it's failed the test here. Not particularly positive, it's only one indicator, it's an important one. On the daily, it's the same picture, only you can see that we've already broken below the support line on RSI. We'd already done that, so maybe that's not a great departure, what we've seen in the 2-day. Maybe that isn't a big departure from current behaviors. That's the what is this? Does this, would it work as, would this work as, certainly does have those peaks, and the psychology would follow along with it. This is perfectly normal. We'd expect to see this here, and we'd expect to see a bounce here on the daily. So that suggests we've still got a bit to go. The daily confirms with the 2-day. Let's get off the, oops, sorry, I'll undo that. Thanks very much for everybody bearing with me. I know that this could be a little bit more slick, and it will be, thanks to everybody's support very much. Thank you for the support and motivation to keep getting things better. So then we'll go down to, we're still on daily, and look at the time frame. We can see that we've still not put in, obviously this is today's price action, right? The fact that it's a green candle at the minute is neither here nor there. We want to be looking for its close to be above 140. That would be incredibly bullish. If we manage to come back up here and close out this day up above 140, I don't expect that to happen, then you'd be looking at something maybe going kind of crazy, right? That's slightly counter to the current behavior, so that would be positive. Also below the 55, and we're above the 200 on the daily time frame. When you price makes it to these levels, it tends to play between them, which we could probably confirm quite quickly. We can't because of the nature of GME since the breakout, but as you can see, we've been above the 55 for a long time. When we are above it, very positive, and we drop below it, doesn't last for long. This is the, oops, what did I just do there? This is the first time since any of the squeeze narrative started that we have the second time we've had opening closes below the 55. On the previous occasion when it happened, across there, on the previous occasion when it happened, we never even reached the 200, right? A lot of people would have been hoping for a test here. A lot of people that were short through all of this will have not closed their positions because they'll have been waiting for this, and then they got caught. They got caught here. This was a bear trap. Right, and how could you have anticipated that this was a bear trap? Right, well, we had an open and a close below the 55. What happened then? Absolutely nothing, eh? There was like no follow through. There was nothing in terms of selling pressure. This was just people not buying. We know that because we weren't able to. Then we were able to. And we wanted to. And nobody really wanted to short it, even though they only needed to get to here. This is the thing, right? You're afraid to push it. If you're afraid, that is a very good signal. They should have pushed that here. They didn't. That was a very big signal. Anyway, the point being, this is a bear trap, and we caught them. Is this the same thing? Is it, guys? Is this a bear trap? Is this the sort of thing that people jump in onto short, thinking we're going to go back down to here, but instead it's like a strong accumulation period here? If this breaks here, people will be going short, and they'll be targeting here. So that's true too. It could be that people let the price go a little bit. I didn't bet on it. I wouldn't anticipate that. So if something like this happens, would I be worried? Well, no, but it would mark a departure from what I've been looking at in terms of TA. The market structure would be broken if we break below 120. If it does, I expect us to go to the 85. A lot of people will be expecting that though, and so it could be another bear trap. But yeah, 120 retest still seems to be on the card from what we've looked at so far. This is a lower low so far, so we'll have to hope that today recovers. It'll be very positive if it didn't. If it doesn't, that's fine. Because we're not letting that much, and I'm not looking at that many indicators, I'm going to go down to the 12 hour and see if there's anything different. No, you see, that's a higher low in 12 hour from here. This is like the low I'm going on. This obviously isn't, right? Because between this low and this low, there was no higher high. So that's not a new low. Here was the higher high. Here's a new low. It's still higher than here, right? So this is a higher low. So that's positive. Then you confirm that with the indicators, and you can see that there's a degree of bullishness about even the selling pressure here. So that's it. I'm only looking at that for 12 hour. I'm only looking at that for that particular information. But actually, because we're here, no, we'll go back to the daily and we'll put on Del. Is it here in my favorites list? No. Parabolic LCR. Right, like, so this is one of the things I wanted to show you. It is, I suspected it would be as such, and it is. Okay. Right, so this is the way this thing works. It gives a lot of false signals, so you have to be careful with it, but it does help you identify trend. We have crossed below these dots, or we have to close below that, below the one that would have anticipated it being here based on this median and where it draws them, and it's closed below it, so then they flick to the top. So then we're looking at prices under pressure to come down some more. Where can we see this having happened before, so I can show you what happens? Like, well, we broke it here, huge drop, tested 55, back up again. We're still in a downtrend though, because we never put in a higher close since this trend started. Down, but flicked over it here, the 55 again supporting us. Now below it again. Right, so it's hard to give good examples of this because, as I say, we're in this uptrend, and so identifying when that has ultimately broken on this with this indicator has shown us that, like, okay, right, flick to the top here. We were underneath it. It was until such times as we reached it and prices went beyond it. So, like, then it did the same thing here. Okay. Right, so I mean, this indicator is best used with others in order to determine when the trend is broken. And one of the things you can say about it is that we were in a downtrend from here, and we were putting in markers above us, and prices did make it below the 55, and yet they still didn't drop to the 200 or below. So you're above the 200. It's very hard to go short. If you're a small fish swimming with the big whales and you're using these indicators for those purposes, you use this parabolic SAR in combination with this 200 moving average on whatever time frame you're on, and you say once we drop below the 200 and we've broken through the dots, then you'd go short until such times it's perhaps a good place to buy. Then you go and look at other, it's like, so for example, if the 200, some people would go in the 55, you know, like a lot of people would change this 55, they'd say 50. Other people use different details, and that changes obviously where it is. We've broken below that, that's 200. I expect us to play between this level of support and the 55, which will again take us to closing above these, not break that obviously. This is up as it is, right? Okay. So we're not really getting all that much from the parabolic SAR in the daily time frame, especially because we're not using anything in combination with it that's helpful. And because we're in a period of flux, it's not really determining much for us. Although, one of the things that I did want to get this up for was to say how we could use it in the squeeze, right? So during the squeeze, you'll be looking at things and people will say, well, there's this common phrase of how do you, like, are you going to sell on the way down, right? The reason you want to sell on the way down is because if you're selling on the way up, you don't know where the top is, right? And you might say, like somebody asked earlier, is $1,000 unrealistic? It's like, it's just perfectly realistic in my impression. It's inevitable. And so you might think, wow, it's got to $1,000, sell, right? And then the price, say, let's just say the price goes to $1 million, right? You'd probably feel stupid. You could have done 1,000x on a position you'd already got in, you had zero risk on. So why would you want to sell it, right? Well, you're sticking to your plan. Fair play. I appreciate that. I respect that. But that's not very ambitious. But okay. So you want to sell on the way down, but if you're selling on the way up, you will also have like areas where you want to manage your risk and where you want to live your life. So I understand too, and I sympathise if you're taking a tiny bit of profit at different areas. Completely understand. But you want to sell on the way down. How do you define that you're on the way down, right? Well, let's imagine that this is a squeeze. It is a squeeze. Let's imagine this is the MOAS, and like, you know, ignore the numbers on the left here. Pardon me. To say you're on the way down, you have to have had two peaks. The second peak has to have been lower than the first peak and or higher, but showing strength of weakness. Um, Ideally, when you're selling on the way down, you still get the best possible price. And the way you do that, know you're on the way down, but still get out at the best possible price, is by using TA. And the TA you'd use compares peaks between each other. So let's compare these two particular. Let's draw this on as if it would have been. Oh, I can't use SAR if I fake it. Right, okay. Say this is the first peak and this is the second peak. You would look between them and you'd say, does this look weaker than here? You know, does this suggest that we're in a downtrend? This particular one says, you know, the RSI didn't make it higher, so you can't say there's bullish divergence. So you could say this would be a natural turnaround point if it does go down. Then you'd look to this point and say, is it lower, is it higher? And you say, nope, it's higher, and go up again. Some people would say, oh, look, it's not, and they'd sell here and they'd sell here, and they'd definitely end up worried here. But like, how do you max your profits here? Like this doesn't work unless the second peak's higher, right? So the second peak's higher, but that doesn't mean that you sell on the second peak. And then, God, I've lost my paintbrush. It's not fair. So then this peak happens, and then there's a third peak, right? And you'd look between this one, and then you'd hope to sell either here or on the way down from this one. And it would depend if there was divergences, right? So you're looking at this and you say, this price got higher, and we're in an uptrend, but the RSI, or whatever indicator you happen to be using, didn't make it as high as this, right? So the buying strength that pushed the price up here was not as strong as the previous buying strength that only got us here. So you'd say that means the buyers are giving up. They've ran out of ammo, and then it's very easy for the weight of the thing to push itself down again. And when you see this happening, you'd see this turnaround, and when this turned here, there would be a turn here, and a lot of people would like say to themselves, oh well, I want to sell out, so I want to get out here. But that's not how it works. Selling on the way down, selling on the way down means you don't get the peak, right? You're using the peak to get the best value later. So you look between these two highs and you'd say, that looks like we may have peaked. In fact, there's three peaks there, and this second one that we're looking at is not as strong as the first one. There is bearish divergence. Those people buying the stock to get us here have died off. They've run out of money, and it's unlikely if they've run out of money here, they're going to have more money here, right? Unless they're selling, and they're not, they're buying. So don't price comes down, then the price will go up again, right? It'll reach a level of inflection where it has to turn up. And either you sell here and maximize profits and do very well, or you sell here when this peak drops below the height of the previous one. And that, how do you identify that as being the place to buy at? Well, this indicator that I'm trying to use, but I can't because this price wasn't higher, so it's not really performed very well. And I should have just gone to a different asset and done this, but I didn't think of it until there. So anyway, this is what we're putting up with my crap drawings. You would see there'll be inflection points, like for example, boom, boom, boom. These levels, when this peak comes in, this would be higher than this too, and this price will drop below it, at which point you'll have a sell signal, and you'll be able to exit knowing that you've done the best you possibly can with this move. If you sell here, right, or say like anywhere in and around this, you're leaving lots of money on the table, right, because the price could go up much higher. There's another 50% off of that. And if we're talking about, you know, the difference between 500,000 and $750,000 per share, or $1 million and 3 million, or sorry, 50%, so 1.5 million, or 2 million to 3 million. This is a significant difference, and you're not going to want to sell it on the way up. You're going to want to sell it on the way down and get more money than the person who sold on the way up because they didn't know where the top was. And neither do you, but you're realistic enough to say that you don't know the future, and you're going to work a rate on the information you've been given. So at that point, you look at this peak, this second peak, you compare it to this first peak, you look at these divergences. You'd want this to see this not as high, yet this higher, right? Obviously this didn't happen because this wasn't a bad, this isn't the end of the world. This is actually quite good. But if this was peaking and the prices were higher, then you'd look between two peaks, and then on the subsequent retrace or the recovery from that move, you would then exit, and you'd probably get that price twice. And that price would probably be in around this level. And if I was going to do this properly, and I will do it on another day, probably Thursday, what I'll do is I'll show you the peak of Bitcoin in 2017. And we'll talk about how you could have used the same indicators to make the decision I made then, which we'll all hopefully make with GME. And I'll conclude this with a little bit more degree of panache and professional presentation. I apologise very much for how naff that looks. Anyway, yeah, so that takes me away from what I was trying to do TA. Why am I so distracted? Anyway, right, down to the 4 hour time frame, getting rid of the parabolic SAR from now, and I'm going to put the MACD back on because I rely on these sorts of information. So 4 hour, we could already determine, like, what is it? Prices just stopped or something. Made it back to 145, that's very positive. Right, that's the lower low than here on the 4 hour. So a close below the previous level of support on the 4 hour time frame is significant. So although the prices have recovered, I still feel like we're going down because we made this is a distinct difference. And when I say down, I only mean to the low of this candle. On a close, it could of course wick lower, right? You could expect to see something. We could potentially wick lower and then recover above this 200. So there's another period of confluence. We talked about how on the 2-day the 55 came in at around 120, and when you're down on the 4 hour, you can see that the 200 comes around at 120. So there's two different reasons why people that trade different timelines and use different indicators will be entering at the same price. The third reason is because a lot of people trade horizontal resistance, not the trend. And there's another good reason to enter that price. So a lot of people will be entering there. What effect does that have? Well, people like me on YouTube or other people looking at these things will be saying that to you or to themselves, and they'll not be buying it here because of that, right? They'll be thinking, well, yeah, I know I could buy it here and I do believe it's going up, but I kind of like getting things cheap, so I'll put my orders in there, around 120, and that's what they'll be doing. Over here on the RSI, we can see that that's not lower. Prices are... So this is already displaying signs. It's hard to call this a downtrend. That's already displaying signs of hidden bullish divergence. It adds to the case to buy there. And let's look at the MACD because I haven't looked at it much today, especially not in the 4 hour. Whoa. Right. There's so many things you can do with the MACD. Obviously there's that, and that speaks for itself. There's that, right, and you can see this has ended and this is continuing, right? This would be our demand, this would be our supply. We can see that demand is winning despite the fact that price action doesn't seem to reflect that. We can see positive, right, that's very positive. Just make these slightly easier to see. Sorry, that's right. What did I want to do? I wanted to do that, and I wanted to do, actually just do that so it's even easier, and this one, that's even easier. Okay, so that's even easier to see, right? We'll zoom in even more so it's even easier to see. So this was positive. Crossing the signal line, crossing the MACD line below the center line while the price is above the 200 is a very positive sign, and it suggests that there's positive strength in the momentum. On the MACD, you know, it's immune to higher lows, lower highs, that sort of thing. And then we look across here, see that weakening momentum has come in time with a crossover, a retest, a positive move through the circle, a negative cross above the center line, but prices were above the 200 moving average, so it's not a sell. Goes down, another bounce, momentum. You might have hoped that was because we've reached a previous, yeah, that was because we were at support. Broke through that area, momentum increased again. So a lot of people will be saying, oh, like, I mean, some people that are going short will be hoping this is the start of a trend that goes like that on the histogram. That's what they'll be hoping. But in order for it to do that, it'll have to break this white line, which is a trend that's been set in place since the original recovery from the first move up. So that'll be very tough to do whether it's significant isn't really the point, because it's horizontal support and resistance, so we need to break, but rather than this a diagonal line on a MACD. But it will be tough to break, so whether it happens as a significant is a different question. So what does it really do? Well, it sets us up for another positive cross on the MACD. This is a 4 hour, so you can't really take trades off this exclusively, but when it comes round, we could expect it to maybe have a little bit of flux here, which will be this move we're talking about at the minute, right? This candle. I didn't mean that. I meant to go back here. So we can expect that, and perhaps it will go through it, and then we'll see a new period, a new pattern start emerging on this. But there is no real break to be seen. Down, positive, positive. So weakened momentum. So there's weakening momentum across the board, and like that's another bullish sign. Down to the 1 hour to look at that same indicator. Negative, negative, negative. Right. This is negative. This isn't good news. This being lower, being lower, being lower. You can see there's another trend on the go here. You can see that it's just steal this. Stupid, useless. Let's actually delete that one. I'll delete everything. No, well, just draw that line, and you can see potentially there's some sort of, I mean, that's obviously not great, but there's some sort of shape like that on the go, which is bullish, but those moves within it aren't. So we need to confirm this with some of our RSI, and we, Jesus, yes. Right. Yes. Okay, so that's, sorry. We're on the hourly time frame, we're looking at the MACD, and we can see that it looks as though there's some sort of a wedge forming there. This wedge on the MACD, different from wedges on price action. They don't necessarily translate into new highs and lows, but look at this, right? This is what you can expect the RSI to do on this, is you take it, like I was saying, you draw the pattern around it, then you draw it from the first touch of the bottom to the touch of the top, or vice versa, it's the same distance, and then you draw that from the breakout point. You can see that the RSI, this is why, you know, when I draw things on our side, I don't necessarily explain, like I might just draw something, like previously I've done stuff like, oh, I expected to do something like this, and then go up to here, and people will be like, why are you drawing that, Jamie? Well, it's because of this sort of thing on the go here. You just wouldn't see that green line, or sorry, that white line. So this is what I expect the MACD to do, something like this here. At the same time, I see the histogram will do something like that, possibly like that, and then end up here. And that's the 1 hour MACD, and confirming with what I expect to see in the 4 hour. Okay, fair enough, right? And then, like, ignoring that, we were looking at those things and we were saying, well, why is it that I just jumped to that conclusion? Well, I had looked at the RSI and saw these series of lower lows, and I saw this was a higher one in the middle, this is a lower one, but it's not confirmed closed underneath there. Is it on the hourly? Yeah. Has done, but not here. And what's this look like? Brutal. Right. Higher price junk. So I had to draw a horizontal line there. Yeah, I can't. Horizontal. So this is what we're looking for on the RSI. Should the price come down here, which is a very, very deep, steep lack of, like, that's an intense amount of selling pressure would be taken to push the RSI back down. It's on the 1 hour chat. So like these historical levels aren't really as important as like the daily ones and the 2 day and the weekly. But the RSI at around 12 is shit. You want to see it staying above 20, 19, 20, and you want to see it happening. What's like points over there? Oh, that's not terrible too. Right. So anyway, there's a degree of bullish momentum in this here, and if this confirms as a low, you could expect to see things do well. And seeing that in combination with the way that the price broke out of this wedge type shape, the psychology of it on their RSI, that would confirm that. I just don't know if that's going to end up being a close higher than 157 again, at which case I would still be expecting a retest of around here and more likely 120, even if we see a recovery to 156, right? So the hourly time frame, combination with everything else I've said, if I was just going to deliver, you know, piecemeal a little bit of information, the things that, so if you're the sort of person who was watching price action last week and getting excited, and then saw me say things like, guys, you know, don't buy here, buy at 120, and then when prices then started to turn around, you were like, I don't feel so bad, you know. I'm aware of the fact that some people are looking at this expecting it to come down, right? Well, now the same thing applies when the prices go up, right? Don't get too excited when you see us back up at 160. Even if we go there, boom, in like 5 minutes, we'll still expect to find resistance there. And I still expect to see a test of around 120. The psychology that other people might experience at the time is like, oh shit, we've broken support, that's bad. Oh, thank God, a retest, maybe we'll be okay. Oh shit, we failed again. And then they start crapping their pants. But there's no need for any of that. You can just see, well, if we get here, that's a great buy. If we don't, I've already got some GME. Congratulations. And if you don't, then maybe you'll have some EAMC, which has been doing fantastic. And that brings me to the 15-minute time frame where I'll say what I think is going to happen by the day's close, which is completely useless for everybody and is just the sort of thing that I do for a kudos. 610 concurrent viewers. This is fucking crazy. Pardon my language. And then, I mean, I say pardon my language if it offends you, but personally, I don't give a fuck. Anyway, then we go 100, we go 55, 200. This is negative for 15 minutes. You can see that there's been a negative cross. We can see that it was retested with the price here, that it failed. That was our previous support and resistance. We can see that at the time that was happening, that there was bearish divergence, and that was natural. We can see that it came down underneath that. That's providing resistance. We can see that we're below this area here, that's negative, and we retested it on this pullback and then dropped down again. That was the area to go short if you're an idiot. When I say idiot, you're smart, but you're a bastard. That was the area to do it. This is the area to get out, 133 on that particular trade. You wouldn't push it to 120. If you did be looking for it to break, it won't bomb. Yeah, so 15 minutes, same story. Might not even get there, right? Because we've got this here. This is an order where I've got, this is an area where I have one order at. One order for one share, I think. Just because it's an area of support, and you know, we have been seeing some bullish momentum on our oscillators, so it could quite easily revert from there. It might not get down to 120, but this is where I'd love to get some more. Even if prices go down back below it, I believe that this area will prove to be support over the higher time frames. It has already done so, you know, 4 isn't high, 2-day, daily, 2-day. You can see we had a close on the 2-day as well. Yeah, this being lower. See, when does this 2-day close? 17:07:57. 3-day. Like this is, so some people will say to you like, well, if the 2-day is more reliable than the 1-day, surely then the 3-day is more reliable still, right? And that's not untrue, but it's not exactly the way the logic works. Anyway, 142 there, that being that level. You see, you can't even get excited if you're short because we haven't even broken the 3-day support here, which although it's above where price has been for considerable periods of today's market, today's trading time period, who gives a flying shit, right? It's about where participants bring it to a close. And I know personally that the way to play this, if you're an ape, is to buy at day's end, right? That there's loads of reasons for that. But one of them is to fuck with people, right? And it's a very good reason, right? It's one of the few things we can do to counter all of the things that they do to fuck with us. Anyway, yeah, so where we bring it to a close at the end of the day is important. And if at the end of the 3-day time period, where do I find where this is a countdown on the 3-day is? It's Monday, so let's say that that's not happening. And see the 2-day Tampoco. Yeah, so anyway, there's little we can tell on those time frames, especially on the weekly at the minute. With this particular move, this is one of the things that people who are very negative about, like people that don't talk to me on YouTube, who don't necessarily watch YouTube, certainly when they're not watching trading things, they do this for a job, and they talk to me about GME, and they think, Jamie, why are you in this? You know, just looking at the TA on the longer time frames, which is what most people, sensible people, spend more time looking at, despite the fact that it doesn't move as fast. They'd be looking at this and they say lower highs, they'd say no significant higher lows yet, and they'd say, look, why was this not higher? This is a downtrend. They wouldn't count that as much. They'd be looking for another low coming in here, and they've got a point on the weekly, you know. But the weekly time frame isn't something that us apes are trading, right? It isn't. Let's face it. If you're looking at an asset that's in a, let's say, an uptrend, right? And I mean an uptrend for 5 years, and then you're looking at the weekly picture of that thing. This doesn't even look bad, right? This doesn't look bad. There's no lower lows, right? This is obviously still a period of accumulation. It doesn't look bad at all. Actually, fuck those guys. I can't be bothered having this conversation on live. I have to have it with them at the best of times. Anyway, so yeah, the 140. It could recover above there. That'd be great. It could even get up as high as 156, but I'd still be expecting some sort of a wick down at 120. It might even candle close down there on a 2 or 3 day timeline. And we got. Why did we go there? We're confirming something from the 15 minutes. Yeah. We don't think this is a significant recovery. We think this is just a trick, and we think we're going to go down a bit more. Right, so that's that. That's looking at. What do I expect to happen at the end of the day? I expect at some point this week prices to test 120. I expect they'll bounce between there and 158 until we see a break of the market structure. That would be a move below either of those two areas. It's quite obvious to me that everyone and their donkey is going to want to buy in at 120. People have been waiting for an entry for a while. May well be that we wick below that and recover the 200 on the daily time frame. Was that what it was on the daily? The 200. Pretty sure it was. Anyway, there's the daily, but I don't see there it is. 86. That's not. It's on the 4 hour. Yeah, expect that we'll see that. Expect to see a daily close below 117.18. I don't expect to see that. Could easily see a wick down to even 86, and that wouldn't worry me too much. Although a lot of people would be shitting a brick here, or any break below 120, especially with the amount of times I've said it in today's stream. But I wouldn't worry until such time as we break below that. And I'd have, if I was trading that and I was on leverage and I was managing my risk, I would put a stop in just below there, on the chance that if I was going to enter that trade, it would be much better taking it from $40 again, right? Anyway, whoops, didn't mean that fib, an unnecessary fib. Yeah, so this is the point that people will be worried about, this is a lower than this. Is that what real traders care about? No, it isn't. In fact, real traders are looking for a test of this 200 to buy in again. So that's that. That's your TA. I mean, we'll give it a better look on Thursday, because then we'll have an idea of where the week is going to close. And the narrative that I have to dismiss when I'm talking to my former colleagues and so on is very much in play now. Jamie, is this going to be a lower low on the weekly? And that's not a low, right? This is the low, so it's not, but is this trend at this point in time going to continue, and what will we've got to see that turn around? We'll analyze that more on Thursday. I'm going to take a 5 2. No, I'm not going to take a break. I'm going to check with Rocky if he's prepared to have a look at things, and I'm going to read the chat while I do that and catch up with everybody. What have I missed that's important? I'm going to quickly look. Organ Pipe is super chatted $5. My favourite time of the week, lunchtime Tradespotting. Thanks very much for the donation. Didn't see that coming when you said it. Thank you very much. D Blake super chatted for 9. I have 7k of Leap. Oh, right. First 22 GME now at 90. Whoa, fuck. A Leap's a good idea on Gme Amc. Yeah. I mean, it's all about the timing of these things. Are they a good idea? They're a fantastic idea if you get the timing right. D. Blake, have I seen you chatting before? Where did that comment come in? Is that... we could look at that. Let's take a look at all of that sort of stuff, and the option, the strike prices and the activity around certain strike prices tomorrow. Oh, my webcam has definitely died. There's Rocky there. Oh, brilliant. Hey.
I can use this camera for a wee bit. I'm going to do the wee.
All right, is that on?
It should be. Check, just unhide it and see if it shows up.
Where is webcam? Video capture. Unhide. Is that it there? But it's not hidden though. No, it never was hidden. Window capture. That's window capture. I need video capture, which is here. There it is. Hidden. Oh, look at that! I'm back, folks. So you've got a brief. Sheesh. And I was messing my head up in the meantime, and I had looked reasonably smart today, but I thought the camera had gone, and I thought that was it, game over. So here I am. This is a wardrobe. This is me. There's a microphone. Right, 566. I saw that just drop down 20 viewers in front of my eyes. Right, so what did we cover there? We were looking at some of the things from chat. I'm back. I should invert that so it looks like I'm looking at the charts, but who can be bothered? Anything you can tell about the 15th of the 3rd? Oh, right, is this, you're looking at strike prices again, options activity. The 15th, the 13th of the 5th, the 16th of the 5th are very interesting dates. A couple of reasons. Maybe cover that on Thursday. So is the 26th. Zeno, I got fucked over on the contract rollover on oil back then. Oh, yeah, that was, oh my God. Yeah, we don't want to remember about the losses that were incurred on that particular day. I have volume on max, I can hear well, but definitely have to remember to turn it down after. Okay, right, so thanks, that's useful information. Part of the reason for that is because I'm not used to this microphone, right? You know how Joe Rogan's always telling people, like, can you just hold it closer to your face? He's saying it every 2 seconds. It's because it's very hard to remember, until you're used to it. I'm sure when I'm talking in it like this, people can hear me better, and I'm sorry if I'm ruining everybody's audio and I keep changing it. Left tag by price. Or is it beyond the bounds of what we can obtain? I'm not sure what people are talking about, but I hope you're helping each other. Akira, I don't hit the like button for one reason. That is important info and a safe place to learn. YouTube is going to remove channels if they know we exist. Definitely hit the like button. There's other ways that I'll be able to deliver this information if they hate me on the owl jobs. But yes, don't think about it too much. Don't double think. Don't get caught in double think. Smash the like button. Headbutt the like button. Kiss the like button. Slowly caress the like button. And then take your mouse and cursor over to the share button. And then say copy link and go WhatsApp. And then send it to all your friends. Especially your friends who like money. Well, Akira said, oh no, that means loads of people. Well, I know alternatively, right? What you could do is you could downvote me, and then YouTube would think, hey, this guy's crap. We've got no need to worry about him fucking the system. He's crap. But don't do that. Anyway, what was I doing? I was actually coming over to read the chat, so that was quite funny, but I definitely think that good publicity would help get other people in. I don't think YouTube are going to cancel me for that, although I have seen that people have... Anyway, long story short, don't double think. Just share it. Share it is what matters. If you wanted the channel to do well, share it. Likes help, right? Because YouTube's got an algorithm that... But you're all watching, and your watch time is more important than clicking likes. So thanks very much. Like the watch time is really important compared to likes. And so that likes not too important. But if they see you watching it for ages, they don't determine what the content's about or that. And there isn't an agenda against this from YouTubes. If anything, they'd love that, right? So likes and shares really help. Thanks very much. And this is the thing. Like, I don't want to ask you to do things like, oh, please, can you do this for me? Partly because I'm like the dynamic of me asking you to do something isn't actually necessarily going to benefit me. It's just so that the channel gets out there more. Like, that sounds retarded because that benefits me. Shouldn't have said that word. But anyway, that benefits me. But that isn't why I'm saying it. It's like so the content gets out there so that more people see it, right? And then it'll add to the overall body of stuff that's there, and certain parts of this TA really good. I mean, I don't know if I'm articulating my thoughts. I never do at the time, but there's quite good TA, and it adds to the overall body of stuff that's there, certainly has a place. AMC, please, coming up, don't worry. Thanks. I would never have known this guy funny, bro. I'm not sure who's funny. Maybe it's me, maybe not, but I'll definitely try to be nice. Am I funny? But even if squeezes doesn't happen, GME going to be over 2k a share in 1 to 3 years. Yeah, I'd agree with that. I would say 1 to 3, 2k a share. Yeah, I mean, like, well, 1 to 3 years, right? Stefan's got like a reasonable, like, that's such a good perspective to have, right? Like, it's going to take years, and those that might be 1, might be 3, and then you can relax, right? And if anything the good that happens in the meantime, fair play, all the power to us. AMC, yes. Coming from VIP Andy and YouTube. Thanks very much. Andy's a legend. Miss you, Andy. Speaking up this morning, good guy. Maxman 222, relax, lean back, and train patience. Good exercise. Definitely. Training patience. Rare quality. Very important. Whoa, man. Whoa, chill, Maxman. Don't know what Maxman did, don't know if chill or not, no idea. AMC, let's move on to the next one in your subject. 2 hours on GME, love you, man. Oh, Jesus, has it been 2 hours? Ah, fuck, I'm so sorry, everybody. Oh, here's Rocky. Excellent. Have a look at AMC. Welcome to. So I'll give a quick introduction to Rocky. Everybody here knows who he is, probably. If you don't, he's my brother. He also does YouTube. He inspired me to start my channel. I worked with him at the bank. Subsequently, we left and started many companies together. We've really good relationship. We interact well, and I think the viewers who appreciate my content will really appreciate Rocky's. He's got more experience of AMC than me. He's got a position in it, and he has done some tea on it recently. So I'm going to let him sit down now. I'm going to say thanks very much to absolutely everybody who tuned in. You all mean the world to me. Yeah, it's certainly not a. So I'll come back in 15 minutes and I'll go over a summary of the TA that I've done. I'll happy to look at any tickers anyone else wants to. We'll have a bit of a chat and we'll talk about things. In the meantime, without further ado, AMC and Rocky. Here you go, everybody. See you soon, folks.
Great. Hello, my friends. Hello, everybody. And can I get a big round of applause for Tradespotting? Wow, the one and only. Talk about standing on the shoulders of giants, hey? Standing on the shoulders of silverback giants. Am I right, ladies and gentlemen? I know some of you have all been waiting for a wee while for some AMC technical analysis, so hit like if you're holding AMC. I'm holding AMC, but I've already hit like, so I'll not hit it twice. I hope you're all doing very, 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 very well. Good to see you out there in the chat. We've got lots of people out here that are good friends of all of ours in the community. Like to see the likes of Drew's Tech saying hello to me in there, for instance, and everybody that I've been chatting to. Of course, I'm here chatting to all of you right now, so I'll not be able to be in the chat while I'm here. You know, can't be two places at once, and that's what a lot of people are thinking when it comes to this AMC chat, right? Am I right? A lot of people are thinking right now you can't be in two places at once. I see Ape Andy, for instance, talking about how there's this one tactic that the hedge funds could use to try and get out of their positions right now, and that's to try and get everybody to get dead excited about AMC and ditch their GME. I've heard the discussions about this, ladies and gentlemen, but there is, of course, a catch to that plan. The shorting hedge funds are not necessarily paying close enough attention to, and that, as the wonderful Ape Andy said, is it only works if people don't know about it. Am I right, ladies and gentlemen? Well, anyway, here we have the charts. It's funny to be on somebody else's chart for once. This is Jamie's chart here. So he's obviously got TA on here, which is not my own. How wonderful is that? That gives me a chance to kind of destroy his chart when he's not looking. Don't tell anybody, and don't tell anyone. Just kidding. So what are these lines here? They're just sort of horizontal support and resistance lines. Tell you what, I'm going to do I'm going to do this. I'm going to hit the destroy button. Oh my goodness, just destroyed everything. So couple of little things, I suppose. Since this isn't my own chart, then I can familiarize myself with it quite quickly. Obviously, we've got the MACD down the bottom of this here. That's the moving average convergence divergence. And we have the RSI here. That's my own RSI. Recognize that bad boy, absolutely. When I use the MACD, I tend to not really use the old lines on it, the crossing over lines there so much, but there we go. Oh, and of course there's indicators there as well. Thanks, Jamie. Show me how to add my own indicators to the chart. Well, you know, you'd think I'd have enough wrinkles on the old cerebral cortex to have known that myself. Hey. Well, great. Nice one. Let me just stick on the DMI here as well. And maybe I'll adjust this. You know, people who watch my channel know that I'm not a massive fan of the MACD signal line overall here, and that I prefer to just simply use this to look out for divergence. And I do that using the histogram, which means I don't need these two lines on here. All right. However, I'm going to leave it on here to not mess with Jimmy's chart too much. I will point out, pardon? Fuck it up if you want, says Jimmy. There we go. So, Divide and Conquer says, who was this? Ultimate Strife. Yes, Ultimate Strife. Let's bring some Ultimate Strife by Dividing and Conquering. By the way, Divide and Conquer is one of those phrases that comes from, you know, that body of knowledge that we have from war, okay, from back in the day, and it's maybe would actually serve you quite well out there, if you haven't already, to read The Art of War and to understand its concepts and apply them to trading. There's many good analogies to be used here in trading. For instance, you know, pick your battleground, make the enemy fight you where you want to fight them, and in that sense, what's your best entry, etc., going to be on this bad one? Is this the battleground workaround of our choosing. And looking at the MACD just here and seeing that it's coming in for the potential for a cross, you would be, inclined to say perhaps not, now that we've had a big rise up in the prices. Okay, and that we haven't taken out this previous area just here. That's messed up this moving average convergence divergence ever so slightly for us. And I want to remove this. I'm going to remove it because I don't want to be given overall what could be a false signal in terms of a cross just here, for instance. Right now, what does he mean by that, Rocky? Well, personally, I wouldn't be wanting to go short on AMC anyway. We all know this for the whole ape community stuff anyway right now. But if you were looking to try and do that, if that was your, right, know your enemy. Again, another thing from the old Art of War, know your enemy. What is the enemy thinking here with regards to shorting this, and what would be the best place to do it? And you can see there where I've left the mouse on the screen, providing that crosshair serrated white line going horizontal across the screen there, that I'm showing us an area of course, support on the prices, which is represented with a few different touches of that line. Just looking at it real easy here, you can see, of course, we came in and touched it very recently just there, and of course we touched it here and we touched it back over here again. I then would like to say to people that, you're not really looking at this with any degree of negativity until the prices have dropped down below that 825 area. People are asking me, therefore, what's your best buy price on AMC? And the best buy price comes in at around about $9 currently. Now, that, of course, is not exactly, within spitting distance when we see the prices are at $9.95. You'd be looking at a more than 10% drop off to get down there. Well, actually, to be honest with you, my price point was more closer to $9.05 probably than $9 itself. So yeah, it wouldn't necessarily be that full 10% you'd be looking for to drop off, but that would be where you'd be looking for. What's the reasoning for that? And is it visible here in the 24-hour time frame? And it's not really properly visible, to be honest with you. There's a few things though that I would like to point out. This is actually the weekly time frame, sorry. A few things on this weekly time frame that I would like to point out. Right, okay, first off, this cross that could have been coming in, it can be coming in, might just actually happen here in the moving average convergence divergence, would be considered in a sense a sell signal. But there's a couple of things working against that. We have the increase in, of course, momentum and strength in terms of the histogram just here. And looking at the DMI down below, we can see that the positive DM is up in the high regions. Now, it is actually managing to persevere above the 40 line just here as the ADX remains in a position of strength. I actually would like to see this thing fly up and get another test off the top end of it. Now, we're not seeing this having happened very often, and that's because highly volatile, extremely hard trending markets that really put all of the shorting hedge funds through the butcher's treadmill actually it's not that common here in traditional land for us to see that sort of thing happen, but you can see it happen in other stocks and shares, etc. out there. How about I just bring up one to show people, for instance, from the land of crypto. Now, of course, I'm not here advocating for crypto. I'm here on Jamie's channel to talk about AMC, but I would like to show people, how you get these effects happening with the DMI. Here's Doge, and you'll have all heard of Doge. It's Elon's favorite meme coin at the moment. And of course, as you can see here with the DMI pushing up towards the 50 area, which is of course an area that I would look for in terms of the 60 area, in terms of a turnaround. We did see that we got pullbacks. Now, these pullbacks were quite horrific actually as it happened, but we went on to make higher and higher highs throughout it. Now, that's kind of what I'm intimating with regards to the price action with AMC, kind of looking at it around about this sort of a region where we came up towards that 60 zone, and then it looked like things could be backing off a little bit, but we actually went on higher up after all. I wonder what the MACD histogram lines looked like at the time. Going back here, I'm gonna have to stretch this out a bit because obviously the relative difference is huge here. But if I go back over here, yes, exactly. So I was kind of trying to point out there with the AMC chart that while the MACD might be coming in to show us something like we're seeing just here, as we saw this diminishment in the strength after having had a high rise up in prices, that really, what we're looking for is to see if we can actually have a healthy pullback and then continue on up the way. So that's in terms of sort of, if you like, managing your supply lines, choosing your own battlegrounds, etc., from the old Art of War, and knowing your enemy as well kicks in here. And to say that would they have the confidence to actually take a massive position based off of a cross just here, then we have to acknowledge that really, they know the hubris of diving into events like that too quickly, and when in the face of bullish price action. Diving back over therefore to AMC and seeing then what we can see with regards to how we could see the prices come towards that $9 area. Now, here we go. By the way, I'm just getting all of this stuff where we talk about the negative potential out of the way early on here so that I can, kind of go on to talk about the positive stuff, having done my due diligence, if you like, along the way. Before getting drawn into talking about that $1.69 million target, too rapidly or anything like that. I'm just going to check in with the chat as well and make sure everybody's doing all right out there. I just want to give a shout out to the likes of Arika, who has recently subscribed to my own channel, for instance. It's shilling my own channel. Forgive me. Xeno Swarm, good chat with him in there about oil and the likes in the chit chat. Stefan, excellent to see you here as well, and all of you good people out there. And again, just one last request, if you wouldn't mind hitting that like button to help out the old brother's stream here, that would be fantastic. Stefan S is saying right now, remember everybody, Michael J. Burry says that GME will squeeze, but like the 2008 crash, he was 2 years early. He made the 2008 prediction in 2006, took 2 years to be correct. Well, that is actually the modus operandi of hedge funds normally as well. They look at things in terms of, having a portfolio, which they try and balance their risk against one another, and they actually need, to kind of try and anticipate things very much early and then really drive it the full way for success. Now, what we have had the opportunity to do is, in terms of this stock, identify the opportunity to actually find a bottom on it, having seen the prices drop down over the period of the last 6 and a bit years really on here. So anyway, the weekly chart isn't actually giving us the identification of prices that we maybe would want to look to. There could be a couple of things that we want to see. What numbers are Jimmy using here? I'm going to stick on the 21 EMA here to make a couple of broad points really. If you are looking at this from a weekly perspective, though, and you're looking for where you could be coming in for a bounce, etc., if the prices came down towards the 21 EMA, that would be, of course, of absolutely no surprise. People may be out there in the world of traditional stocks, which should be very familiar with the 21 EMA, but something in terms of just standard out of the box indicators to give people an idea about the ranges that you could be looking at. One that people are very familiar with, of course, is the Bollinger Bands, and we can see that the baseline of the Bollinger Band is in here at the same area as that 21 EMA, more or less for most of the time, because that baseline, of course, is the 20 simple period moving average. Okay, so I just wanted to kind of demonstrate that to people, and also a couple of little rules about the Bollinger Bands. Whenever we break outside of the Bollinger Bands, there's actually a 95% chance that you will not see that follow through and that continuation whenever the prices are so far extended beyond them. That's quite a well-known statistic in the world of trading. That's to say that when we had this big move up the way towards $15, $20, etc., there was only actually a 5% statistical chance that things would actually continue on the way. It's kind of from that whole category of phrases of the bigger they are, the harder they fall, or, what goes up must come down. These sort of throwaway phrases from life, which are actually kind of fairly commonly true. Well, this is kind of one of them. And it's that what goes up must come down mentality. And it's part of the natural oscillations of markets. And as you can see here, everything's working along perfectly with regards to that. Breaking out of the just here and then coming back down towards the baseline is absolutely typical. Drawing that price action then, the sort of the detail out of it for you to see, you can see obviously then that we came back down towards the baseline, up towards the top area, traced it up a little bit, back towards the baseline, and now we're in an area where things are tightening up on the 24-hour time frame, which does open up an opportunity for a bit of volatility. Now, of course, I'm going to rely on the trend, and the trend at the meantime, and actually has been since March 2020, really, to be honest, is towards the upside, and I'm going to say that that's what we will actually revert to overall, but I'm waiting to see, of course, if any of that volatility pushes us down towards that $9 price point. So how could we get there? How could we get there, Rocky? I hear you kind of crying out from the cheap seats. Just kidding. We're all, of course, in first class over here. And what we could do is we could look at the current structure of the price action here. This is the 1 hour time frame, gives us enough to be able to make some assertions off of. And of course, what we were looking at yesterday with regards to AMC during my own live stream talking about this was the potential for the prices to be operating within a wedge right here. Now, this wedge has a couple of little caveats to go along with it. One thing that regular subscribers to my own show will know, that a little lesson that I like to drop out there for everybody frequently is, of course, that wedges, when they fail, what do? They become channels. And that's the question that I'm asking at the moment. Have we got a potentially sort of failed wedge, if you like, that's just simply going to be a channel towards the top side? And perhaps I'll even go as far as the 15-minute channel time frame to show that off. But as you can see here in the 1 hour time frame, this more or less looks like a wedge, and we can look down towards the lower end of it here and see that it's at around about 985, and at the top end it's about 1029, and that's the range, if you like, in terms of where we're trading at the minute that we can focus on. Then what could we look down to see, well, is this actually that failed wedge or not? Here's the 15-minute time frame, and just let me kind of line this up properly. This, of course, starts off with this low here on the 6th of May, and then we got second, third, and fourth lows potentially in here. Now, this section of the price action has this gap here as we had an impulse up the way, and it does kind of show you that this was a downward trend. And not only was this a downward trend, but this was at the culmination of a long period of downward price action that kicked in with a massive dose of bullish divergence at the lower end of it right here, as you can see. For instance, on my RSI just here, you've got the lows increasing as the lows here on the price action itself were increasing. There was getting lower as this was getting higher. That's bullish divergence. We see this kick in the way, and I'd then say, well, how about we kind of ignore this area of it just for discussing where we've been since, and look at these three peaks that we've had, because touches in terms of channels, you're looking for three wedges, any sort of pattern really. Three is your ideal sort of number to say you've got one, and then we can draw this in here and say, well, look, overall this is where we're at in terms of it being a channel. Again, the same sort of deal with the highs being more or less the same sort of place, and the lows coming down to 995 or so. When I saw the price action get this big pickup again here, where did the prices open up today? This was the opening of today in here as well. Yes, we had this massive drop down the way, and it came down towards this area where the gap is, and actually came just as far as we did before without actually filling it in properly. And then, of course, we spiked up towards the top side and put in highs today. So far, the highs of the day, in fact, in that first 15 minutes of the opening gambit of price action there on today's trading, and since then we've been operating within the range as set out by the true range of this candle here. The volatility within the first 15 minutes, kind of the first 15 minutes really setting us up for how we're going to operate throughout the day. What we're looking for here really is to see this continuation overall and to stay above the 21 EMA. If we see things dropping down, then yeah, looking down towards that 980, 989 area. Therefore, you might be considering to yourself, well, what did you buy, Rocky, if you were to buy it today? Normally I never talk about these things, but this is a little bit of fun. It's different. It's not my own personal channel, so I don't mind too much talking about how during this period of price action I actually bought bought some more AMC shares in here at around about the 970s region. Whenever the prices came down the way, came towards our previous area of support and resistance and bounced back up, I actually bought into that momentum towards the top side, and it was lovely to see it happen. And of course, I'm sitting pretty ever since. Everybody who wanted to join along with me did get a second bite of the cherry 45 minutes later as we came back down again towards that area, kind of reconfirming for me whenever I didn't kind of think, oh gosh, I was wrong. Then we went back up the way that was an okay position to have taken at that particular time. We are seeing a tightening of the RSI overall here, not managing to put in higher highs as we put in higher highs on the price action. The same way that we identified down here that we weren't putting in lower lows on the RSI during this phase here. We can see that we're not putting in higher highs on the RSI during this phase here. Likewise on the MACD down below as well. And actually as well, you can use the DMI here for divergence, and we can see that we're getting bearish divergence in this section here. And that ties in very nicely with the idea of it being a wedge again as well. So I actually am just going to pop this back and position it as a wedge, and therefore talk about the significance of this zone overall in here and what it could mean in terms of where the prices would be going next. So if they did actually push down towards the lower end of the Bollinger Band here in the 15-minute time frame, we're doing a few things at once. We're coming down towards where we saw our recent lows here at the 958, 960 region, 960, and then we would be challenging that, and it'd be 1, 2, 3 times a good in. Perhaps we could push down. This is what I would then consider to be fake out territory on any moves at the minute on this one. So I'm just going to pop this in here and say this line is obviously significant because this zone in this area, if I just bring in a sort of shaded triangle to show you what I'm looking at in terms of the fake out territory, because a lot of people won't necessarily be familiar with the way that I normally run TA and show people about fake out and breakouts. This is fake out territory, and any movement down towards this represents a buying opportunity where a wedge simply becomes a channel towards a top side, as I've already explained in terms of how that works. If we move beyond that zone, then of course then we could be looking down towards $9, and that's the perfect buy entry because that comes in for a filling of this gap over there, and that's our previous support and resistance area for us just here as well. This is going to probably start to build up and look somewhat familiar to what we started with in terms of the horizontal lines, etc. But it's good to be doing it ourselves off the back of our own TA at the time, you know, showing people how you do it. So there's your fake out territory, and that in many senses represents what could be considered to be your sort of best buy zone in here. So that might be what adds up to be your best buy zone at the meantime. Okay, okay, best buy zone if no downward Mo, as in momentum. So that's your best buy zone if there's no downward Momo. If we do actually get any sort of degree of follow through, then this area right here represents your best buy area in the medium term. So best buy if bearish over coming week. Right, so that's the best buy areas for us kind of sorted out, and that's all the negative stuff taken care of. Okay, so what have I done just there now? I've talked about the price action potentially being in a wedge. If the wedge fails, then it becomes a parallel channel, the parallel channel towards the top side, and that represents a best buy in the short term period of time, giving you nice risk management for anybody trading right here, right now. If that actually pushes past that zone, then they tell you where your next best buy price is coming in at. It's around about the $9.05, $9.10 area, and that's if we're bearish over the next week, looking at this thing, trying to get in what is potentially a higher low over the macro picture, showing us that we've pulled all the way back down the way and we're able to not come down like we did to our previous lows over here. We actually find support at this area of support and resistance once, twice, 3 times, 4 times, 5 times, showing us that this is significant and represents a higher low. Couple of little things that I would like to point out just to give you that extra clarity in terms of understanding charts, and this is something that Jamie talks about on his channel from time to time, so a lot of you should be familiar, is the significance, of course, of staying within the Donchian channel and not having bodies which close below it. Zooming on in the way here, having just added this indicator on, you can see, of course, that the lower line of the Donchian channel lines up with that best buy territory if there's no downward momentum in the meantime, or representing a fake out from this move towards the top side, giving us yet a third line as well in here at the 21 EMA for the baseline of the Donchian channels. That might not be so visible to everybody. I'll just hide everything else so you can see where the baseline of the Donchian channels would be. Come on, show me. Here's the baseline right there. We're just below it at the minute, and that's at $10.05. What did I talk about in yesterday's video? The most significant area of resistance up above us is that $10.05. Break $10.05, perhaps we are looking at a breakout towards the top side. Okay, this is of course the first step towards doing that. Therefore, you could say that your initial profit taking target, and this is not for you or for me, but in terms of all of the high frequency traders out there that of course provide the liquidity and you know, the more neutral perspective on what a market maker is, they'd be looking at this area and saying, well, we've got 2 of them. We've got the first one that comes in at 10.34, we've got the second one that comes at 10.48, and then if we push past those two zones, we are of course looking for a breakout towards the top side, giving us our fake out territory just in here. I'll draw it in with a rectangle to make it a little bit easier for me because triangles take more concentration. That's our sort of generic area of saying this is your risk if we don't succeed at pushing past. Now again, in terms of a measured move, and where it takes us to, if we pop this in just here, is bring us up to, and this is a measured move on the assumption of breaking out from a wedge towards the top side, it takes us up towards these clear areas where we're challenging the resistance from the past. Let me just pop on a little line, horizontal line. I'm going to line up with this high, with this area of inflection just here, with this area just here where these had these highs. We actually came up pushed higher, but we didn't close. Like I said, the significance of the bodies. So you can see here we didn't have our bodies closing up there. We actually just had them moving up the way. So I'm going to actually just pop in this area of in it around about that there, roughly speaking, that rough zone in there, and we can see that this measured move, if the full thing happened, takes us right back up into challenging that territory. That's extremely healthy, it's extremely positive, and of course it's the best position that the price has been in for the last couple of weeks, and we could be looking more positive again therefore in terms of a trending move. Okay, at the meantime, we have of course got the divergence that we need to be aware of, and we could see a pullback, and that's what gives us those opportunities. Boom. Okay, that is short-term technical analysis for AMC right here and now. If you're trading this over the period of the next day, 2 days, 3 days, week, or maybe even 2 weeks when we're looking at it. And that is highly technical, highly technical. So I wouldn't be surprised if there's a shit ton of questions and confusion that arises from having talked about that. However, it is quite simple, and that is how the professionals really would be looking at this right here and now. Well, dare say so myself. I obviously don't want to set the standard for all professionals out there, but I always did consider myself to be somewhat a little bit more proficient than the professionals who I was surrounded by when I was working in the arena. So not all of them would be looking at it that way, but there'd be some of them like myself and other people who come over and go, by jingles, you've done some good TA there. I hope the boss doesn't notice that I can't do that myself. That type of thing. Anyway, so to speak, that's what the professionals are looking at. Afterwards, where's our next target up the way? And it's actually, in terms of the next move up, what we're looking to here is a solid 50% rise up in prices from where they are right now, even to get up towards $14.29. This would take us up, of course, towards where our previous high was. That makes perfect sense as I scroll back in the left and show you more price action. As I jump up towards the 1 hour time frame and then the 12-hour time frame, you can see that it brings on more and more price action. You can see if this line, which is our next target towards the top side, bears any significance in the past. And we can see in here it did, in here it did, and we can see that this candle, which pushed right the way down past that in one sudden movement, also confirms it for us because of its because of the shock move through the line. Then we have, of course, this area here we found support at, and then back over here. You know, this is a long time ago, back in 2013, and this is when things kind of kicked off, and this was our very, very first ever area of support. What's so significant about going past our very first area of support? Well, I would say actually this is where where you want to have your starting pistol fire, and this is when actually the emotions kick in for people in terms of the overall positive upward trend. If we take out that line, that's extremely exciting for us in terms of our price action, in terms of our potential to move up the way, bringing in then even bigger targets, because we know that essentially at the end of the day, this has got a value play aspect towards it. You know, we like to talk about the short squeeze, etc., but we know there's a lot of people who are not even necessarily going to engage in activities surrounding the short squeeze or like reading us talking about it on the likes of Reddit, Wall Street Bets, Reddit.com/Tradespotting, etc., where we talk about these things. Maybe, you know, there's people out there, let's be honest, who are value traders just looking at the historical information from the past and saying, where could things go? And I would like to invite them to be aware of this little dynamic we have right here. Between the highs and the lows, they've got an area right in here which shows us that we have got an overlap, a confluence, and it's the 50% line from the highs to the lows. It's an area, a 50% line, and that's extremely significant. What does it mean to be breaking past that 50% line? Okay, let's just ask Google, this is the Jeopardy answer, Dow theory. What is Dow theory? Okay, this is the Jeopardy style answer to that question. Dow theory is a technical framework that predicts the market in an upward trend if one of its averages advances above a previous important high, accompanied by or followed by a similar advance in the other average. Now, essentially what that's telling us is that if we go past certain areas, now of course that doesn't tell us what those areas are, but I'm here to summarize and synopsize that information for you, and the number that you're looking to is the 50% area. So we have that confluence in there giving us this picture for the overall strategy towards the top side. Now this is just from a value trader perspective. Where could we be going if we do take out 1480? Well, obviously eyes will be drawn towards 1786 for numerous reasons. I'll not break down too much detail, but that's your golden pocket retrace. But actually, at this point, we really are looking back up towards our, well, and because of this significant area of a high just here, which is the most significant, retracement towards the top side during the 6-year long downtrend. So there's that. And then, of course, this is our very first initial area of resistance towards the top side, where the first area of liquidity from people taking profits in this one on this chart came in at, right? Okay, so there's two significant, so I did break it down anyway. There you go. So then we were looking up towards the top side, however. We're looking up towards the top side, and this is when things really start to happen. So when people want to talk about whether or not the squeeze will be squoze, it is at this price point here, $27. $27. $37 is actually probably more realistic in terms of really kind of getting people to get properly wet in their pants about things. But of course, this is when the squeeze begins to squoze, okay? This is where the squeeze really begins, okay? Really begins. And it's not actually that difficult to kind of understand why that would be the case. Now, despite all of the numbers and everything else that you read around on the internet, we're going to be aware of the fact that prices did actually operate up here, not once but twice, offering up a nice degree of liquidity for people who have obviously been able to short it from those highs. What did we see here? Did the prices go higher? No, they didn't. They went down. What did we see here? Did the prices go higher? No, they didn't. They went down. We know that there's a lot of people who've got positions then therefore which are negative, and we know the hedge funds have been shorting this for a very long time. Who is it then therefore that has these that started off with that position? And that is of course our enemy. Know your enemy, check. Let's just be aware that we know our enemy, therefore that we know our enemy, and that we know that they're not really going to start to be squoze until we really see prices push past 27, because of course they've been there, done that, bought the short squeeze t-shirt back then, if you like, with regards to that one, and won. So this is where hubris kicks in at for them massively. At the very least, they'll be thinking to themselves, sure, there might be a value play on the go, but that will end at the very best at $27. AMC will never be worth more than it was back in 2014. That's what they think, okay? So I've explained the significance of this area now, and I think I'll actually draw this one in and be so blazing as to put this in here with a green colored line, just so you can see that, of course, that is the starting area for us. Where are we looking then, therefore, in the immediate aftermath, the immediate upflow from this territory? And we're looking towards 1618, and that comes in there at $43.78. However, this is all a little bit lackluster in terms of those $1,000 targets, etc. And that's because what I'm doing right now is looking at this on the linear chart. If I go up to logarithmic, because this is going to become a logarithmic requirement, is going to be required to look at this in a logarithmic sense very, very soon, sooner than you would think, of course, absolutely no doubt about that. And bring up this charts full screen. In fact, we don't really need to talk about the oscillators when it comes to the speculation at this point. And we can see that these targets here, extend up quite a wee bit towards the $148 area if we actually do start to get to see the squeeze starting to get squoze, okay? And it's only really when we push past $148 that actually becomes the writing on the wall, and they're all completely and absolutely devastated. So if you're looking to knock the billions and billions of dollars off of the valuation of these hedge funds and their overall portfolios, then you're looking towards breaking past that 140. But that 140 opens up an amazing arena for us. Looking at this as well, let's just be aware, because this zone is, of course, where you're going to have the sort of the majority of people who are the Fugazi diamond hands. Now, you know what I talk about when I say Fugazi? Diamonds are, of course, the girl's best friend, but of course they're a real thing, and you get these fake diamonds. They look an awful lot like diamonds, and they're known amongst the diamond community as Fugazis, or at least from my watching of Lock, Stock and Two Smoking Barrels, that's my interpretation. And I'm looking here and saying that the Fugazi diamond handlers, of course, would be closing out their trades at $2,250. But we've got bigger targets to take on board. And I'm actually going to kind of summarize this and wrap it up by going back over to the Dogecoin charts again. So please do bear with me. Again, it's not me trying to push cryptocurrency onto a market which maybe is more interested in stocks and shares, etc. It's me using factors from technical analysis, and we're not talking about the entire economy crashing, etc. when Dogecoin goes up to 65 cents. That's not what happened. But we can still talk about these extremely amazing targets. And then I'll leave it up to you to decide how realistic they are at the end of it. Let me just pop on what is the two targets that you could be looking to beyond those regions. I'm going to be putting in the 3414, and I'll make that one yellow, and I'll put on the 4414, and I'll make this one orangey red color, a rusty color there, so that we can see the two different numbers showing up visually for us when I remove this. Because it's a bit of the drum roll, please, brrrr, reveal section just here with these two price targets. And boom, here we go. There they have them on the screen just now. And you can look towards a couple of areas just higher up. We've got $20,000 in here with the 3.414. And then, of course, you've got $295,996 between these two prices just here. Now, of course, this does change fairly dramatically with just a few pixels difference in terms of where I've dropped this in at. So you'd want to be fairly accurate with this. But really, in terms of like just kind of giving you a couple of ideas, just here a flavor of an idea talking about things, we're talking about big numbers. And is it justifiable to get there? Well, it absolutely is. And I'm going to move on to the justifying how we get there section in just a second or two. But what this really is to show you, it isn't like your strategy or any of that sort of stuff. And we can talk about strategy, and I've talked about strategy in a previous video. If you check out my channel, of course, that's youtube.com/rockyoutcrop, ROCKYOUTCROP, then you will see, of course, my AMC exit strategy, where I talk about similar things like this, using a slightly different position Fibonacci to give us extremely wild targets towards the top side, and it's a bit of fun and it's good laugh. But what we're talking about here is like when we go into the world of madness, etc. And I really want to draw out the point that we're not in a world of madness right now, that the price is moving up 50%. While it would seem from a traditional trading point of view like a really massive move and everything, should be done and dusted by then, we can extend it up even further and further and further. And I've shown you time after time after time, whether it's from a value trader perspective or an investment over a longer period of time, whether it's from just looking at it from a technical point of view, whether you're talking about various different ways of approaching this subject, that, of course, you can see the price is going up to $150, and then it's when the hubris of the outcome of that hubris, the actual fall from grace really kicks in, and that $27 is absolutely within reason just from looking at the charts. Now, I know we could look at the various numbers out there, but I just want to say to people that there are going to be some people out there who feel like they're okay until that point of time, that they feel like all they need to do is just to balance out the books, using an accounting style way of making money, and just try and beat inflation, and all they really need to do is balance out the checks and balances. But it's when it goes beyond that point that things really start to get tasty, extremely tasty, especially whenever the value traders drop out. Because when the value traders drop out from this thing and take their profits and see the prices continue up anyway, because the likes of BlackRock decide to just push this and push it, because this is what you can do. It's not illegal, and it's actually a fully good and absolutely perfectly legitimate thing to have in a free market. If you want to have free markets, then this has to be possible. If you don't want to have free markets and you want to live in a socialist state, then by all means go to Cuba and take up your trade in there and enjoy that. It won't work very well. That's why this has to happen. This has to be part of what we accept as being part of our economy. We just have to, or else we want to live in a socialist state. So what are we going to do? Let's embrace it and see that we could in fact see prices go crazy, but it only really happens whenever the value traders have dropped off and everybody's saying, well, look, no, there is a new narrative here. So what I really want to see is everybody getting onto the same page, of course, and the same page happens whenever the prices have gone up so much from here that if you're to put in $1,000, for instance, right now, I'm not a financial advisor, none of this is financial advice, then you'd be looking without any leverage or anything else, and then you'd be waiting and seeing that your $1,000 had turned into $3,000, for example, and you'd still be looking at it and saying, that's not enough for me to take my money out. I'm looking for it to go higher and higher and higher. That sort of mentality, and that will start happening when people, kind of see the prices going past that point. So that's kind of what I'm looking to on that front with that one. And I wanted to kind of try and justify it. I mean, how can you say that we could get up to 295,000, Rocky, because that's where that 4.414 is? Is that realistic? And I know there's a million different ways I could do it. And I'm using Doge purely simply because you will have heard of it, okay? And this is something that I think everybody has heard of that's in this community I could use any cryptocurrency. I've done it thousands of times, and there's plenty of other stocks out there that I could happily use to do it too. I just wanted to give something that's a relevant example for people to look at, and let's try and do something fairly similar ourselves. Let's say, for instance, that this was the all-time high on Dogecoin, and this was the low. Okay, let's just put this into context for us, by the way, by saying that what I'd done with my Fibonacci was I was looking at this high down to this low. Okay, highs to lows, right? So we're not doing anything radically different there in terms of looking at the differences between these. Okay, so let me just bring up the chart again and show you. So if we're looking between this high and this low, and I pop in a Fibonacci retracement and show us, then where did we get to? And you can see the 4.414 coming in here with the highs that we had recently. You can see that right there, and then you can see it. Now, did the whole entire world melt down when this happened? No, it didn't. What conversations have you had about Dogecoin at any time in this period here? Let me just draw a rectangle on and ask all of you out there in the audience, what conversations have you had about Doge in any of this period of time here? Was it conversations like, this thing is worthless, but it's going to go higher anyway? Is that something that you might have heard at any time in this? At any time since, perhaps in the last, couple of months, while we've seen a 13,396% increase towards the top side. At any point during that 13,396% increase towards the top side, did anybody say, this can't happen, it won't happen, you're a fool, etc.? Probably quite a few people. But look at what's happened. And we're saying all it took was for Elon Musk to be talking about it. Now, can you imagine if you turned on the TV this one morning and said that, and you saw the headline was on CNBC, the first thing they were saying was, some group has gone bust because they can't afford to do anything. Because they went bust, they had to put so much money into another, they had to liquidate their position, which sent the prices even higher. And because they've done that, it looks like other companies are bust. They're having a special meeting today to discuss it, etc. Can you imagine that news came out? Do you think people would therefore then go ahead and sell the stock, which these companies are looking to have a special meeting to decide how they're going to actually strategize at that point, how to recover? No, probably not. I'd say that people probably want to buy it at that point, because that is, of course, how the markets have always worked. One thing that I suppose that I will talk about now that I've come to the end of this overall section, I've done the TA in terms of the short term. If you're trading this today, if you're trading it tomorrow, you're trading it over the next couple of weeks. I've done the longer term perspective in terms of your upper side targets. I also started off with the risk management, by the way. I talked about the distinction between value play and, of course, as well, the speculation aspect and the short squeeze. I talked to give people a little bit sort of more breathing room with understanding at what the context would be of a squeeze and how it would really look. I talked about an upper side target that brings us up from where we are now, hundreds of thousands of percent towards the top side, around about 295 grand, although the numbers at that point become more or less arbitrary, because we'll cross those bridges when we as a group of millionaires get to them, right? And then as well, I've justified all of it by showing you that the things that I was talking about, despite seeming outlandish, are absolutely something that you've known about being possible and have witnessed over the period of just the last 2 months. Okay, so since we've got all of that completely together, and there's no need for me to give any further justification for any of that, there's this one thing that keeps getting thrown up towards me, and I keep talking about it all the time, and people don't really understand it. And it's this simple question of, can you do technical analysis on a manipulated market, right? Or can you do technical analysis whenever things are going crazy? Or can you do X, Y, and Z? Can you do technical analysis whenever this reason I've been told it doesn't work exists? You construct your own sentence. I don't want to put words in your mouth, but you damn well know what I'm talking about, because a lot of you out there have actually asked me that. And what am I doing with the Dow Jones Industrial Average on the screen here? Well, you know the name Dow. I actually referenced Dow earlier on when I was talking about Dow theory. Dow was, of course, well, who cares about Dow's history, right? When I talk about Dow actually in the Dow Jones Industrial Average, I like to talk about how there was a guy called Dow and there was a guy called Jones, and they were lovers back in the day. Now, that's just, making a laugh, because that's not the case, or at least, maybe they were lovers. Who knows? But what is this thing? Well, it's that this it's basically where your entire understanding of markets, etc., and what we're doing here comes from. For the vast majority of people who are in the live stream right now, this is the biggest dominating factor in any thought that you've ever had about technical analysis. And if there's one that's competing with it, it's perhaps something like the S&P 500. However, everything you ever heard growing up relates to this. And let me then just take this historical, amazing piece of information and use it to demonstrate to you the answer to that question. Can you use technical analysis to understand these things? Bringing in the highs that we had in the 2008 crash. Was it possible? Now, this is something that I didn't really understand back then, but I sure as hell understand now. And of course, this has led to me getting a lot of wealth in my own life, not least of which is the wealth that comes from not having to work with a group of morons inside a bank that don't really understand what they're doing themselves, even though I'm there with them and telling them all about it. Haha, just kidding, not bitter, just laughing. But in this area just here is where we had the highs of the 2007-2008 crash. And of course, we can see, and at this point here, that there was, of course, divergence on the RSI, for example. Now, there you go. There's some TA in the face of extreme market conditions, which people back nowadays would like to say, yeah, nobody really knew it was coming, etc., etc. Now, the guy in the chit chat we had as well, as somebody said earlier on, that somebody predicted the crash 2 years before it happened. Well, they predicted the crash in at this period of time here, and of course, we saw the markets, of course, continue to go towards the top side, following on from that prediction. What were they doing when they were predicting it? Well, they were predicting it in the face of course, convergence on the charts, and it was a bit silly to be making that prediction 2 years in advance. That was actually foolish of that person to be saying it. However, they were ultimately proven right. Were they proven right because of fundamentals? No, they were wrong by fundamentals for 2 years. But in terms of actual technical analysis, would they have been right had they traded at the time? Yes, they have. Okay, score 1 for technical analysis. There we have it. There's 1 for technical analysis, 0 for fundamentals. There we have it in terms of our little trade-off here. So let me just keep that going as well. Bearing in mind that if a lot of people here said that things were going to go bad, a lot of people and it wasn't just him, it was lots of people for more than 2 years were saying it, really, to be honest, including the UK government, the American government, and everybody else. I mean, a lot of people in the sort of forward-facing elements of the American government and the Fed, if you like, then were talking about how, it won't happen, etc. I mean, you had Gordon Brown as well back in the day saying, "Gone are the days of boom and bust." Do you remember that absolutely seminal UK budget speech? Of course, one of the most famous budget speeches from the UK since the war era ended. So, do you remember? That's what that was like back then. But fundamentals meant shit all, and we could see it right there plain as day on the charts. But nobody's interested in the 2008 market crash, Rocky. We're far more digital people. We're digital. Could we have possibly have seen that there was a problem here in the dot-com boom crash? Could we have possibly have seen that at all during this period where we saw upper side price action going in for these peaks here, as we see, of course, that we came into oversold territory and put in divergence at this period of time in this peak area? Could we have seen it? I think that's actually, let me just say here, score 2-0 to the old technical analysis versus fundamental analysis there. Yes, we had everybody and their mother was putting money into stocks at that point, and they were absolutely right up until, of course, they were wrong. When would they have seen that they were wrong? Well, they would have seen it right here had they looked at the charts, for example. So score 2 to yes, technical analysis is useful. First off. Secondly, is it useful during periods of extreme market conditions where irrationality kicks in and you can't really tell what's going on? Well, I dare say it's more useful than ever in there. And 3, does it work and can it be used to do this sort of stuff? And what's the value of fundamentals? Well, it's like 99.999% technical analysis, 0.0000001% fundamentals. If you want to, talk about it in ways which are closer to reality, but obviously still extreme and not true. In the same sense that saying it's 80% fundamentals, 20% technicals is absolutely not true. But I know you don't believe me, because what you're saying at this point is, Rocky, look, technical analysis that you're using here, such as the RSI, was invented in the 1970s by a guy called J. Wells Wilder Jr., just like the DMI down here was invented in that same period of time. And we didn't have the maths then, we didn't have the computers then, we didn't have the knowledge, etc., and we didn't even use charts back, whatever before then. It's only since these things, and it's a self-fulfilling prophecy. That's what you're saying, isn't it? You're saying you're just using these things and they're just self-fulfilling prophecies. And I bet you any money, if you went back to famous crashes crashes in the past before these things were invented, you wouldn't see that. Okay, then, I hear you. Well, let's go back to the era when people started using technical analysis as charts. So what we're talking about here is the 1930s. Of course, people did use them in Japan for a long time before. It was a French guy that was working in the American NYSE at the time. He didn't speak very much English, but he's the first one to start using them in there. This is the era where we had the likes of GAN, etc., blah, blah, blah. Now, Now, they started using them then, but they were known in around about this time by the majority of people, okay? And what did we have here? We didn't have the RSI. This isn't an option. It wasn't there then. We didn't have the DMI. That wasn't there then either. But let's just use them now as if we did have them. What do we have here? A peak here, and it's hugely divergent. What did we have here? We had a peak here, and it wasn't divergent compared to the previous one on the way up. So we could see that, of course, we were on the way up, but then we got that divergent peak. Not only that, but in fact, if we look back to the sort of the previous low up to this high, and we draw in a Fibonacci retracement, again, something that was, of course, known in a sense, but not used like this. You can see that we broke the 236 there. When we went down below it, came back up again and broke down below it again. That, of course, that the inevitability was that we were going to go on to the 618, but we might have even have gone on beyond it to something like the 1.272 over here, as we did see the ultimate bottom come in at around about the 27th of June 1932. Okay, you still don't believe me, because like I said, charts were in use back then, and Fibonacci was, of course, invented. Oh, I hate to have to prove this to you. I hate to have to do it. Let's go back to the frickin' the daddy-o, the number one, the famous, the big old, the daddy, the biggest one ever. What we have, actually, no, that's the truth of that is maybe what I just discussed here. That might be the one that everybody wants to talk about as being the big one. Of course, you got the likes, so you got all that sort of stuff happening. But there was numerous other crashes in the past. How about we just take, instead of doing it sort of all like that, how about we just take every single peak? 1, 2. There's a peak. There's another peak. 1, 2. There's a peak between these two. You can see. Look at this. Highs, lower highs, bearish divergence. What did we have following on from that? Let me just see here. What did we have following on from that? What did we have? Let me just see. We have, take this Fibonacci in from these lows to these highs. Oh, look, we broke the 236. I would anticipate at this point that we'll probably go down as far as the 618 Fibonacci golden pocket. Let's just see what actually turned out happening. Oh my goodness, that's where the market lows were for the whole market, and then the prices went up. What do you mean, Rocky? Oh my God, are you actually serious? Are you actually proving to me in front of my very eyes that technical analysis has always worked, that these things that we talk about as being self-fulfilling prophecies have always been the case anyway, that there is actually a method to the madness, and this stuff is actually not bullshit, and I didn't tune into this episode just to be completely lied to, and this is all true, and you've just gone through and verified everything and audited everything you just said and made it all proof and fact and pretty much indisputable? Is that what's actually... Yes, it is. Thank you for joining us. Welcome to the show. Like button is, of course, appreciated if you're getting any value out of this. And I dare say everybody out there in the audience probably is finding out something. I will check in with the chit chat to see if I've missed anything in a few moments. But let's just see if we can keep this going on the way, shall we? Shall we see if we got any sort of other things? Here's something that I've never done myself before, so I'm interested in seeing if it's possible, right? I've never done this myself before, so if we had this first rise up here in this price action, I'm actually getting excited here. Sorry, this is crazy to get excited about doing technical analysis, but you know, takes all sorts, doesn't it? Right, so we had this rise up here in the prices. This is, of course, back between, you know, the good old days of 1896 and the highs of 1899. Let's see if any of this gives us any idea about future price action at all. And we'll do it by measuring against the retracement between it. Now, we already know it went down to the 618 golden pocket over there because we did that Fibonacci already. Let's draw in one that measures the retracement down the way. Now, I'm not going to do it penny exact. You can see I've maybe missed a pixel just there. Oh, forgive me. Let's just see if any of this makes any sense. Let's see if at any point in time we went to that radical 4.414. Let's see if we ever went to the 3.414. Now, I've never done this, so I don't know the answer. I don't frickin' know the answer. I could be eating humble pie in just a second. Let's see if we ever went to any of these levels. Now, I'm not just choosing numbers, randomly or whatever. These are specific numbers I'm specifically choosing based off the back of this here area. Let's just let's just see as we go over to the right, if at any time there's any degree of inflection with this. Now, this is coming out of nowhere. Nobody at the time knew about this technology existing at all in the world, pretty much, and nobody had ever thought to apply it to a chart. They didn't have the technology really or the know-how to make these charts in most instances, and they weren't looking at it in any way. So is there any reason in terms of a self-fulfilling prophecy that this would happen? Absolutely not. It's the complete opposite of that. So let's just see if we see anything, any interaction with these lines at all. Oh my goodness, you're not going to tell me, Rocky, that the peak of the next peak in 1930, you're not about to tell me, Rocky, stop it, Rocky, stop it. You're not about to tell me that the peak that the markets had in October 1929 was the 4.41 Fibonacci retracement point from the peaks that they had in 1899. You're not about to tell me that, are you, Rocky? Okay, I'll not tell you that. So you can see how this is obviously has an impact, that the prices, they found support here, they moved up to this area, and that's where they found an inflection at. Who's to say? The price is about 241, they found this inflection at around about that price. Who's to say? Why did the prices operate in this area so rigidly? Why did they find resistance at this area again and again and again? Why did that happen? Why did it come up, peak at this point, pull down, and then find resistance there at that time? I mean, we know that it's got to be some sort of self-fulfilling prophecy fundamental reason. There's got to be a fundamental reason why that's happening, as opposed to a technical reason on the charts. Right. Am I right? Anyway, so that is of course, the most well-known chart in the entire world. And that is just a little snippet of looking back and trying to audit what we're talking about here and seeing, is it at all reasonable to be making any of these assertions? And I would just like to say that, it probably, possibly, potentially might just be within the realms of reason in terms of what happens on this planet when we do things together as a group of apes. Could potentially be. Okay, not going to go into any more detail than that. I'm actually going to just check in with the chart, see if there's anything disgustingly obvious that I missed out. Just bear in mind that, of course, if you want to run through this yourself on your own charts and audit everything that I've just spoken about, by all means, replay this section of the episode here that we're doing and listen to me chatting through and kind of looking at things and think to yourself, how would I do that on any other chart? And here's a couple, just I suppose, to kind of finish it off the way for us. Let's just see if there's any examples here, a random example off of Jamie's chart. Shall we take a look back in the past and see how would it be? What about the Nasdaq, right? The Nasdaq itself. How about we take a look just really quickly at something like this peak that we had in here in the 2008 crash. Is there any way of knowing? Is there going to be anything at all that gives us any idea about where the ultimate market highs would have come in at on this one? Is there anything at all that could have given us any idea whatsoever? I think it's probably, it'd be disingenuous for me to say that there is, because I actually don't believe in technical analysis whatsoever. So I'll not say it. I'll just draw on these random things and kind of leave it up for you to arbitrarily decide. In fact, let's see how we're doing right now with regards to this peak up here, with regards to the very initiation of the Nasdaq. And this is just one methodology for doing technical analysis. There are literally thousands of them. Let's see how we're doing. Okay, cool. So we've made it past the 2618. Would it be fair for us to think that we could see the American economy push on up the way and actually go another 30% increase towards the top side? Is that what that is? I don't want to get my maths wrong, because that 60% increase. Could we get another 50%, whatever, 50% increase in terms, should have worked that out easier. It's clearly 50%. Should we get another 50% increase in NASDAQ towards the top side? Is that possible? Is it at all possible? Could we get that? Would we see a pullback down here? Well, and is there anything to be thinking of in this region? Well, there might be, but you're absolutely free to do all of that yourself. Of course, I've kind of gone through the sort of the initiation phase, if you like, many years ago with regards to technical analysis, and by this point, of course, I'm obviously I've drunk the Kool-Aid, if you like. But I'll welcome everybody to do that. But anyway, let's suffice it to say that when I jump back over to AMC and take a look at its charts and just kind of summarize real quick and say that, to me, I think, right, and this is just my opinion because I'm not a financial advisor, and none of what you see on screen right here, right now, is financial advice at all in any way. But to me, when I look at the charts, and I think that I wouldn't mind looking at buying it around about that zone. I wouldn't mind buying it around about that zone. I wouldn't mind it, and that I wouldn't mind seeing the prices go up towards these other areas, and that I wouldn't be shocked to see this be a significant zone, and I wouldn't be totally and overall completely blown away at all if we did see the prices extremely go up towards that zone. Is it within the technical possibilities? And you have people say to me all the time, but is it even realistic? Is it even possible? Could it even happen? Is it something that could even happen at all? And the answer is, yeah, it could happen, right? And you know what? There isn't actually that many AMC shares out there, not really. And if the prices of them go up to those really high numbers, it isn't really all that much money. It's not all that much money. It doesn't take, the entire world to pay us all. It doesn't take necessarily. We don't have to make it take the entire world's wealth to pay us off. It's totally feasible. Right. How's the chat getting along? Nice to see everybody putting rockets in the chat there. That was a bit of fun, wasn't it? As well, Tradespotting chatting away with everybody in there. I'm going to have to hand back over to Tradespotting and let him see how he's getting on. But I'm just going to scroll up the way and see kind of more or less, if I'm looking in here, from when Tradespotting started talking on his own show, and I can see if there's anything kind of jumping out at me from what I should have looked at. Just seeing that nice chat going along with people. Please do talk about Dodge, says somebody earlier on, and all that stuff. Nice one. I'd like to see DFV in a bar and share a pint with them. Absolutely, I'd agree with that one. Just scrolling on down the way, slowly but surely. Let me see. Yep, everything seems to be good. I don't think I've missed anything. Julian says, I'm not joking. You and Rocky are very, very special in the YouTube scene. Your streams are so valuable, funny, and overall chill. Other YouTubers chase the numbers, but not. But in the end, quality wins. Well, thanks so much. I mean, everybody here who's tuned in knows that this is an extreme privilege for me. I'm really grateful for Jimmy to give me this opportunity to talk to all of you out there, because you know yourself that my peak... Oh, this is too loud. It's too loud. The microphone's too loud. Whatever. You'll know yourself that my peak with live concurrent viewers on any live stream that I've done, bear in mind I do 3 a week, and I've been streaming on YouTube for a year and a half, and I've got over 1,500 videos published, is of course peak concurrent 60 or something like that, So I'm not chasing numbers over here. I just provide the quality. That's all I've ever done, and I think that the world will of course come round to seeing the light sooner or later. But for me, all I need to do is focus on quality and having a good community, and that is you guys, every single one of you. Fantastic, Lamau. I love Rage Rocky. Sorry, yeah. I don't know. Sometimes maybe I seem a bit. Maybe I'm a bit emotional or something when I'm chatting. I don't really know. As for me and my wife's boyfriend, we love the stonk, says Brian Shim. That's fantastic. As do I. You know what? I have some AMC shares, and I'm really lucky to have them, because actually my wife's boyfriend sold his fake leg to give me the money to buy them. So really lucky guy. Thanks so much, Spencer, for calling me a wizard. Thanks so much as well. How does this Fibonacci spelling? Absolutely, man. Every time I write Fibonacci, I spell it wrong. Talk correspond to typical statistics and the bell curve and the standard deviation. Is it just different ways of looking at these things? That's Sitting Bull. Well done to you for giving a real intelligent question in there. Fantastic, nice one. Let me just caveat everything that I'm about to say by saying I fucking hate maths. By the way, I hate maths. I've always hated it. It's why I did my maths exam a year early in school, and it's why I got it's why I tried as hard as I could to get 100% on it. God damn it! I did not want to have to do that maths exam twice. Give me an A star. I don't want to have to do it twice. That's always been my attitude. So I hate maths. I absolutely hate maths. Just determined to get as good a result on my maths test as soon as I could, so that I could absolutely begin forgetting it immediately as soon as possible. So when it comes to talking about things like standard deviation, I have to say I've done a really good job over the last 20 years of eradicating those math concepts from my head, because I really I'm not joking. I dislike doing maths. I really do dislike it. Nevertheless, how does it correspond to typical statistics? Well, typical statistics, it corresponds very, very well. I mean, typical statistics, if you're talking about your question there is generic to the point that I can't actually tell you what typical statistics you're typically speaking of, specifically to correspond to your question. But Fibonacci retracement, Fibonacci himself, of course, derived these numbers by looking at these amazing relationships with maths, and it does go to the very core of how everything works in the world. I mean, this shape that I have on my ear, you could work that out, what that shape is, using the Fibonacci sequence, etc. I mean, it's just very much incorporated into nature. It's just something something that happens, and it's fair enough. There's many numerous reasons for it, but when it comes to things like the bell curve, etc., and your standard deviations, then you're not really looking at using sort of standard deviations away from a Fibonacci. If I understand your question correctly, no, you just more or less stick to what the Fibonacci is saying as opposed to looking at standard deviations. And if you are talking about standard deviations, then the standard deviations away from the Fibonacci are quite simply put the other Fibonacci levels. That's the interrelationship that you have between these maths. But nevertheless, I think if there is a question to be talked about and something that's relevant to trading, which actually straight up uses standard deviation as part of its calculations, then it's quite simply got to be the Bollinger Band. So if I remove all drawings from the charts yet again and then add in the Bollinger Band indicator, you can see that in the middle of it, this thing is constructed in a fairly simplistic way. It's actually very, very simple. Now, the guy John Bollinger that invented it is still very much alive and kicking today, so if you want to talk to him, you can. I've spoken to him a couple of times on Twitter. It's not like me and him are friends or anything. You can totally find the guy. He's alive. How does he trade? Now, interestingly enough, John Bollinger himself is a big believer in stop losses, trailing stops. So when it comes to GME, although the guy's absolutely embedded in the institutions and would most likely not come out as being a proponent towards any short squeeze, overall, because he's part of the gang, but by the same token, if he was trading this, would look towards putting in a trailing stop to manage it, and that's how he would manage his exit strategy. Okay, that's absolutely is. It's just, if you want to go and research John Bollinger, the guy that invented this indicator, then that's how he would manage it. So you could go ask him, whatever he'll tell you. He would use the trailing stop to manage his position in the area of course, profit. Now, this is the 20 simple period moving average here in the middle of this line, and I can demonstrate that to you quite simply by just popping on the 20 simple period moving average and showing you that here. This is, of course, EMA1. That's what that is there on this indicator I'm using. This is MA1. That's moving average 1. Moving average, just simple moving average. Change this to number 20. Pop that on there, and as you can see here, that line that was white is now a sort of orangey color as it goes along perfectly. So there you have it. That is what the 20 period moving average is. And what the 20 period moving average is quite simple, and it is a simple 20 period moving average, is it looks back over 20 periods. So the number which is calculated right here is an average of the prices in this zone right here. This 20 period zone here, take all those numbers, add them all together, divide it by 20, you get that number right there at 989. Of course, right there, indicating to us where things start to get tasty if we do see pullbacks, etc. And that is where the 20 period moving average is. Now, what are these two lines here? Well, they're actually two standard deviations away from the moving average. Now, you'll find a lot of other people use different numbers for this, but actually, funnily enough, the ones out of the box are better. So we have it, two standard deviations. If you ever read something like the Way of the Turtle, a trading book, which tells you from a guy who was the most successful trader as part of a group of traders who were called the Turtles, who were taken under their wing, but I forget it. A really famous guy from back in the day that wrote a book, right? You don't need to know the details. What he used quite often was other numbers. I think, in fact, he even used something stupid like 3.5. I'm not 100% sure, but, to me, this is fairly useless overall. However, if you were looking at it from a 3.5 perspective, it did perfectly kind of show you where we could be seeing things going in this region just here, so there's arguments to be made for either or. I find that less useful, but I would talk about standard deviation. I'd talk about movements away from the mean here, which is what an average is. A moving average in this sense, where you're dividing it by a number of things divided by the amount of periods. That's a mean. So this 20 simple moving average is a mean. And in terms of movements away from it, you tend to stay within two standard deviations of that mean, okay? And in terms of the overall concepts of anything in life, is a reversion towards the mean. It's how we do things. We always expect there to be a reversion towards the mean. When your husband, your sister, your wife, your brother, whatever, is treating you mean because they're a big meanie, and then they're nice to you for a couple of days, and you think, oh my goodness, my husband is actually the nicest guy in the world. I'm talking to all the ladies out there, or indeed men. I don't know. It's 2021, right? Whatever. And then you think, oh, maybe I married the right guy after all. And then a couple of weeks later, he's back to being an arsehole again. What that concept is known as is reversion to the mean. And it's seen here in trading in general, that prices move away from the mean, they tend to move back towards it again thereafter. And a really popular tool to be talking about the reversion to the mean. In terms of trading on smaller term timeframes, of course, intraday trading is what we're talking about for this one, is of course to look at a thing called the VWAP. And the VWAP VWAP is the volume is the VWAP's another indicator. I'll not bother breaking down what it is, but you can see you can add it by typing in VWAP, right? Volume weighted average. Oops. I'm sorry. I'm taking advantage here. Taking advantage of the indicators. I actually didn't want the Bollinger Bands on anyway. So you've got VWAP, and you can see here this is of course volume weighted average price, and gosh darn it, right, style. This is I just wanted to show this as an example to people. This is just education. Sorry, I tend to go back. I've got this thing where I educate people about stuff. I find it fascinating. I'm just sharing my passion with people. I hope you don't mind me sharing my passion with you overall. Anyway, you got the VWAP over here, and you can see. I just want to. You've got your standard deviation thing. To my friend out there sitting Bully, wanted to talk about standard deviations, etc. Trying to really try and answer people here. I'm going to just stick these to 0 so that they actually all line up the way. I've just got a single line for VWAP, so I can show you in terms of the small term prices. Now this is the average price essentially that anybody's paid throughout the day for this thing, and there tends to be a reversion towards the mean in terms of how this thing works. So as you can see here, the price the day started here. This is the start of a day. The prices dropped down. They reverted to the mean. They came up above it. They reverted to the mean. They went down. They reverted to the mean. They went up above it. They reverted to the mean. Down below it. Reverted to the mean. Down below it. Up to the mean. In fact, we also had that happen in there as well. Up above it, down below it, 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 up above it. And that's where we are right now. And this is why it's actually easy enough for me to say a couple of little things about the price action. We're above the mean right now. That's good. We could then therefore expect to see movements towards the top side, because on average the prices are higher than they were on average. People think then therefore the psychology is bound to be in terms of the average person, the average price bought throughout the day so far today, that right now the prices are doing well. The reason for that is because they're actually up above that $10.05 area that we spoke about. It's no surprise to me to see that the VWAP itself is actually coming in at that area we already identified, $10.05, as being the current support and resistance. So people who are familiar with me will always see that I basically have an all roads lead to Rome type strategy, or approach, that I'm actually able to see the confluence and the overlap between different indicators and how they all work together, and understand the maths by jingles. I hate maths. I don't make any bones about it. I'm quite honest. I hate maths, but I understand it. I'm obviously good at it, but I bloody hate it. So when I make that joke, what I'm trying to say to people is that you don't need to understand this stuff. You don't need to like maths. You don't need to be a very technical person to do all this. Understanding these things, which you will understand, I assure you, over time, when you follow along with the likes of Tradespotting, who's very, very good with his education, is that you'll develop these things and you'll understand them intuitively. The reasons that I talk about these things in such explicit terms and talk about how I don't like maths and everything is just to make it more sort of engaging and feel accessible to people. The truth is, there is no real mystery here when you can see behind the curtain, and I'm very happy to be the man that reveals Oz, the Wizard of, standing behind that curtain there and giving you the insight that you need, right? However, what we're looking for then therefore overall is for the prices to increase and hopefully get a strong close today. Strong closes today mean that the mean will start off higher up on the next day, and then the reversion to that mean should then hopefully be overall ascending up the way, which is why you see this pattern here with regards to the mean, the prices gapped up, the mean, the prices gapped up, the mean, the prices gapped up, and that's what's going on over here. Final note, I suppose, since I'm so explained so much to people, when you're looking to work out what divergence is, and people ask me this all the time. For instance, even in this very live stream, I had a conversation with somebody. What's the difference between the stochastics and the RSI? Well, whatever. People always ask these things, and I want to explain, in terms of maths, how these things are calculated. And a lot of people don't really understand it. And you can look through the book and that J. Wells Wilder Jr. wrote. Fantastic, wonderful book. Recommended read it for absolutely everybody out there. But he was a mathematician, so wouldn't surprise me if you hated it. Just kidding. But the way that he works out divergence and the way that the overall the calculation for it, we know already that in this period of time where the prices were going up here that they were bearishly divergent, right? And you don't need to understand this concept right now if you're new to it. It's fine, just let the information flow over you. You'll become more familiar with general concepts, and as a result, when you actually do dig down into the information in the future, you'll find it easier to understand. For those of you who do understand what I'm saying and already know about divergence, you might be wondering how the maths of it's worked out, but also somewhat daunted by me flinging up a bunch of numbers on the screen. And like I already said, no worries on that front. I hate maths. There's no way that I would explain to you a mathematical concept actually using maths. That's not the way that I work. It's not the way my brain works. It's not the way I think about things. And it's one of the reasons why I'm quite good at maths as well. It's because I don't look at it that way. Divergence. What is divergence? Well, I can visually represent it to you by showing you the difference between these triangles here. You can see this is a fairly acute triangle. Let me just draw in another triangle here for us. And you can see that this is, while it's still fairly acute, is not as acute as the previous one. Let me just draw in another triangle for us here. And you can see, again, that same sort of construct. And then let's assume that the prices were to get up towards that point just there and draw that on. Now you can see these diminishing triangles just here, can't you? I'm sure you can see them. And you can see that the difference between the lows and the highs relative to the difference between the previous high and the subsequent high are, of course, diminishing throughout. So essentially what you've got here is a series of angles towards the top side. So I can just show you that by drawing over the lower side angles. And I can show you that's angle number 1. Then I can show you what angle number 2 is. And you can see here it's less steep. Then I can show you angle number 3. And, of course, it's going to be less steep again. So this is mathematics, by the way. This is just visual mathematics. This is the way Stephen Hawking does maths, if you're interested. He's still alive, right? Isn't he? I don't know. Anyway, and then you can see here that if we did go up towards the top end, there's a chance that we could throw off the bearish divergence that we had previously. Okay, there's a chance that we could throw off the bearish divergence that we've had previously, right? If we got towards the top end here, because I've measured this in using the angles as the previous high as the body closes. You'll see this is on the body, right? You'll see this on the body, okay? So this is our RSI divergence. An RSI divergence would be overcome with a nice solid move up towards the top end into this box here before cracking on up the way. That's RSI divergence. Somebody wanted to know what the difference is. Oh, thank you so much. Cup of tea. Excellent. Tea time with Rocky. No tea, that's fine. Have coffee. Tea time with Rocky. No tea, that's fine. Have coffee. So you want to know what the difference is then mathematics-wise between the RSI and the stochastics. Now, obviously, I could have explained this using numbers, but screw that. Like I say, I hate maths. But you'll be looking at the difference between, the actual peak price and the lows that we're having in terms of stochastics. Peak price and the lows, and then again as well with the peak prices and the lows, and then they're making a comparison between the angles that we've got here. And as you can quite simply see as well, that without even starting off the way, that the second peaks aren't even taking out the higher peaks. And as soon as you're going below 45 degrees, well, obviously you're in a negative stance in that sense. So you'd be expecting to see at the very least some divergence if overall price action continues to be positive towards the top side, etc., etc., etc. And these are the sorts of differences then that you can, this is the different ways of visualizing the difference between a couple of different oscillators and how they work and what calculations they're taking on board. So understanding the visual aspect of these things, I think, is a very, very fast route towards understanding the complexities of the mathematics without having to actually go in there and try and, become a godforsaken mathematician. Right? Nice one. Excellent. Isn't it nice to have that there little bit of information? Anyhows, that's going to have to be pretty much all from me, folks, as well. So we're passing back over to Jamie here, and he can kind of take things on again from there as well. And I'll just see if anybody is saying anything. I'll say if anybody's saying anything. I don't get it. Where's the other guy? The other guy's in the kitchen, shaving the world, making a cup of tea. He's coming back in just a second. He's actually coming back right now. So, fantastic. Excellent. Nice one. Maybe if Jimmy lets me, I'll make that into a clip and publish it on my own channel at some point. But anyway, thanks very much for joining me. I've been Rocky Outcrop. Here's Jamie, Tradespotting, coming back. Thanks for the cameo. I'll see you next time.
Wow. Hello, lady apes, gentlemen apes. How lucky am I to have a brother like Rocky, huh? If you could do me a huge favor, right-click on your browser tab, click duplicate, type Rocky Outcrop into your search box, click on his channel, click subscribe. I promise you will not be disappointed. So, can't thank Rocky enough for that. Lovely talking to you all in chat. Thanks very much, Rocky. Everybody really appreciated it from what I can see, from what I can tell, from what I imagine. Good stuff. And I've got Rocky's phone. You can use my phone to join chat. So if you see me talking in chat from now on, it'll be Rockstar. Wow, that was so good. I love having Rocky on. He's such a good brother. Can't tell you how many good things he's done for me, and that it's happening for the audience too, even better. So what is this that he's looking at here? AMC. Well, that doesn't half look good. A bit of a wedge, a retest, a bounce and a buy, an even better buy. As if we're going back there. If we did, that'd be incredible. Boom, boom, boom. Rocky was talking about divergence. See, something to look out for on AMC, as well as everything Rocky will have just told you, is the concept of 3 higher troughs and blend in his divergence chat. AMC looks fantastic. Hey, but we're not here for AMC. Well, we are, but we're also going to look at Gme. What's AMC actually? Let's go down to the... How is chat? I noticed when I was in chat there, it was nice to get that little break. Is that the VWAP? It's nice to get that little break. Look at those prices coming back, touching that. Wow, technical analysis. Tell you what, it can make you rich. What the fuck? I thought that was you the whole time. I'm tripping. Haha, you're the best, yeah. It's like that Mission Impossible. Only it's not impossible. It's not only possible, it's entirely reasonable. Mission reasonable. That wouldn't get many views, would it? Rocky. Hype in the chat for Rocky. Thanks so much, Rocky. When I was in the chat, I noticed that there was even though the majority of us are 35 to 45 plus, according to the YouTube demographics, we're actually all closer to 45. That's our collective age, even if some of us are much younger or older. I noticed in the chat that there was a distinct lack of rockets, diamonds, bananas, apes, and particular to this channel, syringes. Which, the more you get to know the style that I'm presenting here, the more you'll see the relevance of that. And so, if I could ask you to do 3 things. 1 would be subscribe to Rocky Outcrop. 2, subscribe to Andy Lee. You'll never go wrong doing those 2 things. And the 3rd one would be just feel more like completely liberal with your use of emojis. There is no restrictions here. So chat, how is everybody? And you should collab on the street more often. On stream, I think you mean, but I agree, we should do it. Look at all those numbers in chat. I don't even know what they mean. Oh, ages. Yeah, let me know your age in chat, I should have said. Yeah, let me know your age in chat. 4623, look at that. Like YouTube says, there's some rockets. 18, good to see you. The sooner the start, the better you'll do. I think it was Warren Buffett said the greatest advantage he had in life was starting young. True story, my friends, true story. So everybody here putting in their age, and we see that, yeah, everybody's about the same age. Rocky is 36. That is Rocky talking under my name, just so everybody's aware. Yes, Rocky is 36, and I'm his big brother, so despite being smaller than him, I'm close to 6'2" in feet high. Rocky is my little brother and has been taller than me since we were what? Since I was about 10? What would be the price level institutions will get margin called at on GME? This is such a good question, and it's so very difficult to tell. It's also a dynamic number because of the effects of funding on that becomes significant on large positions, and it increases as the float decreases. So the closer they get to being margin called, the more and more their margin, that's their collateral, will be consumed with paying funding. And so this is another reason why the longer this narrative continues, the longer we hold, the harder and harder it gets for them to flip out of their position. And the more inevitable it comes that there will be some sort of blow off top, regardless if that's the MOAS or not. But as we already know, there will be a series of cascading liquidations. So I hope that's of some help, that question. Biden will lead us to profit land. He may well do. I see his infrastructure bill has caused significant increases in the inflation rate all the way across here in the pond in the UK, where the pound is strengthening, the FTSE is dropping, and well, the rotation play could be in effect again. The rotation play is when you take your money out of high growth stocks and put them into value stocks. And it seems as though there could be lots of opportunities for that at the moment, which again would be another catalyst for our favourite value investment of the moment, GME. What charts S/W URL are you using? Charts. S. Sorry, Callum. I can't. Maybe being thick, but I can't figure out what S/W means. The charting software is TradingView. I've got a tutorial on how you can get comfortable using it on the channel here. Pardon me with this relaxed style at the minute. I know it's a slight change of pace from Rocky's excellent delivery, but I'm just enjoying this cup of tea and getting up to pace. But then we're going to look at GME again, and yeah, anyone got any questions, let me know in the chat just now, because I won't get around to reading it as much when I'm looking at the charts. 365 viewers, that's a whole year. Damn straight it is. Yeah, it's a whole year. Thanks so much for everybody who's tuned in. I mean, I could wax lyrical about how much it means to me, but it doesn't feel authentic to do that. It's obvious it means something to me, and my actions will show that. Stay tuned for the, I would say the celebration video on getting 5,000, but we will be maybe at another higher target by the time that I've got that ready. So let's see what happens. And I keep anticipating we're getting somewhere. So like investing in something like, anyway, whatever. GME moving on up. This is AMC still. Why am I on the AMC? I thought I changed that. Oh, I love that. Look at that, guys. I mean, this is a 1 minute time frame, so it isn't going to tell us much. But look at that, guys. So we're not going to see the proper levels of support and resistance here on that time frame, but we did get past there. Ooh, that looks good. When does this candle close? This 15-minute candle closes in 59 seconds. And this is starting to look like a pincer recovery. Ooh. Oh, chaps, is this the beginning of a bull trap? Did we just see it on the 1 minute chart? Did somebody just tell me in chat, did we just see today's turnaround? Well, you see, when you go up a frames, our enthusiasm for the turnaround is dampened slightly by the fact that, though despite the fact we are above this breakdown point at 145.12 spot 12, 145 spot 12, despite that we're still obviously in this period of this 30-minute candle, and we can already see there's just a tiny little bit of a wick on there. So what we need to do, none of this is financial advice. What we need to see is this candle closing above 145 spot, we'll call that 19. So that's something to look forward to over the next 16 minutes. One thing we can say is this 15-minute candle just closed. It was positive. This is a bullishly engulfing. This is bullishly engulfing. This is a pincer recovery. If we maintain this level, then we're looking at a recovery for today's prices, and we'll expect us to see us go back to the average price for today. Well, that'd be nice. Look at there's 30 minutes. We were talking about how we needed to see that go up and not look like a wick. And folks at home, what do we see? We see that. We see that working out lovely jobbly, in fact. I'll get back to sleep. Looking good. Let's go 1 minute. Hey, BH, you're the guy that said you're 18, aren't you? And now you looked at a 1 minute chart. Those two things are completely unrelated. Pardon me if you can hear me swallowing, I apologise. Maxine Waters is a corrupt, evil woman, yet she was trying to call out the hedgies. Yeah, that's interesting. I'm not sure if she's corrupt or she's evil, but I can definitely tell you that from what I've seen of her, she's not impressive at all. Let's go. And that's the nicest thing I'll ever say about her. Almond coconut is better into your coffee. This is almond. This is almond milk. Almond milk. Ruby, who you might have seen in chat, of course you didn't, she'll have gone now, dropped in earlier. She got me into drinking the old almond milks and completely changed my diet. So majorly leaning towards the vegan side of things, but not there yet by a long shot. And it's a kind of binary. So Sitting Bull, hey buddy, Kadama boy, and nice chat there, ladies with almond. Tendies with almond. Yeah, like brushed with almond and then glazed almond tendies. Mom, where's my glazed almond tendies? Shout out to Eric Crown. I knew that Techness wasn't big enough for you, not Uncle Bruce's channel. Uncle Bruce, he's also a really nice guy. I think I said that in my first live stream, that I'd caught something he was talking about and thought he was really nice. And somebody had said, oh, if you give him a small donation, he'll shout you out on the channel. And I was like, what the fuck? Like, if he likes me, he'll shout me out and he'll find out about me because somebody will tell him. And if people like me and him, they'll say it and then he'll maybe do it. Pay someone for a shout out. Like, maybe that's normal. Maybe I'm too old. Maybe that's the way it should be. But it seems like he would just do it, right? Because he cares about the stock. So he'll shout out people who also do good stuff on the stock. I'm sure he would. He seems like a fairly decent guy. I think that's the way it would go. And just the same way I'm saying right now, like, check out Bruce's channel, Uncle Bruce. Great guy, really nice. Enjoyable to watch his stuff too. And he's very knowledgeable. And he's got a really good approach. You know, he's really calm but happy, and that's nice. He's a wise person. Why am I talking about that? Fuck knows, man. Lee Holt, Alcast, very nice. ABI, well done. Interesting. What kind of price? I'm sorry about my language. Whatever. Stop apologising for myself. Interesting. What kind of price movement should we expect to see daily, given it kicks off in percentages? Could be all over theoretically, but is there a common theme with squeezes? Oh, right. You're asking me. Is this maybe part of another conversation that's been happening? But is this when you see Jamie go by 500 and you start asking if it's squeezing? Been in since January, bought in at 50, lost tons of money, kept buying to 350, bought a little money, kept buying till I got my average down to 48.40. Whoa, nice one. That's some good management of your position there. Assuming that your risk management at the same time is good, that position management is fantastic. I'm not sure how you manage that. This would be like what Lee did, right? When he bought in at 500, when you see go to he bought at 350. This is really important. I'll get to that other question right out in a second. He bought in at 350. Shit happens, right? Like, you made a decision at the time. I'm not going to criticize that. Many people are in the same boat. He bought in at 350, lost tons of money, right? Like, there's lots of different ways of looking at that, regardless of what Lee's particular circumstances are. Say he lost money because he didn't want to hold the position as it dropped down shitloads. Like, fair play to you. That's a hard decision to make. Well done. Regardless, you might have just held the position. Also tough to do over such a big drop, right? Well done that you managed to, at the end of it, come out with everything smelling of roses. But he was able to do that, get his price as low as 48.40, because although he kept buying, he bought at the best times, right? He'll have bought when we had this subsequent, the retrace. What am I on, the 1 hour? So we'll go down to the daily. You know, in order to buy in at 350 and then ultimately change your entry to, it's still not, what's going on with this chart? Yeah, what is up with this? What is going on with this weird ass chart? Am I going crazy or something? Why is this chart like this? Anyway, point I'm trying to make, although I don't seem to be able to get my chart to look anything like what I wanted to draw this on it, was that, just hit refresh there. Yeah, just do it. That's more like it. We were on AMC there. We want to be on GME Trading View. Please, can we have GME? Thanks. Can we have a daily chart on it? Thanks. Sorry, guys. No problem. No problem. Oh, it's on log. Ta-da. Wow. I was starting to get freaked out there. I was trying to keep it under wraps, but deep down I was like, what's going on? Have I imagined the past 3 months? Anyway, here we are. Right, back to chat as it is. So you bought it at 350, right? Boom. You know, afterwards, demoralizing. I'm with you. Well done, fellow ape. Well done, right? A lot of empathy. Hopefully everybody, there'll be so many people in the same position as that, and hardly any of them would even talk about it. The only way you can get an entry of 480 at 48.80 after an entry of that price, the only way you can get your average down, is by not, although buying, not kept buying, is to keep buying but buy at the best places. And the best place to buy was down here, you know, which we all identified. You know, there were plenty of us. I'm not going to sit here and say, ooh, I got it back in January. There was loads of us here, and it was obvious. If you do this kind of TA, that's where we're going. And Lee managed to make the most of a bad situation to now that he's laughing, right? And if you kept buying, then he'll have a very big position relative to what you had initially. And, well, happy days. More power to you, Lee. So that's well done, right? And it's position management. And the way you do that is by entering only when and using the right amount of budget at the right time when prices are looking like they're going to reverse. And you can predict that in advance to a degree. You can at least have a statistical reliability rating. I went vegetarian 4 years ago. Best thing I ever did. Good man, Darren. Good man. It's seriously going to work. I have 2 jobs. One is grocery store filling the bananas. Not even kidding. Good on you, Arika. I've seen your comments. I started you there when I was in the chat there 20 minutes ago. And you're a really nice person. And although I've got absolutely no idea about some of the things you talk about with regards to prophecy and fortune telling, and I'm not sure if I'm being patronizing there and using the wrong terms, but the things you were talking about, the spiritual things, you know, they're interesting. I was actually thinking that one of the good ideas would be to get a fortune teller on the channel, and we'll do GME predictions. I'll do the technical analysis with you guys beforehand, then we'll have the fortune teller and we'll do a live stream. I'll cross our palms with silver and she'll tell us where the prices are going, and then we've got something else to think about as it's happening. That'll be fun, right, chaps? Yes, that's a great idea. That's a great idea. Do it. We'd love to see that, says everybody. Look at this, by the way, guys. So we were talking about this as being important on the 30-minute candle, which is now 6 minutes left. Geez, I talk a lot of crap. Is it finishing above 145-ish? 145, 144 something. Obviously the level to get above really ultimately would be 148.53. Doing that, I say obviously, whatever, excuse me. That's the level to get above. But, you know, we have to get above this one beforehand, etc. and so on. You know, it's a staircase, and that's the way things work. But there's a positive, and there's a series of bullishly engulfing candles which negate this horrible red one here. Where's the volume at, by the way, as it happens? There we go. So that's interesting, isn't it? Right, these volume bars, they're all relative to what's been going on before. And they reflect the candle directly above, or bar, or whatever you're calling it. They're the same time period. So here, relative buying volume. You might have heard Rocky talk about it before. There's a number of different types of volume. 2 of the ways that they're classically defined is by starting volume and stopping volume. Stopping is when a trend stops. There's lots of volumes come in on the other side of the trade. And starting volume is when the trend changes and lots of volume comes on the other side of the trend, right? See that here? That's what my cursors are on as I chat. So I mean, I kind of delivered that again in a patronising way, didn't I? What's fucking wrong with me? Anyway, the point I'm making is that's very positive volume candle. I know relatively it's smaller than all of these. I also looking at this, some people would tell you we're in a head and shoulders there, but a head and shoulders are a reversal pattern, right? And it comes after an uptrend. So, well, a head and shoulders is a reversal pattern, so it would have to come after an uptrend for it to be a head and shoulders, right? And that to play out properly, because it would mean price would reverse and they'd be going back down. If it was at the bottom of a downtrend, then it can't be a head and shoulders unless it's an inverted head and shoulders. That would be the opposite of what this we're looking at now is. So you wouldn't call this head and shoulders. So like people would be looking at this and say, oh look, here's a shoulder, here's a head, here's a right shoulder. They might even look at the volume and say, well, actually it doesn't match. And they'd probably have the RSI up. And now they wouldn't be, because they're going to do the next bit wrong. They'd say, well, the measured move is, and they'd draw that head down neck. And they'd put that at the breakout point and say, that's the trend, there it is there. And they'd say, we're going to $100. But what do you mean? You're talking. Fuck off. Sorry, VWAP. And then put that back on. Oh, I see what's happening, right? I've got loads of these things added. I see what you've done here, Rocky. I see. And right, so what you would want to see here is that's lower than there, that's lower than there. We've covered this already. RSI is higher. Price similar. This is a low. I could say there's potential divergence. There's plenty of reason to try up. Well, period of flux. Nothing desperately positive happening other than the fact that that reversal that people were trying to go for at that moment failed. So far, we're above that previous inflection point, and we'll see how things go. Right, so that candle's closed at 15 minutes. So that half an hour's candle closed, and it closed above there. That's good. We'll see how things go now. We don't want to see this fail. It's coming up to the center line. That was a positive cross. We've tested this enough now for that to be considered reasonable. I'm sure that line there's relevant from a higher time frame. Check that out. Oh, anyway, 4 hour, we can see that put in that little bit of thing. How you see there's an inverted head and shoulders on the RSI, which led to that boost. That's the 4 hours, so that's in the past now, but there's also that head and shoulders, which isn't real, but you can see it's also on the RSI. Their buying power is weakening there. This coming up, right? So what we would really like to see, ladies and gentlemen, apes, what we'd really like to see in the next 4 hour close, which is coming up in an hour, so we'll check it on the hourly chart too, is prices to finish close above 148.90. That would be nice. We'd have a nice end to the day. If that doesn't happen, we could expect to test this area again around 138. So there's your no need to panic, no need to get too excited TA based on lower time frames confirmed across higher time frames. What one might call multi-time frame analysis. And then let's go back down then and see how this move plays out. There's lots of different things you could say about this. I mean, what I should really be looking at chat because people will be talking about stuff. Or at least have some better direction with this TA delivery. Right, so we want to get up at 152. What was the number I just said before? I don't know, it's gone out of my head, but this is the point you need to get beyond. 152.89. What am I on the 15 minutes? Okay, what's this looking like on the RSI? Not so great. That'll bounce down there. Right, so okay, this is unlikely to go much further in these 15 minutes and in a number of preceding ones without testing down again. Just looking at this, it's obvious. Across here, right, so let's put in that horizontal line because like we've got the ability to, so let's drop it there. We're slightly above it at the minute. This is a 15 minute time frame, so let's check where that line looks like on other time frames, but so far that's where we want to get above, and then afterwards we want to get above here. That's 167. Do I see us doing that today? No, I don't. Though I see it doing it this week. Yeah, I see it doing it this week. I see us going back up around here. I also see that there's a potential for testing lower around 120. Should we put a time frame on some of these moves? Should we check it out? Should we see what might be possible using some of the slightly more esoteric technical analysis tools that many people shy away from because of their, sometimes because of the way they look, sometimes on the charts, like for example the fib circles. Nobody can be taken seriously if they go to their boss and they've got a printout of a chart and it's got fib circles on it. But you know, they're handy. You get the same benefit though from, I feel, from, let's just get rid of all of this. That button, yes. From the fib time zones. So let's check that out. Let's look at it on the daily and let's see what they tell us that might be interesting. A lot of people don't use these also. If you haven't seen it before, that's perfectly understandable. Here we go. Trend-based fib time zone. So with all fib tools, you follow the trend. You mark them in from left to right. And it doesn't really get much more complicated than that. So here's the low and the next high. Boom. And then we draw in the next low. It's here, isn't it? Yes, it is. And then this gives us some inflection points, right? Now, this is over a reasonably small move. I've just done this. So it doesn't include like future times, but we can check the reliability of it. Okay, so like obviously it moved on this one, but this is what we took as a point of reference, so we can't use that to check reliability. It has to be subsequent ones. Does it have to move on every time zone? No, it doesn't. These are the same as the fib levels on a Fibonacci retracement. They're the same coefficient difference between each, right? Look, not between each, the same as there was with that, the 618, the 382, the 1618, etc. And so you don't have to do anything on these, but some of them mean more than others. And if you do something on those, then you can expect the move to be more violent than it may otherwise have been. Okay, so, and you could see at the bottom there, but like nobody uses it on this small of a move. You would do it more likely and with a lot more utility on, can you just go away? Yeah, you would do it on, so let's check out this. And, or actually, let's just do it, we could also do it like this, because, you know, if we were, like, say, for example, a crack addict, we would much rather look at it, like, also as well as it being relevant to what's going to happen next, perhaps. And bear in mind, it's not as reliable when you're using it on the smaller time frames, obviously. You can draw them in. What is up with this tool at the minute? Honestly, you're making me look bad, tool. Right, so did I just give up the ghost on this thing? Why is it so, it's not doing what it's supposed to do? If I got the settings changed on it or something. Ah, here we go, I've fucking put it in wrong. Oh my god. Right. That's the next low. Is that the high? I have to do it in with the trend, so it's all looking wrong, done wrong now. Where do I get delete at? So people actually still tuned in for this nonsense. You should be laughing at me. Right, just done it wrong again. Your stuff was trading. Your stuff. So I already had the first one wrong anyway. So here we got some moves on this one. As you can see, I'm going to get off this tool in a minute because it's actually doing my head in, and its utility is rather limited at the best of times. And I keep drawing it wrong, which is embarrassing. So anyway, as you can see, fib time zones will give you some inflection points on the market, which you could add to if you're looking at explosive moves and think, well, when are they going to happen? You could draw one of these out, and the way you would do it properly would be highs to lows, lows to highs. Let's see, you're in this one, it's a downtrend. There's your first one, there's your second one, there's your third one. Right, okay, so finally got one on that was actually drawn properly. There's a downtrend, left to right. You can see the high to low to high. And then the next inflection point. Really caught this one, did very well. Very close to this one. I would count that because just missed it, went the other direction. Very strong gain, got a peak. So it identified various peaks throughout this, and if you were to draw it properly and draw it on current price action, which is very tight range, so it's very low utility and it's even very difficult to draw it, then you might get the same thing for the future. But it's actually better if you look at it on longer time frames. And did it anyway, did it differently, and who cares? You aren't here for the fib time zone show, especially when it's done badly, for goodness sakes. Right, so what else is we looking at here? What else were we going to look at here? We were going to look at see, that's not even an uptrend, so you can't even draw it there. I'm sure it catches them and it'll look okay, and it might get the 618's already had. Might get the 1618 as well, which would be not for ages yet, obviously. But yeah. The fib time zones can be useful if you've got lots of other things on the go. They're also better when you've got confluence and you've done a big proper study of confluence using other fibs. So I feel like I've let everybody down with that crap. There was one of the ones that looked like it was okay, but really it's wasting our time. So right, back to the analysis and make up for that awfulness. Price action 146.50, still above our targets for this particular candle. Four hour doing well, still need to see it go up a little bit more. Price action lower, RSI higher. Hidden bullishness. Let's see how that plays out. Right, so I should answer direct questions, right? Because I've done all this and I feel like I'll be repeating myself. You could Google that. Oh, that's cool. Rocky's talking as me. That makes sense. 20 million floor GME. Okay. Walking into work. We'll try to leak your earbud. Hi, Akira. Have a good fun at work. Hope it goes well. 20 million per share. Be realistic. There has to be buyers and sellers to get that price. Now, friendly hedge will not hold for that long. They do not need to. Unfriendly, dead sooner. Right, I see what you're saying there. Question is how many shares need to be covered though, right? I agree with what Sitting Bull says there, that we have to have a degree of realism. But then, what is realism? What is the distinction between being realistic and being like, what's the point in being, let's like not dampen our enthusiasm, but let's make it so that it's based on things that we can rely on rather than speculating too much. It's easy to have a floor though, like it's up to us what we sell at, right? And if the nature of this thing is that if apes hold and we own the company, then there are too many shares short, right? How do they close all of the shares, right? They have to buy all of our shares. It's not like it's enough to just Vanguard change their mind and say, well, the squeeze was good, guys. Sure, that'll make a huge dent in things. And it might cover enough people to prevent the squeeze at certain times, depending on how the liquidations have gone. But the nature of who it is that owns this thing isn't just institutions. So there are other things playing into it. And it's also true to say that while these hedge funds, these holders, these large holders, the friendly hedge funds, as some people call them, don't necessarily want to hold as long as us. They also want the maximum price, and not just because the value of that position, but also because of the damage it'll do to their competitors. So there's like so many different dynamics at play that the real determinant of what price that we all sell at is like a collective decision that's made individually. Super weird, right? But we don't want to be liable, right? This isn't financial advice, and I'd say without prejudice that we are individuals making our own decision. You know, let me know in the chat, like, do you like the stonk? That's essentially why I think we're all here. Much more so than you're tuning in to the Scottish guy and his brother from Edinburgh, who used to do a job that is essentially quite boring. Talk about a very low pixel 3 or 4 color screen all day. We're here because we like the stonk. So yes, it's our decision what we sell at, and that seems naive, right? And trust me, it sounds stupid coming out my own mouth. But then there is the market dynamics to consider. So what happens is, what we don't put any negative pressure on the price. Let's say we decide to not put any negative pressure on the price. That would be not to put in limit orders as yet, to have plans. Say, for example, to set up an alert. So one of the things you could do if you're on TradingView, right, which is nice. I think it's a good idea to do this, right, is I would really like to sell my shares in GME really high, you know, like I think these things are worth these are priceless, and I believe in the mother of all short squeezes, right? So you're going up your charts like this here. You see, I'm going up these charts. You might not see much movement, but that's because in outer space there isn't much matter, right? There's like space between every atom, much less dense than it is down here on Earth. So you're scrolling up like this here. You're like, 31,000, that's interesting. I can imagine if the prices get to, say, for example, right? For example, I can imagine if the prices get to... I'm not going to put my order in yet. And who knows, right? My broker will probably fucking cancel it anyway, because which one of them isn't a bit of a dickhead? Never trust a broker. It doesn't matter who they are, who's recommended them to you. Never trust a broker. And you keep going up and you'll be like, you know, this is the sort of area, right? 60,000s, like 60,000s. When it gets there, yeah, I want to know. I'm not going to necessarily have an order in. I'm not necessarily going to take profit here. But like, you get all the way up, right? Now that was hard. That was a lot of effort it took me to get all the way up there from wherever we are. But that's because I had to go the whole way. Whereas, you see the price, it'll just jump huge amounts in huge chunks. So 69,420, right? Let's get close to that as we can. And you go Alt H, and then it puts in a line, and then you right click on that line, you go add alert to horizontal line, and then you put an alert once. No way, man. I want it every time it gets over there. Actually, I'll have it once a minute, and I'll have this alert, and I'll have it open-ended. But you have to upgrade more to have that. Well, then you're like, well, I'm not going to pay to upgrade. I'm just going to set this time here to wherever, some date long in the future. Let's say, where are we going to let me put it in at? Let's say July the 10th, right? Until July the 10th. And when it gets to July the 10th, and if it hasn't happened, I'll put in another one. But I'm going to put it on there. I'm going to make it that. I'm going to say, notify me with a pop-up and an email. That'd be nice. Yeah, and I've got the TradingView app, have I? I've not, but I'm going to get it, or else I do have it, and I'm going to have a notification on that too. And then when the price gets there, bing, create. There you go, folks. There's my alert. Is that yours? So back down to price action again. So that's one of the things we'll be doing. Other things we'll be doing is, when people say to us, "Oh, you're crazy for buying GME. When are you going to sell?" We'll tell them to go fuck themselves. And then when other people are saying like, "Oh, I hold GME. What do you like the stock?" We'll say, "Yo brother, yo sister, I like the stock." Brilliant, isn't it? And then the price will reach those targets. That's what will happen. And then when we get there, our alerts will go off, and at that point we'll say, "Well, great. We're in the squeeze. We're in squeeze territory. what was that Tradespotting was saying? Oh yeah, him and Rocky are joint streaming the live streaming the squeeze, and there'll be other ones doing it too. All your favorite YouTubers will be, and you'll be able to open it up, 4 different windows on your screen, and you'll be able to like get all the chat boxes up, join all the different channels, celebrate with all your friends. They'll probably be in all of the other ones too, and then we'll all discuss how us individually we feel about the price at certain levels. We'll be looking at the charts, we'll be looking at the indicators, we'll be looking at the strength of trend. We'll have things like the Bollinger Bands on, and we'll say, look at that, that Bollinger Band there, that closed outside of the top Bollinger Band, that candle. Richard was talking about John Bollinger earlier, wasn't he? Rocky. Yeah, so you'll be like, well, look, it did the same thing it did back then. We closed outside this Bollinger Band. We had an open and close outside it, and then the price shot up, and it's doing it again, guys. And it hasn't seen any sign of retracing back inside within that range. So it looks like the move's still on. I don't think I'll put my orders in here. I think I'll wait. Not only that, I'd love it to see the prices go on back above here, and then we'll get this price again, right? 69,420. If that's your sale target, it's not mine, though it was what got me popular on YouTube by first saying it. It isn't mine, not by any standard. When we get there, if it goes beyond it, why not wait, right? Why not wait? Because you'll get that 69,420 again if it doesn't go up much further, because you'll get that price again, right? You'll get it twice. So that's a massive luxury to have. And you don't need to stress out or at the time when prices hit that price, because if they keep going, they might not come back to 69,420 in a while. And then by the time they do, you might have got out a million, you might have got out 100,000, you might have got out 350 grand, you might got out 10 million. You might be one of the people who were able to hold down that long, and the circumstances might align so that the prices go crazy high. Maybe not everybody will get filled there. Some people will, some people might not. So maybe everybody would. Who knows? I can't predict it. But I can tell you that if you plan to sell on the way down, plan to measure price action against previous peaks, see the strength of trend at the time, and determine whether or not now looks like a good time to exit, then you will have 2 chances at that same target. And who doesn't want 2 chances, right? I've heard it said that everybody deserves a second chance. So think about that. You are one of those people. So that is why people say sell on the way down, because it's slightly easier. Also, it means that you're able to get much more money if it keeps going up. And who knows, right? People say to me, is it realistic? And that's a slightly harder question to respond to than, is it too good to be true? Because when someone frames it like that, at least you can say, you deserve all of the good in the world, and there is nothing that says you don't. There is no concept really of good or bad necessarily, but if you do the right things at the right times for the right people, you do get rewarded. And everybody is I don't even know what I'm fucking talking about. So if you know what I'm talking about, just tell me in chat. So anyway, is 20 million unrealistic? Is it too good to be true? It's up to us what we charge, right? It's up to us. And if we never sell, imagine if all of us never sold and Vanguard did, yet we still didn't, what do you think's going to happen? Right? They're going to buy it again. And what happens when they buy it again and we've still not sold, and we're the ones that bought some of their shares, or they were just covered from somebody else? Everyone will be long. This is the other thing that happens. Like, if there isn't a violent squeeze and all of the hedge funds cover, right, that means they go long. You know what that means, right? That means everybody owns GME, right? Everybody owns GME all of a sudden. And then it's in everybody's interest that the price goes up. So while it's currently us versus these Vandans, it may be a time in future when us as apes, not happy with 69,420 or whatever it might get to, have decided that we're just going to hold because we've actually do all these other things that also make money, and we don't need to relinquish our position. It might be that, well, hey, look at that. It just so happens that 7 of the 10 of the world's top financial institutions hold significant proportions of GME, and the vast majority of retail investors have some GME. Then it's in everybody's interest that it does well. And we already know from the most scant analysis that the new CEO and his plan for the company is strategically sound, makes real good sense based on the market at the minute and emerging trends. And the size of this target market is fucking huge. And we're all in it, and we're buying the shares. So yeah, is 20 million unrealistic? You know, I'm not going to answer that question because it defines me one way or the other. I don't even think it was a question. But I have made a video on how it's possible we can get to 10 million. So, you know, you can put all of that information together and make up your own mind, right? Because then whenever you're proved right or wrong, there'll be something to go on, which is, you know, your own decisions. Think, make decisions. Wow, I just read that out. I haven't said that. Thank you very much. You're very welcome if that's to me. Talk about coincidence. No such thing, it's fate. America believes in free markets, right? They do. And you know why they do? Because the concept of capitalism was first advocated based on the concept of free markets. And who came up with this idea? A chap called Adam Smith, who was born just round the corner from here and did his work and theories and all of his stuff at Edinburgh University, just on this street I live on, which is between the other flat, this flat, and that place where I was presenting the other day, is in the stage of enlightenment, when humanity decided to stop trusting institutions and instead trust science. And one of the ways that he applied science to business was developing the theory of economics. And in that theory of economics, he defined the important that you needed to incentivize production. The best way of doing it was through ownership of control. And voila, capitalism. Now, that's best expressed by America, despite Scotland having been at the centre of this concept. It has been developed and put to good use by America, who have now spread it across the world after the General Agreement on Treaties and Tariffs in 1969, which was a UN treaty, which came from, of course, from the SEC and the American Treasury. They put forth these ideas and linked them to the recovery of the global economy after the Second World War. It was 1949, the General Agreement of Tariffs and Treaties. Sorry, it was out about 20 years. Anyway, point being, the world economy is facilitated by America. And they do that with trade. And they enforce it with their military, with sanctions, and by incentivizing good actors. This is how the world economy works. And America is a linchpin. They are the main actor. They are the main beneficiary, and they deserve it to be so because they're the ones doing all the work, often against strong opposition. And so, in that role, they benefit greatly being the leader of the world. And one of their obligations is to support this philosophy and this body politic that's represented in these organs of private ownership and capitalism, which isn't inherently good nor bad, and controls the world. And one of their obligations is to support it. And what will that mean? Well, long story short, and without turning this into a 24-week video, it means they're going to have to support the financial system. They're going to have to support those hedge funds or banks that facilitate that. Oh, that's the battery going, so my camera will be dying soon. And so the question earlier about why would the government print money for hedge funds. It's not just hedge funds. It's just those are people who facilitate the whole global financial system. This liquidity is important. It's not just that they're as important as the oil ships that carry the oil, as the liquidity that guarantees it'll be safe in transport. At least the risk of that asset's reduced, and so the facility to do business and trade between people. It's the same thing with the stock market, and it has to be supported by America. And it's not a bad decision. It's really good value. So, will they pay to print it for save hedge funds? Of course they will. And is there any evidence that it's happened before? Yes, there is. And you look at 2008, 2006, 2008, wherever you want to wherever you want to say the problem started, and same thing back in the late 90s. Is they benefited greatly by printing money to pay for these companies, to do these corporations, to save the world economy. Anyway, what am I talking about? It's like a rant. Anyway, those people they paid money to, many of them, like we look at them and they say, oh, well, they were a large investment bank. They're not exactly a hedge fund, but they operated in exactly the same role as these hedge funds do now. Like Lehman Brothers were a huge liquidity provider. No, and not just in the sense of the US dollars that they were putting into things, but the fact that they would be buying and shorting these shares, right? Like doing that provides equity liquidity. And this concept of liquidity, people often think about it like, you've got the readies, right? Well, yeah, sure, you've got the readies to pay for things, but those readies aren't necessarily cash. They've got equity liquidity that they can flush through the markets. And that's what BlackRock, Vanguard, Fidelity even, that's what these sort of people do, right? And those roles, which were often filled by investment banks, are now also filled by hedge funds. But hedge funds have this other purpose, right? They isolate risk, and then that presents them, like somebody else was mentioning about power and how it's good or bad in the right hands, that presents them with other opportunities, and they've not done well. They have not done well with the custodianship of the financial system. Does that mean that we won't help them? No, U.S. government would. But is there some payback for U.S. government? Probably, right? And I speculate, and have done for a while now. You've seen my videos, and maybe other people hopefully talk about it more, rather than focus on the same old narrative all the time. Maybe they'll evolve into talking about how anyway. Yeah, orderly markets. Maybe they'll start talking about how this concept of the settlement process, it's not just like failures to deliver and how do we regulate the system of buying and shorting, how do we control people so that they don't create synthetic shares for these nefarious activities, how do we stop people undermining the system by using the rules against it. Like, we could spend decades and decades doing that, right? And I'm really fucking angry, and we can spend decades doing it, and we will, right? We will. But at the same time, the whole reason that these inefficiencies exist is because they are created by these hedge funds in order to exploit us over these problems, right? And they know there's 1,000,001 different things we'll have to do before we close off all the gaps and plug all the holes. But there's one thing that we can do that will absolutely change the face of the financial industry, is we speed up settlement times. So if we can get it down to T+1. If the American government could put that as a requirement for helping these people out, then they'll still be able to perform their same vital functions. We'll get a fairer deal. They'll have less opportunity, time, and therefore opportunity to screw us. And while they'll still try it, they'll need much faster computers. So it would be great if we could, if these meetings in Congress, instead of them fucking wasting our time and everybody's lives talking shit about last guy on Reddit, Deep Fuck Value, maybe he's organizing people to do something that might benefit themselves, and that's bad. Instead, maybe if they were like, well, look, like we're not going to actually punish the little guy because that's absurd. Let's look at the structural inefficiencies and say, well, hey, it's easy for us to help these people. They want our help. Even if they don't need it, we could just tell them what to do. And we're going to tell them that the settlement times need to be speeded up. And we're going to tell them that they need to implement digital ledger technology. And Ginsburg, who claims to be a blockchain expert, could get off his skinny ass. Now, I understand what it's like to have one of those. And he could do his actual job and make a real difference. But he's not going to, because he's got however long, he just needs to do better than the last guy. Tell him, put in it, like, it's the digital ledger. You need to speed stuff up. You've got no excuses anymore, right? We're going to start taxing. We're going to create certain licenses. Instead of chucking extra capital gains burden on the common little dude who's trying to make bank and perhaps working like Akira there, who's just gone off to do her second job. Instead of, I'm so fucking angry. Let's apply certain licenses for the ability to trade, and let's play certain licenses to these financial institutions which charge them a higher cost, and let's not make it extra burdensome for them. Let's incentivize them to be faster by taxing them based on how long they have these outstanding positions, by how long it takes them to go through the clearing process, for which they're getting healthily rewarded. Oh my god, I'm so fucking angry. Why am I angry? Same reason we're all fucking angry. Right, what was I even talking about? I'm sure I was supposed to be doing TA at this moment, and I'm not sure even that he said anything. Oh, Gensler, not Ginsburg. Yeah, sorry. Yeah, Gary. We'll just call him Gary. But thanks, Stefan. It's inevitable. Yep, thanks, Rick. But Stefan, you can't even spell your name right. That's funny. Lulz. Don't say F. Don't say stupid Fs, people. But maybe that's actually funny and that's nice, and everybody's friends. And I'm misreading something probably. Ginsler. Sounds like a beer, doesn't it? Yeah. I'm a bit of a stupid F myself. Boo that man. You should, man. I've been fuming since January. Should be angry. Yeah, January. Yeah. I'm sure you have. Yeah. It didn't take long for us to connect the dots when Vlad halted trading. It didn't take us long to push out there to everybody that Vlad owns lots of Dodge. In between times, it didn't take us particularly long to work out that Vlad does whatever the fuck Ken Griffin tells him to do. And based on all of that, it's not particularly difficult to work out that if such things as what's happened before happen again, then people like Vlad are going to do the same thing they did the last time. And I say people like Vlad, he's a broker like anybody else. You can buy his narrative about the democratization of stocks and investments if you want, right? Feel free. Or you can look at real innovation in the financial market doesn't come from some service which sells your order flow to the guys you're trying to fight in the first place. Perhaps it comes from the financial instruments that people are inventing and innovating in order to reach a greater customer base, therefore, democratizing the stocks and investments in the financial system, making this a way of accumulating wealth slightly more accessible. Those are the people you want to look to, right? The people launching ETFs and, anyway, whatever. We're getting close to talking about a project I'm working on, so I don't want to seem like I'm a shill, so I'm going to stop there. But there's lots of things that we could be doing that we're not doing, and there's lots of people we could be rewarding that we're not rewarding, and the set up in the system should just be incentivizing the right people, right? It's not about punishing people for their failure to deliver systems. It's about speeding up the settlement process, and then that will have its own consequences for the way people are able to go short. Also, those fines are a fucking joke. Let's go. Yeah. It's okay to be angry. Don't let your anger consume you, though. Channel it. Exactly. That's what I try to do. Exactly. Good advice. Sit back and relax, as Ape Andy says. Sit back and relax. That's what the thumbnail was out. Don't get angry, get smarter. Also great advice. Eat some ramen. Damn fucking right. You've seen these videos on the YouTube with the prison pizzas and that, and they've got a ramen noodle base. And I was thinking, hey, I've met lots of people who can't eat pizza because of like whatever particular reason, you know, and they have to get different kinds of dough and it tastes shit. And those things looked fucking awesome. I was thinking, you know, why does the pizza have to be dough when it could be ramen noodle based? So there must be some more innovation there. I mean, those people deserve our support. So you think we're going to start uh, people are going to start selling around 2k paper hands. No, I don't think that people will go 2k paper hands. This is what I think will happen, right? We'll hit the all-time high, and a lot of people at 490 will take something off the table because they've got in at 350, and their life depends on having some money back. So they'll probably take something there, right? Me personally, no, I got in down here and I doubled up, right, more than whatever. Anyway, I got in again here, right? So and I wasn't taking it there the first time. And we get there again, I'm not taking it either. And there'll be plenty of people like me, and like more power to you if you are. But some people will be taking money there, right? Because they bought all this way down here, and they weren't as smart as maybe Lee earlier. He was talking about how he averaged in by buying here, and so maybe they have to, right? And I empathise and sympathise, and I don't criticise. So congratulations to those people for making decisions that are good for their families, right? But also, that isn't what applies to me and many other people who'll be waiting for it to hit here, because then the narrative changes, right? Because at the minute, we all get really excited when AMC borrowing rates go up, and there's indications of things that are maybe to come soon. It's just the start of the week already. And then, you know, and we look at GME and we see it's broken through these like this wedge, and so we worry. But actually, we're just within a normal range. The narrative about, oh god, you know, you're stupid to go long on GME or slash AMC. Loads of our peers trade, and they take short positions on this stock because they think that we're fucking stupid. So, fair enough, right? I'll have the debate, but and everyone's entitled to an opinion. Apparently, they're like arseholes in that way. But what I'm waiting for is for the price to get back up here, and not so that I can turn around to them and say, told you so, right? Because I'm old enough that I'd rather they were right, you know, and I'm not here to be right and them to be wrong and whatever fucking shit. And that's like some of the atmosphere I see, people arguing with each other in various forums about where the floor is or if there is a squeeze or not. You know, you'll probably still yourself, I'm not sure if you encounter them, I get them quite frequently. The people tell me how stupid I am for talking about the squeeze at all. So I'm waiting for the price to get back up there, because then the narrative will have changed. And you might, if you've been watching along with the videos I've been putting out before I was doing the live ones, you might have noticed that back when it's near around the start of GME, I was doing these like quite so the targets I was telling people seemed very unrealistic, and the comments in the videos were quite nasty, right? It was quite an acerbic attitude from certain people in there. So I put them all in a video with the monkeys, and like I ain't got time for that. If you haven't seen it, check it out. It's in one of the old GME videos near the end. It's well worth a watch. Anyway, it's quite funny, and many of those same people, fair play to them, sent me messages afterwards saying, man, I was wrong and you were right, I'm sorry. That was when this happened. You know, some of them still believe, but a lot of them changed their mind here. And they said, you know, you called that and you called that, and fuck, you know, I'm not here to have a stupid argument. You were right. And all of those people, fair play to you, sent me messages. And some of them haven't, but I'll get the rest of them when we get up here. Or else those people will skulk away and you'll never hear from them again. But at that point, the narrative changes again, and then we can talk about the real squeeze. You know, then we can talk about the targets and the levels that I've gone through. And those targets and levels are partly defined through the Elliott wave analysis that you've maybe seen Rocky do. He did it on the previous live video there, before the one about the hearing, if you're looking for it. Anyway, and I'm sure you'll cover it again tomorrow if you tune in and ask on my streams every day, starting from the just around Monday, Wednesday, Fridays at market open. So if you want to look at it, you see that these levels are defined by areas that we've managed to look at on the charts and that people will coalesce around. So this is how technical analysis works. To a certain degree, it defines areas and targets that we can then use to put our targets in where price yet hasn't yet got to, right? So like so when it gets to here, yeah, people will be taking money off the table. I also think when it gets to the 1414, there'll be other people taking money off the table at 684. And you know, people who and this is my God's honest advice, right? Cutting through all of the shit and speaking directly to you who doesn't want to be told that we're going to 100 million because your life is on the line here and there's somewhere you need to make profit that will be up there but isn't like a huge chunk of your account. Maybe you're only talking about selling a tiny percentage of your account and you desperately need the money as quickly as possible, but at the same time you want the highest possible target. Then I mean, I'll just tell you, right? You're going to probably want to take a tiny bit at 494, right? Breaks my heart to say it. You might take a tiny bit at 680, right? And then you might take or right, if you're able to, and that, and I will be doing much. I'll be holding much longer than this, regardless if this never happens. I couldn't give two fucks, right? But if you're this person who needs to say take 1% somewhere, but you don't want to, like, and I know what most people are like, you're like me, you don't want to harm the squeeze. If you have to, then you might take it at 785, right? And that's me saying something, knowing that there'll be plenty of people that tell me to go fuck myself. How can you dare mention a number lower than 69,420? We were only letting you away with that. The true floor is 10 million. And I understand, right? I'm just giving certain people that otherwise might be in trouble a bit of advice. And it's not financial advice. It's just, I'm saying, don't look around and say, oh, like, is this okay? Have I done something wrong? Like, it's your life and your decisions. And, like, you made the right decision to get in here. If that all happens. I'll be obviously aiming a lot higher. Anyway, but there you go, right? People will be putting in something there to take a tiny little bit. So whatever the question was, which I can't remember if there even was one. So you think people are going to start selling around 2k paper hands? That was it. I think there'll be people who sell a little bit in around here. Do I think 2k is a target? Well, I mean, look at this fib. Rocky's done this, hasn't he? Rocky's put this fib in for us. This is just the fib based on this one move here, right? That when the squeeze happened, right? Do you want to see some crazy ass shit? And like later on, if this happens, if you're watching now and this happens, come back and give me a shout, right? The squeeze might look like this. And that line just goes along. Whoops, take that last one off. And that last line, where does it go? Well, it did that because the computer wanted it to do that. Fuck you, computer. So like, this is what it'll look like. Let's just pretend that last one didn't happen. So this is what this mother of all short squeezes might look like, right? I mean, actually, let's be slightly more predictive of things like here. Right? Something like this. And sure, at this point, some people will take money when you reach the 414, 4.414, whatever. When I say people, a lot of them will be computers, because when they've entered in these moves, they gradiate out, and that's one of their ultimate targets. So those algo traders, some of them will be out there, totally normal. Of them, some of them will get back in again, should the price go down like this. It could turn here, back at the previous 618, because people will buy there again if they still believe in the squeeze, and how could they not after this has happened, and like, it's not just going to be one peak, fellas, ladies and gentlemen. Either it'll turn around at the 618, it'll turn around at alternatively at our previous high and go up again. Now, why would I say that with any degree of confidence? Well, it turned around at our previous breakout point, so why wouldn't it do it again? I'm talking about something that's cyclical here. So there's something to go on. And then it may turn around there. It may go down further to what the breakout point ultimately is from this move now. So it might even be a little bit more. And then there'll be another peak. And do I think there'll be a peak that goes to 2 grand, comes all the way back to not far from where we are now, and then goes up again? That's totally reasonable. It's totally reasonable. When it happens and it gets back down to there, is there going to be hundreds of thousands of people in and around these levels, should this happen, shouting at me for being an idiot and causing mass financial hysteria? Sure, there are. People are going to be telling me I'm a fucking idiot. People tell me it all the time, so shout out if that's you. Nice to see you again. We're also going to, I think, go through something that has multiple peaks, and they won't just be like, some people say like, oh, we'll go up and they'll be like this, and then you go up like that and it'll be like that. Well, no, it'll be more like this, like shock horror. Oh, we've just seen a huge liquidation. Somebody who nearly got liquidated, say here, any of these places, added to their short position. They got down here as the price started to go down. They added to it more. Shit, they got trapped. The price started going up again. The mother of all short squeezes isn't some 2000 paper-handed nonsense. You know, like what is that anyway? Having a fucking laugh. Like, GME is worth $2,000 in a few years' time anyway, in my perspective, from my opinion. So how are we going to see like people are going to add to their short positions and they're going to get screwed? And then, you know, look at the share price of other things, right? Look at Apple. Look what Apple are doing at the minute. Look at their share buyback history, right? Look at Berkshire Hathaway's share price, right? Look at the way Tesla handled their introduction to the to SPY. Look at the things that CEOs do at these crucial moments in time, and look at who those CEOs are backed by. Right now, they're really good examples. Right, Tesla. Obviously, he's Elon Tusk is a really good CEO. Me talking about it's wasting everybody's time, but who's backing him? And do they back him throughout a series of his ventures? And what's their position with regards to their competitors? And then see the same with Ryan Cohen and see like, well, who's backing these people? What's going to happen? You know, how are they going to handle these moments in time? What sort of things can they do? Stock operating tactics can they use at these moments? And are they already doing it? And as it's not a bit obvious, isn't it? So, I don't know what I'm talking about. I'm not doing very much. So, Rocky's keeping everyone happy in chat. I've got this up in here. I've got the Streamlabs up behind me. How many people are watching? We've got 411 viewers. Wow, still watching. Are those computers just on the main market? What computers are you talking about? Trading terminals. The trading terminals. Well, each bank has a trading terminal. What are you talking about? Oh, there's that monitor. Well, I'll just get that off because the camera's dead. Right, that's good. Oh shit, I was drawing all of that, and it was that behind my... I'm really sorry, folks, if I was doing those drawings behind that dead picture. Probably wasn't, but if I was, I'm sorry. I can't even remember what I was saying. Fuck, those are some good wiggle lines. Yeah, well, that's just the start of it, my friend. That was answering somebody who was asking a perfectly legitimate question about whether or not I think people will sell at 2,000. The short answer is there will be some people who will sell some of their stuff around that price, yes. Some of them will be humans, some of them will be apes, some of them will be computers. And then you can expect to retrace and you expect to go on. And if you want to see more about that, check out Rocky Outcrop's Elliott Wave analysis. So like that's something like that might quite easily happen if you build in all of the stock operating tactics that people do, all of the different ways that works. You know, if you are no, fuck it. Anyway, you should read Reminiscence of a Stock Operator by Jesse Livermore. It was written ages ago. And it's perfectly relevant for things that are happening now. So that's that. So what we're doing, we're going to read chat, and then I was going to figure out from that what it is I should be doing, and then perhaps I'll end the stream, not sure. Hello, Warden Elite, at Warden Elite. Is Warden Elite here? Is that here? He's the guy, Warden Elite the goat. Is he here? Why are people saying that? Warden Elite, sup? Yo! Oh, it is him! How's it going, man? I think I was talking about you at the start of the stream. Your TA is excellent. And a really really respect the things you do. Is this the same person? Am I talking to the same person? Maybe I'm talking shit. If it is the same person, just let me know. Yeah, your stuff's awesome, and like the way you help people, fantastic, and desperately glad to watch your stuff and see you do the things you do and all the good you do for people. Thank you very much. Just personally, thanks very much. If that's Warden Elite, thank you very much for everything you do for the whole community. You're an absolute hero. Yeah, it is you. Great. Yes. Thanks. Awesome, man. Thanks for tuning in here. That's really great. Yeah, he's Warden Elite. He's a real hero here, guys. You know. So if you don't know who he is, like he's helped tens of thousands of people improve their ability to make money in life. Not just from what he's done for the community of GME, but the skills he imparts are really well delivered. Like the way he communicates, the things he's teaching you, you won't waste a minute of your time watching his stuff. Subscribe to his channel and watch him long after whatever happens with GME. And check him out on Reddit. Obviously, he's one of the main dudes to trust there. So, yeah, that's Warden Elite. Definitely check out what he's saying. Anyway, so yeah, so I don't know if I've maybe strayed, now that I see like people with such high quality TA themselves here, I wonder if my squiggly lines are embarrassing, or if they're not. Anyway, they are what they are, is what it is. True facts. So here we are looking at the TA, and let's do something interesting for a while, will we? Yeah, definitely. If you don't know who Warden Elite is, check him out. He's brilliant, and the stuff he does is really good for everybody. So if you do know who he is, hype in the chat, give him a big welcome. It's great to have him fanboying hard. Fair enough, Rick. Fair enough. Directing people where they should go, and that's good chat though. I don't take anything back. Do it. Yeah, yo, Rick, it is Rick. He is a good man. Yeah, I can tell Rick is a man with some banter there. Good to have you in the chat there, Rick. And more of people like you, the better. So yeah, it's like, I mean, what I mean by that is getting a genuine community full of people with funny banter is great. It adds to the whole thing. Somebody just sent me a tip. El Diablo Burrito again. Come party with me in Washington State when Moas drops. Yes. Warden's up for a collab. Amazing. That would be freaking fantastic. Thanks, man. That's brilliant. I'll send you a message on the old Reddits. Well, maybe you won't see it there if you're busy. Well, I mean, Rocky who is my bro, is actually on my telephone because I was using his to do the stream here, but his camera died. So he's on my phone using my username, talking in the chat, which it's not that I've got like, I'm that able to talk and have these charts and use that. So it's Rocky. So if he's obviously, whoopsie-daisy, he's obviously been saying something to you earlier. So that's fantastic. Thanks for saying, like, if you can say that. We're Warden Elite fan right here. Yeah, give hype in the chat for Warden Elite. Also, like I was saying earlier, guys, why is there so few rockets? I know we're all 35, 45 plus, but can we not just slap some more some rockets in the chat there? Oh my god, I'm geeking out right now. Same here. Like I was saying earlier, how good would it be to get like so many of this like, I mean, I don't even really consider myself to be among some of the real, I mean, I don't even, it's like I'm not even close to considering myself to be among the levels of help that some of these other people have played, like not just Warden, like loads of people there. I've mentioned some of them in my other videos. They're all really good guys. Anyway, whatever. I'm not going to be too sycophantic over the top amount of it. He's just good at what he does, and I appreciate people that do the same thing as me. Haha, my days a collab, all the TAs going on GME. That, yeah, imagine everyone was doing on that one stream. Imagine there was like 4 or 5 people, 6, 7, 8, 9, 10 people, all doing like things like TA or looking at DD or chatting in, like having like a celebratory thing during the Moas scream. That would be brilliant. Look at all those rockets for Warden Elite. Fuck yeah. GME is moving right now. This a squeeze? Well, I've been streaming for fucking ages now, so maybe this is... No, that's not the determinant factor. No, it won't... well, let's see, shall we? Is this a squeeze? No, this isn't a squeeze. Yeah, this is lower, but it's higher. It's not terrible yet. This is the beginning of a pincer recovery, potentially. Yeah. Does it look good with some stop-in volume? Yeah, it does. And if we slap on our RSI, look, we've got 2 of them now. Boom, 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 there's some divergence. No wonder. Oh, look at that. We're closing candles outside the top of the Bollinger Bands. But Jamie, it's only 15 minutes. Yeah, I know it's only the 15 minutes. I know it's only the 15 minutes, but everything has to start somewhere, right? Keith Clark, Tradespotting. Your TA is really good. You just need days like this. Go to Catapult. I can't read, I'm blind. Things are moving too fast, so I can't read signs. It's really good. You just need to Catapult your man. Your stock is going up. Thanks very much. Warren, Jamie, and Rocky, and yeah, amazing. Also slap in all the other good people that do amazing TA there. Imagine how good that would be. Warren Elite, got a bot, replied to your comment on my vid about my Discord. You can message me in Discord about the collab there. Catch you later. Thanks very much, Warren Elite. Have a great day, and all power to you, my friend. Wow, that's great, you know, to be making connections with other people who run this stuff. And I say that's the wrong word when I say that. Help people so much. Yeah. Brilliant. Thanks very much. And also, thanks Rocky for chatting there. And yeah, glad. I saw my comment on his video. Excellent. Yeah, I did leave a comment on that video, which I watched this morning. I think that was this morning. And yeah, we'll do. Cheers. Yeah, we'll get in touch with you through Discord. Thanks very much. Anyway, I'll go back to the charts here because not everybody wants to hear about me talking about other people all the time. Warden said hi, I'm up. Yeah, thanks very much. Rick, cheers. Stefan, Kenny G interviews. One thing about him, he's ride or die. He is. Yeah, ride or die people are brilliant. Jamie, respond to Warden comments. I should do. I'm sorry. Rocky was trying. It's difficult. Have you seen his tweet? Jimmy, have you seen GME tweet? No, I haven't. What's the GME tweet? Somebody tell me what it is in chat. What is Warden Elite's channel? Good question. Is search Warden Elite on YouTube. Stocks only go up. Like, let's see. That's my live streaming thing. If I go duplicate YouTube, I don't know if this is coming up on this. Is this coming up? What happens on stream? Like it does. Warden Elite. There he is. Look, Warden Elite. Subscribed. Hit that button so you're subscribed. And then look at these videos and click things like where's the like button? Oh shit! Oh my god, I had a dislike on Warren Elite's video. That now to me to make up for that. Oh my god. There we go. Phew. And if I ever do that again, somebody... Oh, there's 3. Jesus Christ. Emotion. That's the problem. Yeah. So go check out Warren Elite's channel. And what did I think was good about this video? Well, in particular... Skip. In particular... Oh. Oh, look. Well, as we were talking here anyway... Actually, is that even... What indicators is he using there? Excuse me while I move this. Oh, I'm not on camera anyway. I can't see because it's too small on my screen. Anyway, yeah, check out Warren Elite's channel, especially this video. The mother of all wedges, DD explained. The mother of all wedges is slightly bigger than this wedge. Where is it? I've lost in too many screens. I'm lost in too many screens. Ah, no, this is playing in the background. If I had bought 48, I'm not sure what order I'm talking about there, but check it out. And shit, chat's going mental in the background there. Is that just me catching up? It is. Oh my god, that's this thing coming up and showing up. All my things are going all wrong. I've done everything wrong because I got so discombobulated by the fact that I'd seen that I'd obviously hit dislike instead of like on the video there. It made me think, holy shit. Hey, God, this sort of thing I deserve to get fucking pillared for now. Sorry about that. Anyway, so anyway, I hope obviously I was positive enough about things beforehand so that people could tell that I genuinely like the guy, or otherwise that would look fucking awful. Right, anyway, as it is what it is. So what's everybody saying? Everyone should join Warden Elite's Discord if you haven't already. Definitely do that. I haven't seen his Discord yet myself, but I think that's a very good idea. Obviously, you should follow him on Reddit and check out his YouTube channel, of which there's a link in there. Okay, I think I've redeemed from that accidental. It's like, fuck. Right. I would like to make enough to buy Ian Anderson's land on Skye. This guy in Scotland, well, you're going to need 69,420 plus then, so I can charge them a song for rent. Philip Martinez, Adam, Island of Skye. If you want to be renting that out, you'd be making loads of money. The holidays, people are going up there, but with the pandemic and that, I think things have died down quite a bit. Adam Aaron should come out and inform the shareholders with market manipulation as CEO is his job. Well, yeah, this is the thing. Like, CEOs are actually quite restricted in what they can or can't say about certain aspects of the stock. As you'll have seen with Elon Musk and his attitude to things on Twitter, it can get people in trouble from time to time. So you have to be careful. And some of the things that ways around this are just like trying to put out. And obviously, it's within his interest that it goes up, and he's got absolutely no guarantee that anything is going to happen. Just because he's the CEO. I mean, obviously, he knows a whole lot more than we do, but he isn't going to be guaranteed in any of his predictions either. So, he has to be responsible with his audience, like all of us do, really, right? So, while he can do some things, and he could quite easily mention the ratios of short shares to outstanding shares, and has done himself a very good job of orientating the company to take advantage of any squeeze. Jamie, you don't have an ad blocker. Lol. No, I don't have an ad blocker on my Chrome. Obviously, Brave does a lot of it for you, but I use Chrome, and like you're saying that because the adverts came up on other people's videos there. Was it? Yeah. Did an advert come up on Warren's video? I don't know. Anyway, yeah, I think it may have, because well, they deserve it, right? Think of all the effort he puts in there, especially with the delivery of his streams. They're well organized, and he obviously thinks about what he's doing. And then you add on all the work he does on Reddit and stuff like that. I don't mind having the advert things on myself. So do I care about ad blockers? Not particularly, no. Like, I don't think it's all that big a deal. It definitely makes a difference when you're browsing websites and that, and I can see it makes a big difference, your phone when you're trying to do things and videos start loading automatically and shit that you're not interested in. But when I'm on YouTube and I'm using Chrome or that, I don't mind too much. I think, like, also, I have ads on myself, and I'm not a fucking hypocrite, so, like, that's the way it is. Thoughts on how long the squeeze will last? Some say it's probably a week long, with big gains and dips. Does all of this sound legitimate, or do you see it going another way, more or less? Jamie, thoughts on how long the squeeze will last? Right. I've now... it's El Diablo Barudo, so you've been watching along, so you might have heard me say some of these things before. You see, my friend, I keep looking at a camera that doesn't exist. Must have seen me answer this question. How long will it last? And it's impossible to know, right? So you've got the market dynamics. You've got all of the potential implications from all of the other hedge funds, and as somebody else pointed out earlier, they're not necessarily on all of them on our side indefinitely. You've got all the other apes who've, as we just covered on those other price targets there, where people will be taking profit little bits, and like I was giving people advice to, if their lives depend on it, at little bits and bobs here and there. So. What were we talking about there? How long do I think it'll last? I think it'll last as long as it takes for all of the short shares to find their pair. You know how it works. They have to find it, right? Now, some of these shares will be owned by Ape Andy in Taiwan. Some of these shares will be owned by people like the guy in the chat yesterday that was from, or the other day, from Hamburg. And some of them, and these shares will be sitting there. These same people have told people, like, I don't want to loan my shares out. I want them. I maybe even going to hold on to them for my entire life. And so getting these shares to Citadel will mean they need to be put onto the market and bought. And encouraging that to happen is... how did I start talking about this? Rocky's about to put a message. Cheers, Serena. A lot of the big names on YouTube for crypto know who I am, e.g. Matty Greenspan is one of my subs. Matty Greenspan is really good at what he does. Why are we talking about that? GME tweet. Oh, here's the tweet that somebody said I should look at. Are you sure you want to leave YouTube? I'm not 100% sure, but I want to see what this tweet says. Right now, this is no, not signing as Rocket. GameStop been away for the past few months. What did I miss? I can't like that until I'm signed in. That's a nice tweet. Ha! What did I miss? Been away for a few months. What did I miss? Oh, there's my AdSense. Look, does this? None of this is showing up. Oh, maybe this isn't showing up because I've got the other thing on. Yes, I got the stream on. Thank God, because I think my bank details just flashed up there. Whew. Anyway, yeah. So that tweet, I should look at it on. I shall look at it on. We can all see it ourselves, right? If you go to that link that Rocky shared, right, you can all see like. Paste the URL. Yeah. Oh right. Well, I have to copy it. It's like not giving me a copy from chat, so I'll have to open it on Brave and then copy it to. So go to site, copy that, copy, close, 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 close. Right, here we are back. Rocky's had this window open earlier. We can do it in here. So this is the tweet. Jamie Curran, that's me. Oh, for goodness sakes! Oh no! Oh no! Oh no! How could everything go so wrong? Yeah. So pardon me and my terrible clickings and my terrible being away for the past few months. What did I miss? That's what we're looking at in chat now, right? We can all see it there. Good. Yes. Excellent. Look at that. That looks nice, doesn't it? A few months, huh? Been away a few months. What did I miss? Well, we'll go on the monthly chart. And we'll get rid of the drawings. And we stretch things out. Carlsberg Partnership. We don't make short squeezes, but if we did, look at the comments, mate. Lol. Yes, Jimmy. Twitter works with this group. Bullish. I love it. Oh my god. I suppose I have to actually click on it, right? And then we can get in here and then we can see the comments. Reply to join this conversation. What's wrong with me today? I'm clicking all of the wrong buttons and all of the wrong orders. Brave the cold and pre-order Subnautica below. You could do that too, couldn't you? Do I actually have, where do I get the fucking comments? Here we go, because these I'm here. Here they are. Look, PS5 release. What? Bullish AF. I like the stock. Yeah, do we like the stock? Carlsberg. What's that you drinking and resting your feet on? Also, back at you, GameStop. I see you throw it up in your reflection. Used to be my background. Yeah, I think I've had a background that was similar to like this one once. Finally, the tweet. Yeah, so GameStop's back tweeting about this stuff. GameStop starts selling tickets to the moon. Yeah, even if they're just novelty tickets, they should definitely do that. Let's go meet you there soon as save me a spot. Nice. What sort of comments are, oh, these are what I'm looking at. Absolutely nothing. Yeah, vibe check passed. Nice. Well, I'll like these tweets. I want to like these tweets, but I can't because I'm not signed in. And I haven't got my password saved on this stupid computer. Oh my god. Carlsberg Export is better than regular, says me, but Rocky's writing it, and he's right. GME making a move. GME's moving. Can you link your Discord? Rocky, you can. Link your Discord. Boom, 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 boom. GME's moving, so we should probably check it out. Is it moving in response to the tweet? Well, fuck yeah, why wouldn't it? I mean, tweets move mountains nowadays. Right, so, yeah, we'll look at that. Well, we've closed our candle right up against the Bollinger Band in the end. Not out with it yet. So what we need to see is this to, what are we on here? 15 minutes. We've got 5 minutes left on this particular candle. We want to see it close above the Bollinger Band and the next one open outside of it, and then we can really look at some liftoff. And you know, if that does happen, you could be looking at, well, we'll see it go straight back to 161 if we close up there and open again. question is, can we break 166 from here? Is there enough enthusiasm from that tweet that we could say the bullish divergence we identified earlier from back over here, the tweet from GameStop, this tweezer bottom, which it would turn into if we got up to 166, the fact that Ape Andy has been shouting out the channel, and all of these guys have come across here, did that Warden Elite showed up in chat and said yo, which is like up again with like the Rocky Outcrop Andy, Ape Andy type of hero over on this channel. And then we looked at the tweet. I got Twitter all completely messed up, couldn't see what was going on, and the presses went mental. Are any of those things connected? I don't know. I'm not able to string sentences together. Yep, that's the things are kicking off, guys. I mean, I don't like to be the one on stream saying, "Hey, things are going really well." Yeah, right now things are happening right now. Get too excited, but they are. They're happening right now. Things are happening right now, guys. This is a move at the minute. This question is, where does it get beyond? But does it get beyond 153.12? Does it get beyond 166, 167, 168? But this is a positive move. The power of that thrust, look at this. What's this going to do? Boom, boom. We have to look across these levels and check our divergence. We have to watch it as it's happening. Ape Andy is great too. Yes, Ape Andy is great too. Ape Andy brought me here. Ape Andy's a legend. I love the way Ape Andy delivers his information. So yeah, I mean, I've covered it a lot now. I've talked about it in different ways, but you should check out, the people you should check out are Rocky Outcrop for his crypto stuff, his AMC stuff, his TAs, fantastic, and you should definitely check him out and look at his channel and all of that chat. Warden Elite, who you've just seen in the chat, or if you've come here recently, you might not have noticed he dropped in. If you don't know who he is, type in Warden Elite and search it on YouTube and see his stuff and subscribe to his stuff. And you're only going to learn from him. I was talking about him at the start of the channel, and I can't remember who else I was supposed to be giving credit to. Ape Andy, Rocky Outcrop, Warren Elite, and Houston Wade, and who else? Who else are the other good YouTubers? Feel free to put the names of the other good YouTubers in the chat, and then if there's ones that I really agree with, tell you about. Did your beautiful face back on screen, brother? I have to get my Rocky's charging my phone, or using my phone, charging it, and keeping everybody safe from bots in the chat rooms, and being friendly to everybody and providing good answers to questions. Much more better, agile and quicker to respond than I am, in fact. And then also facilitating that little chat, Warren Elite, that was fucking ace. And so my phone is being used by him, and my battery's being charged as he does it. And his phone, which I was using the camera, is now out of battery because the stream has lasted. Let me just check. The stream has been going on since 1968. I'm Rocky. Yes, I'm active, but heads needs fresh blood to activate it properly. What can I say? I want it to be more active, but I don't push it. I'm happy to have a good comparative friendly community. Yes, Rocky's Outcrops Discord. It's not bad at all. It's got all of the people in there are really interested in getting better at trading and doing TA, and I don't mean that from a shill perspective. He's not selling you anything. It's not. There isn't anything for sale like that. It's just people all collectively, both all interested in getting better at trading. Sort of good community you see around YouTubers who put out that sort of information. Sheet boys, today is a good day. Just woke up to you guys discussing collab with Warden, and GameStop socials just wrapped their diamond bollocks on the table. Good morning from Auckland. Fuck it. This trend of giving back and lifting each other up will catch on. You reckon? I hope so, yeah. Hope so, and I don't really mean it in terms of coming back to me, just the people that do good stuff for the community. And I know it sounds sycophantic the way I was talking about Warren Elite and Ape Andy and Rocky Outcrop, but the truth is, like, it's all for everybody else's benefit, not mine. Uncle Bruce, but he's not into the squeeze scenario. He's the value investor. He's one of my faves. Yeah, he's not into the squeeze. I haven't actually watched enough of Uncle Bruce to know that. So that's interesting that he's not into the squeeze stuff. That's perfectly understandable. And I mean, I don't know what everybody's overall opinion is of these things. Plenty of technical analysts will look at it and just tell you, no, like this is the price action for the moment. That these are the potential scenarios and so on. So like it's understandable that they don't want to spend time talking about on camera, the chances of the squeeze and what might happen because, they've got these other things like the chances of the squeeze happening or not have to be measured against their own careers and YouTube channel success. So while they've got like some people, for example, who's got like a really huge audience, people like Meet Kevin, he's got like a absolutely fucking massive audience, and is it in his interest to talk about the squeeze? I don't know, right? Because some people don't believe in it, and his focus isn't on this kind of thing, And I'm speaking for people and that, and it doesn't mean anything. None of these people, they all will have their own thoughts and whatever. Anyway, people with a huge audience is my point. They don't necessarily want to alienate anybody, and if the squeeze doesn't happen, they don't want their credibility to depend on these sort of factors. And I'm not saying that it would, it's just that people are judged in that, and so maybe they're being wise by not necessarily doing it, but then that's not, it also doesn't necessarily mean they don't believe in it. It just means that they've got their own perspective on things. Trey is good. Trey, I think I know who Trey is. Trey's Trades. And there's a couple of things I appreciate about Trey. He's got a lot of enthusiasm and energy. I like that. He also seems really good with his audience. I like that too. And what else about Trey? Yeah, I think he's positive. People have said like, "Oh, I don't like this guy" or "I don't like that guy," and I understand where they're coming from. But I do kind of like the Trey guy. I do kind of like that guy. Who else? People like Andrew Mo Money. He's got a big audience. Covers GME. I think I kind of like appreciate what he does for the community. Same with everyone who's making anything about GME, right? Like their videos, comment on their stuff, say nice things, support each other, bring everybody up, and just do everything you can to make everybody feel good about their own decisions they're making. Are you going to stream on Squeeze? Yes, I am. I can't remember. I'm trying to answer questions, but I can't remember what I'm being asked. People don't like Bruce because he doesn't like AMC fundamentals and debt. Oh, right. Yeah, this is the thing, too. Like, so people with a big audience, they get a bit of a backlash from like the collective group of people, or at least it might feel like that from their position because, they get like 20 comments or whatever in a row, that might feel like a backlash. Maybe it's thousands, I don't know. But yeah, Kevin puts out the most content, full stop. He's the hardest working YouTuber I've ever seen, full stop. Yeah, he does put out a lot of content, I assume. I don't actually know. I wish I could tell you more about these things and that. But I don't know, and I can't recommend people desperately off the top to everybody. But Meet Kevin is really good. Yeah, I know a lot that I know that his stuff helps a lot of people too, and he's really inspires people. So I wanted to include him in that little video about why we trade. He's good. Also, he comes from a perspective of like this is one of the things I think is really good about people like Meet Kevin, right? Is that he is able to show others how to take control of their lives in a really positive way, and he also presents opportunities to people to make money that don't rely on exploiting anybody else. Often they help other people, and that's pretty good, stuff like that. People that do that sort of thing, really good. And he is hardworking. Yeah, I can tell that he's hardworking in real life. Anyway, I mean, he's got a past not vastly dissimilar to myself and Rocky's approach to life. So he's yeah, I know he's hardworking in the background on top of his YouTube stuff. What else have people seen here? Stop Swinger. There are enough YouTubers to find the personality you like the most. Yeah, there's loads of YouTubers. If it is all about personality, cult of personality, and there is, yeah, plenty. I've got quite a flip of personality. It's quite obvious. You can get what mine is right off the bat. Bruce thinks GME stock is a great long hold and equates it to Amazon stock early. Yeah, this is like I don't think that's all that dissimilar to how Roaring Kitty looks at GameStop, right? I mean, most people who bought GameStop at $4, obviously the short squeeze narrative has been around for quite a while, as it happens, but it wasn't that kind of buy. It was a value purchase at that price. And I don't know if you've been able to get, because I haven't been covering AMC the same way Rocky has, if you've been able to get as good an opportunity for an entry, regardless of how high each of them are going to go in the squeeze. I don't know if you've been able to get as a relatively good an entry. I know that AMC went down to, it's been going down, 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 down for 6 years or something. And they are like really, really low and all the rest of it. But that's like, and yeah, sure, that might seem to be like a great chance to get in low or whatever. But I meant like the relative price action to the period before it. GME had been consolidating for so very long that it was obvious there was people on your side, and so the value narrative was slightly more clear, and the risk side of it slightly reduced. And so, yeah, I actually know, I've forgotten what I started talking about. Rocky Outcrop has published 1,300 plus videos since January 2020. That's pretty crazy. That's what? Shitloads. That's shitloads. Talk about hardest working YouTuber. 1,300 videos since January 2020, and it's now May 2021. So 16 months, 1,300 videos. That's nearly 100 videos every month. From the day he started YouTube till today, he's put out nearly 100 videos every single month. So that's more than 3 every day. And all of those videos to help other people. And he's got a smaller subscriber base than I have. And you saw the quality of the TA he can do. Oh my goodness, guys. Oh my goodness. And what about that for a personality too? When Rocky gets growing. When Rocky gets going and starts tearing into things, and his TA gets on a roll, he's brilliant to watch. Grateful Ape, Andy recommended you. Thanks very much. Matt was good, but now has all crypto and AMC. I'm not sure who Matt is. Another example of YouTuber who suddenly cut the GME content lately. I wonder why that is. Yeah, I don't know why. I mean, like, I have a lot of respect for the fact. That's what I was wanting to say about Warren Elite's video this morning, or the one that I saw. Not sure when he published it. Is that he was putting out videos, and this is what I was trying to say the other day. As price actions doing things that people might not want to see, is when you must likely to rely on these people's or you're most likely to want to refer to other people's sentiment on the stock, right? So like prices dropped out of the huge overall pattern that in the wedge that Warden Elite was talking about, or they dropped out of the more recent price action that had formed what I had thought was a symmetrical triangle. At that point, prices dropped out of that level. Lots of people will have been worried, and they'll be like, "Oh, what's the sentiment? Is it like, And if they'd logged on here and seen that I'd completely flipped, and changed my mind, and sold all GME and gone short, then they would have been like worried or whatever, And I'm hardly going to say that, but when people just suddenly cut their content and all the rest of it, it does make you wonder, like, whoa, I thought we were on this narrative together, is there not some video here explaining what's going on or whatever? Anyway, that's not the point I'm making. I wasn't criticizing somebody, and that wasn't the genesis for this thought. It was that you have a lot of respect for the people that come on and they're like, here, look, the price action might not be doing exactly what we'd love to see it doing, but like, let's have a look at it anyway, and it's not about the price action doesn't determine the success of their channel. So like, well, I can understand some people will be like, well, I don't want to talk about AMC or GME because I've got other crowd here. I also think if you've talked about it for a while, then you can tie a knot in the story. At least you're a part in it anyway. Thanks for all your knowledge. Love the accent. Thanks very much, Kim. How can GME become a 5k stock when AMZ is 3.2? Amazon. How can it? How can it? Well, as far as I'm aware, GME have already started acquiring locations for a fulfillment business in the East Coast, and I can't imagine it'll take them too long to roll that out with the recent $550 odd million they just raised, and also haven't paid off all their debt. So how can it become 5? Well, like there's like you're saying yourself, that's a good question. Like you compare it to Amazon. So let's look at Amazon's fundamentals. I mean, well, let's not because I can't be bothered. But like, you go and look at their value ratios. Probably have links in the description of some videos all about how you can actually. Yeah, when I was talking about um, the video you'll see that I published in GME around the end of February. If you click on that and look at the description, you'll see all the different places that you can learn about the value ratios for different stocks, and you compare them against each other. And just click those links; it'll take you right down to the granular information. And you could compare Amazon and GME and look at their value ratios and look at their relative financial health and the environment around them and their competitors and their strengths and opportunities and weaknesses and so on in the face of all this information. And you can see that GME have got a fantastic opportunity. And when you're saying like, how can GME reach can reach 5 when Amazon's 3.2? What you mean is, how can GME be bigger than Amazon like that? Or else you're asking, what would drive the price to being right up there? And like, I think Rocky covered recently in yesterday's stream that he did, like the biggest driver of price is price. That is because it's not value ratios that determine the cost of any one particular share. And if we were to value all companies based on their dividends exclusively, then their rankings in terms of market cap would be different than how they are in reality. And that's because the price drives price, i.e., people want the price to be, or believe the price is going somewhere, they've seen it go somewhere in the past, and they speculate. So speculation, and with speculation, people will say, look, GME are trying to fulfill the same purpose as Amazon, and so price speculation will immediately say, well, what are are they going to be worth the same amount? And if they've got the potential to grow, then you'd think, yeah, let's see if they will. And then not just that, you have to look at the capitalization of these companies, right? Look at the shares outstanding, for example, on Amazon, and then compare them to the amount in GME. And then you work out the market cap of the company. And then you can compare different things, right? And GME doesn't need to have the same market cap as Amazon to have a higher share price per share than Amazon. So these are these concepts. They're not just like the question, like, how can it be worth 3.5 when Amazon only worth 3.2? Well, I mean, there's companies out there that have got the same market cap as Amazon, but have got a higher individual share price. So anyway, that is generally speaking a loose answer to that. And I assume you meant it and possibly with good intentions, So there's an answer with good intentions. That's kind of what I was getting at there. Kevin is fairly new to stocks. I've seen that he's previously mostly into real estate and how to improve your approach to that sort of thing, which is sensible in that. And he's giving out good advice, and also the way things are going, more and more people have to rely on their own initiative and their own entrepreneurial spirit, and the people who encourage that are real heroes in the world. Oh, hope I don't sad too bad. That does KDO. I don't know what's missed there. Scroll down. Boom, boom, boom. This chat, everybody's chat. KDO Baggins. Yo, your sound, Jamie. You're one of the reasons why I'm more bullish towards GME. You talk no nonsense, straightforward, TA, in-depth, top channel. Thanks very much. Great. Thanks very much. Yes, so that is the case. Yes, there are people out there, as I've talked about before, who do like kind of low quality stuff and don't necessarily contribute to the overall picture of things here on GME. And then there are other, and they've got a large audience. And then there are other people who don't quite have as large an audience. Like, for example, Apandy. Obviously, the technical analysis of Warden Elite deserves anyone who's subscribed to some of these other channels yet hasn't yet subscribed to people like himself are really missing out. And the more that these particular type of guys get promoted, not saying myself, I'm saying him in particular, and then the higher the overall quality, even though it's the same content, because suppose more people, it's reaching more people. So whatever I'm talking about was something to do with yes. All right, it was from a compliment from Kado. Thanks very much. Yeah, thanks very much. Ha ja 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 ja. The double glazing. Do we still think the 120 is a possibility? Well, it was until GameStop came out and frickin' tweeted that, wasn't it? I mean, what did we get here? Down to 136, right? So I had an order in, I can't remember, it was around 137, I can't remember. I'll check that later, but I'll have got that one, and I'll have got the one when this drop here. So 2 more shares. I didn't get the vast majority of that order I put on down at the 120 levels. But hey, whatever, right? That doesn't matter. Do I still think we're going to 120? Well, not if we break above, what is this, 153.5. If we break above 153.5 and start opening, closing 4-hour candles up there, which has come in, it's happened 30 minutes ago. Was this the right time? UTC +1. Is that G? That is Jamie. That is correct. So, do we still think it's possible? Yeah, we do. This is just on the 4-hour. This is just the normal continuation of a downtrend. Sure, we closed outside the top Bollinger Band on the lower time frame, and it looked like something was happening, and it was. You know, you got a move at that point so far, but all we've really done is come back up. You know, even this 4-hour candle might not close above the 148. And if that should happen, then there might be further downward pressure. Yeah, we might get that 120. It might happen. But look, we've already put in what we could consider a turnaround, because that's the bullish engulfing. I mean, it'd have to finish up here. The next 4-hour close. That one was at 14:30, 18:30. Yeah. So, we're quite far into this actually. This 4-hour candle might end up being bullishly engulfing. If we get up here to the 160 plus level and test that 200 again, then we could be looking at a tweezered bottom. But do I think 120 is possible? Yeah, there's nothing to say that it's unreasonable to hope for that price entry. If you're like desperate to get in and you're going to curse me if you don't, then, you know, just buy whatever you feel like, right? Like, this is a conversation we've had before about what you're happy to take profit at. Then, so what difference does it make entering here or 50 blabs down or 40 blabs down or 30, which is even less? Like, what does that matter if you're looking at a huge blow off top? Well, I mean, it does to a degree, because we're not talking $30, we're actually talking percentages, you know. So if you get a 30% better entry, then that's a significant payoff when we're looking up the top and you're thinking about 30% more. So still, people do want to make the best trading decisions. They're not just going to throw caution to the wind, and that is no way to trade. So if you're looking at good places to get in, the way to trade this now, based on my technical analysis and my approach to risk management, is either to still wait for the 120, alternatively wait until we break above 200. And when I say break above, I mean open and close above. And even then, you've still got a chance of getting stopped out at a fake out around 230 in terms of recovery. So, you know, some people would advise you to enter at 230 on a retest, having gone up above, but then we've only got this little pick here on this part of price action. So, you know, the less risk you're prepared to take in terms of the trend, the more risk you're having to take in terms of where your entry is higher up from here, and like the less you'll get off the move. And like, this is the nature of trading, right? He who dares wins. Even if you do mitigate risk, it's still true. So those are the places to be entering. Is at 120, or it's on a retest of the 230 area, or at 200 if you see the breakout and you've got the experience and the indicators to trade it. Or, you know, there was that entry there, 139. So that's that chat. And like, those are good targets and they're good points to make, and it's good areas to end off on. And I do have this. What would I leave this on? I'd go down to 5 minutes, because why not? I'd slap on auto. That there. That's hefty volume around those places, relatively. You know, it doesn't have to go to the 120 if it starts going down from here. That doesn't mean it's going back to 120. There'll be inflection points, like obviously in around 145. I mean, you like, that's the danger of having things like the Bollinger Bands on for too long rather than just keeping them on to make a point, is that people can start thinking you can use them to take entries and exits when You can, but like that's for when it's outside of them. Generally speaking, when it's inside of them, it doesn't necessarily define helpful risk management areas. But point being, you could easily drop down to 145 again and still be in this bullish inflection point. Anywhere below that, which as you can see here, we tested, broke out from, retested, up again. Anywhere again that would do that would break the structure of this move, this recovery. And it would also be where lots of people would be buying at, so 145. So I don't necessarily think 120 is going to be there, and I can see a reason for people buying in at 145 if they're the sort of people who will have a stop loss then down at like 143. Maybe you get this entry in the next few minutes and prices go on to again, and again my TA looks amazing. But really it's relatively simple stuff, so let's watch that happen, see if that's what's going on. There's also the 200, no it's not, it's the median line of the Bollinger Bands, isn't it? So that's like a 21 period. Let me just double check. 20. Yeah, so there's a 20 period moving average on the 5-minute chart. It means absolutely nothing to the existence of any human being that's ever lived or died, but there it is. I mean, if it bounces off that, fair enough. I can't imagine it would. I think this would be the test here at 145. I think that would be a good entry for a short-term move. If you're a sort of person that was trading things like, you're an intraday day trader, you would take that, you'd take it on leverage, and you'd cash out at 155 and you'd be laughing, but you might not get that price. So you need a stop loss, and then you've got an area here that's obvious that if it goes beyond, it's probably going back down to 140. Is that unrealistic to expect that price? No, not really. Is it a good entry? Possibly, but I still prefer 120. So that's everything I can say about this tiny area of the charts that I can be bothered with. Well, I suppose I could also talk about how the fact that we're in oversold, that we've crossed out of that oversold that you would expect to see, like, well, here we go, in it, out, tested it, into it again, out, fair enough, nearly back at the centre line already, despite the fact that the prices have only moved a tiny wee bit. That's quite bullish. That's also in a positive trend. Yep, so like what I said about the prices still stands true, but there's some look at the RSI. And then if we get up to 161 on this thrust, that's this level here, that's very important that we break this level. I don't know why that's such a massive thick line. Pardon me. What is going on with this thing? It's obviously my mistake, but I don't know what I'm doing with my fat fingers. Anyway, that's the, like, okay, one line, fine. I must have put down 3. I don't know why that happened. Right, so this is an level we would actually like to break beyond. One of the things you could see happening with this, pardon me, because I won't be with you again until Tuesday doing price action, and people are going to want to know, oh, Jamie, I want to know what's going to happen by Tuesday. On the downside, we've covered that, the areas that would be good to get enter, and how everything looks there. Oh, Warren's streaming, great. Well, that's just the perfect time for me to go off here, and you can all jump over there and say Tradespotting sent you. In the meantime, I'll give you what I think is going to happen over the next short while. Prices will probably recover from this move and continue this upward move. They'll be coming up and testing 152. If they break through there, fantastic. We're looking at 160. If it gets to 160, certain things will be on the card, right? I'm going to draw this as a straight line, but it might not necessarily be. Prices get to here. Should that happen, there'll be a test. It perhaps comes down to here. It might be further. If it's further, we can draw a fib retracement on. We can say from the bottom to the top of that move, does it retrace beyond the 50% level, that fib level there? This fib level comes in at 149. So if the prices make it up to 161 and then come back down again to 149 or thereabouts, and then bounce up again, what we'll have is a cup with handle, and you can expect that to work out very well at the bottom of a trend like that. Is it a continuation pattern? Cup with handle should come at the top of an up move, maybe. Well, you also get them here. Right, so if this positive price action that we've seen doesn't get undermined by this pullback at this very second in time, then I'd expect to see something like this happening. Then this would look very bullish. This cup with handle would look great, and price might go on upwards. Everybody, thank you very much for tuning in. Thanks for all the donations, all the likes and comments and shares. Thanks for everybody who joined us. Rocky, Ape Andy, Warden Elite popping in for a moment, everybody else who I didn't notice because I was too busy, all the people who said nice things in chat. Thanks very, very much. As a sign off on the video, I'd like everybody to share their favorite emoji. It could be rockets, it could be syringes, it could be cats, but I'd like to see it in chat. So let me know what your with stupid amounts of emojis if you've enjoyed the video, and if what I just predicted on price action comes true, then I'll see 5 times you and five people for every one of you on the Tuesday who want to know what it is that gives me these superpowers. But in the meantime, you'll probably get excellent advice from Warden Elite. So if you've got nothing to do, when I say nothing, if you've got time on your hands and you can fill your ears with more information, then head over to Warden Elite's channel. It's spelt as you would imagine. There's no special characters. Everything's there. Maybe somebody could share his link in chat. You did it, Rocky. Excellent. Thanks very much. So all you need to do, click that link and you'll get the same again as I've been offering, exactly the same quality. As far as I can tell, fully endorsed by me. Not that he needs it. Much better our audience and whatnot. Of very nice people who all want you all to big everybody up. So that's it. And on the final note, when you see people out there, fellow apes, just because they've got a different strategy from you, be nice to them. Everybody's got to take profit somewhere, and we're all hoping it goes as high as possible. And the best way of encouraging somebody to do something you want is to try to do so positively. So be nice to each other out there, guys, and trade safe. Lots of love, and thanks so much for everybody who's tuning in. And once again, check out Ape Andy's video today and Warden Elite's video, which you've just seen a wee link in the channel. Rocky's just put it up in chat. All the best. Yeah, thanks very much, guys. Lots of love. Love everybody. Have a great day. Have a great week. Tune in to Rocky tomorrow at 2 p.m. and you'll see more of the same there too. All right. Wow. Yeah, that was epic.